Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start your day ahead of the curve. Let's start with the headlines. US equities close in the red for a third day in a row as markets await key inflation data. Futures are positive though. Indian markets are range-bound and directionless. A shortened trading week and the end of the financial year are seemingly at play. Yet another big block deal. Standard Chartered is set to sell its stake in CDSL worth $150 million. Larsen & Toubro is set to raise 7,500 crore rupees, or rather it's gotten approval to raise 7,500 crore rupees through term loans, NCDs or other forms of debt, and this comes after its 10,000 crore buyback just 6 months ago. Some good news on our external macro front. India's current account deficit has fallen to 1.2% of the GDP in the third quarter. Finally, cocoa prices surged to a new high as the world faces supply shortages. And lastly, 6 missing after a ship causes a Baltimore bridge collapse. The entire crew of that ship are Indians. Some shocking news to start today. A major commuter bridge in Baltimore collapsed after being struck by a container ship, causing vehicles to plunge into the water and halting shipping at one of the most important ports on the US East Coast. Bloomberg has reported that it is expected to cause months of transportation disruptions in the mid-Atlantic region. Meanwhile, an update from NDTV this morning said that the Coast Guard has ended the search and rescue operation for the 6 people who were on the Francis Scott Key Bridge when it collapsed, and none have been found. Turning to international markets, US stocks ended lower for a third consecutive day, but the cuts were not too sharp. Asian markets, meanwhile, have started more or less mixed. It was a bit of a positive start at the beginning with the Nikkei 225 gaining ground. In fact, if anything, it has gained further. The Hang Seng, however, has started in the red, and so has the onshore Chinese market. Let's turn to the latest cues from the F&O space then, and Agam is standing by to give you some perspective on that. Agam, we're still seemingly searching for direction.
Yeah.
Nothing's changed.
No, absolutely nothing at all, Alex. And I reckon that considering this is the end of the financial year, there won't be too much choppiness. Or there could be choppiness, but there won't be too much overall change in direction when it comes to the benchmarks. Sure, there could be a little bit of rotation among and within stocks of the benchmarks, but we're not expecting too much as far as your overall movements are concerned. Now, as far as the March futures go on the Nifty, of course, the Nifty came off by around 0.4%, but holding on to the mark of 22,000. Rollovers have picked up substantially, and it is going to be about rollovers eventually at the end of the day. Of course, the Nifty futures for April are looking and have now started looking at a surge in increase in OI as far as that's concerned. Moving on to the Bank Nifty as well. While we do have we don't have unwinding in the Bank Nifty March futures. Surprisingly, it does seem like some traders have taken shorts going into today's day of trade, but we still, of course, naturally see a lot more traction in as far as the April futures is concerned. Speaking of the Bank Nifty, of course, it is the options, weekly options expiry, but also the final Bank Nifty options expiry as well as the futures expiry for the entire financial year, which is why a lot of these factors will be in focus. Let's talk about the options market then, and at least as far as the Nifty is concerned, we are keeping an eye on 21,700 on the lower end and 22,500 on the higher end. It's a roughly 800-point range within which we're expecting the Nifty to stay within, and of course, this is your overall distribution where we keep an eye on 22,000, where in and around, we're expecting the Nifty to trade. Let's move on and talk about how things are panning out as far as stocks go. So longs for Manappuram along with HDFC Life and Metropolis. It was a good day of trade for a lot of these insurance companies. And Info Edge and Godrej Consumers, on the other hand, looking at shorts coming through. In terms of stocks, we saw unwinding, and here the numbers will be a little larger because of the roller starting to take place. We have Lotus Lab, Muthoot Finance, along with IGL looking at about a short covering, with Coromandel and RBL looking at longs unwinding. Well, all eyes on the Bank Nifty today, Alex, because that's where we're going to have the weekly options expiry. And I reckon financials to a certain extent.
All right. Thanks so much, Agam, for getting us those details. Now, it's another day and another big block deal. This time, Standard Chartered is looking to sell its entire stake in CDSL through a block deal. And the term sheet has been seen by NDTV Profit, in fact, by my colleague Pragati Oberoi. Pragati, what are the details of this particular trade? It's going to be conducted later today, as I understand it.
Yes, you're right. So the deal is scheduled for later in the day, which is March 27th. And we know that JP Morgan India is the advisor on this block deal. Now, the story behind this is that Standard Chartered Bank corporate banking unit is looking to sell its entire 7.18% stake in CDSL India through a block deal. Now, as per the term sheet that has been seen by us, we know that the deal size is approximately $151 million at the floor price and comprises of about 7.5 million equity shares. Now, this is going to be a big offloading as well. The offer type is 100% secondary placement, and the floor price is 1672, which is 1,060.72 per equity share, which is at a discount of almost 6.5% as per the last closing price. Now, we must remember that a block deal as big as this in CDSL is happening after close to a year, because before this, the last block deal happened in June 2023 when BSE offloaded it's about 5% stake in June 2023. We'll bring you more updates as and when the deal happens.
Thanks so much, Pragati, for getting us those details. That, by the way, is exclusive information. Watch out for that trade at the start today. Shifting to an update from the economic front, you have India's current account deficit that has come in last evening, in fact, and it has narrowed to 1.2% of GDP in the third quarter of this current financial year. What aided that decline? Pallavi Nahata has this report.
India's current account deficit eased in the October-December 2023 quarter. It came in at $10.5 billion or 1.2% of the GDP. That's compared to $11.4 billion or 1.3% of the GDP in Q2 of the ongoing fiscal year. The current account deficit was also lower than in Q3 FY23 when it came in at $16.8 billion or 2% of the GDP. Now, essentially, the cause of the decline was a steady merchandise trade deficit and continuously strong services exports. The merchandise trade deficit came in at $71.6 billion for Q3, while services exports grew by 5.2% year-on-year on the back of rising exports of software, business and travel services. Net services receipts increased both sequentially as well as from an year ago, which also helped cushion the current account deficit.
All right. Now, before we slip into a very quick break, we have this slice of a conversation that we had with Naveen Chandramohan of ITIS Capital. Listen into what he had to say.
I'm going to make a fairly tall claim by saying that you are going to see over the next cycle maximum number of solar bankruptcies that you've ever seen. Because the cost at which and the IRR at which some of these projects are getting bid up and some of the smaller companies are setting up solar capacity doesn't make any sense on the ground, right? So end of the day, obviously there is going to be enough and more supply that comes in because demand for the first time after a period of 12 years is growing at a CAGR of 9%. End of the day, power in terms of supply side will and should grow at the cost of GDP. Now, basically over 2010 to 2020, when you kept setting up supply and GDP was at 3.5% over a good part of the decade, you had excess capacity. And hence, a lot of the companies went into significant debt on their balance sheet, and you saw a huge amount of value erosion over the last 12 years. For the first time, you are in a power deficit cycle. And that deficit basically meant, because you've not invested for a good part of 10 years in an aggressive way because demand didn't come, for you to set up a greenfield in thermal does take 4 years. Whereas if you go into solar, it takes 12, 14 months. So it's a lot easier to set up solar capacity than it is to set up a thermal capacity. So, one of the reasons that India is in a much, much better position is we didn't take this ESG tall-headed claim of saying that we will not burn coal, because coal is extremely essential. And today, many of the countries in Europe are realizing that. They did that, and now they've gotten killed on the other side. So if I am going to bet on power, which we are, I would much rather bet on a large portfolio which has a good mix of thermal on one side and an element of renewables on the other side. Because renewables, it's good, they will see growth, but at the same time, I am not really as bullish on renewables where the IRRs will be close to mid-teens on a sustainable basis, because these are all what you call plugging the gap. Wind energy is not going to be self-sustaining. Solar energy can be, but the kind of bidding that is happening on the ground is not very comforting. So I would still back a thermal-led portfolio into renewables rather than a renewable-led portfolio into thermals.
But effectively, then you're telling me about the power generation companies.
Yes.
It's a wider bucket out there. Below that too, power financiers, power ancillaries, so on and so forth. Anything in that bucket, or is it only generation?
I mean, I think we don't own power financiers. Today we find them a bit expensive. They still can do very well, right? But that's not the space that we are looking at from a lending perspective. Power generators is one space we are bullish on, and hence that will translate into a power transmission also. Because end of the day, in order for power to get into the grid, the transmission capacity has to go up in a significant way. So I think transmission and generation is going to benefit as a result of this. Financiers could, we don't own them, so I don't have a very strong view. Easy thing to say is valuations are expensive, but I don't think that's a prudent statement to make.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching All You Need to Know, and it's now time to shift focus to the stocks that you should watch out for in trade today. We've already spoken about a couple of them, CDSL among those that we've spoken about, but Mahima is joining in to give you more details on what she's got on her list. Mahima, what are you picking up?
Alex, so the first stock to watch out for in trade today will be Titan, where the TCL Watches Switzerland AG has ceased as its wholly owned subsidiary as the company went into liquidation. Now, the details of this particular company as of 31st March, the turnover was around 1.5 crore, the percentage to consolidation was around 0.003%, and overall net worth was around 14 crores. The percentage of consolidated net worth to Titan was around 0.11%. This won't really affect the company much. However, the the stock has been under pressure since a few days, hence the stock might react. Then we have IDFC, where the company has received an NCLT order for amalgamation, and the order seeks shareholders meeting approval on May 17th. The amalgamation of IDFC Financial Holding with IDFC and IDFC with First Bank. Now, the last stock that will be on my radar today is Prism Johnson, where the board is considering fundraising by the issue of non-convertible debentures. The board meeting will be held on 29th of March. The amount is not yet quantified, so it will be quantified on 29th of March. So these are the 3 key stocks to watch out, which will be on my radar today.
All right. Let's continue to look at the stocks that are in focus. And Anushi's got the rest of the list. He's got the likes of Sanofi India as well as Shyam Metallics and Angel One. What are you picking up, Anushi? Morning.
Hey, morning, Alex. So the 2 pharma stocks continue to remain in key focus over here after Sanofi and Cipla has announced a exclusive distribution partnership over here with Cipla in order to expand its central nervous system of range for the Sanofi brand. Now, this includes about a distribution partnership for an initial period of about 5 years. Now, over here, Cipla's role would be pertaining to the distribution of Sanofi's 6 brands, which includes Frisium as well. Now, again, over here, if we talk about Sanofi, that would be responsible for the owning, importing and the manufacturing aspects in its plants, which is both on the domestic as well as the international side. So those 2 stocks remain in focus. Now, moving on to Shyam Metallics, the company's joint venture has received a letter of intent from the government of Maharashtra for a composite license grant in the Maharashtra iron block. Over here, this LOI is valid for a period of 1 year within the issuance. And again, this is in line with the company's vision to expand and develop the mining sector in the Maharashtra region. So that remains on focus as well. And lastly on the list is Angel One, wherein the company has set a floor price of about 2,555 for a piece for its QIP of rupees 2,000 crore. Now, this floor price represents about a 6.3% of discount compared to yesterday's closing price. So these are the 4 stocks that should be in focus for today's trade.
Got it. All right. Thanks, Anushi, for getting us those details. And now let's get you a couple of interesting brokerage reports. One on Reliance Industries and the other on ABB India. Mika has got those details. Morning, Mika. What are you picking up?
Good morning, Alex. So yes, up first we have Goldman Sachs, which has maintained a buy rating on Reliance and has raised the target price to 3,400, which gives around an 18% upside to the previous close. Now they expect the cash return on the cash invested to expand to 12% in FY27, which is the highest since 2011. They also expect capex to fall sequentially along with the change in the mix of capex, and expect an EBITDA CAGR of 17% over FY24 to 27, which is mainly going to be driven by the energy business. Now, Reliance has invested over $125 million in the last 10 years, mostly in hydrocarbon and telecom, which are heavily capex intensive and also have a long gestation period. However, Goldman Sachs believes that the next 3 years, the investments will be less capex heavy, higher in returns with a short gestation period. And then we have UBS, which is retained a buy on ABB India at a price target of 7,550 rupees, which gives an upside potential of 26% to the previous close. Now, electrification and motion is set to drive the growth in the margins, and UBS also believes that ABB is the best play in the infrastructure scale up in the voltage electrification segment. They expect significant scope to ramp up in the voltage electrification portfolio, where currently ABB trails behind Schneider and SIEM, and they assume better growth in export orders and in the premium product mix. And lastly, expect improvement in margins, which will help support the premium valuations that the company currently has.
Got it. Thanks so much, Menika, for getting us the details. News from the primary markets. Bharti Hexacom IPO will open for subscription on the 3rd of April. It's an issue size of up to 4,275 crore rupees. And Saloni has got all of the details in this report.
Bharti Airtel's subsidiary Bharti Hexacom is set to open its IPO next week, which will start from April 3rd till April 5th. The price band has been set at rupees 542 to 570 per share, and the company plans to raise about more than rupees 4,000 crore. Now, this is a pure offer for sale by the TCIL, which is a government-owned entity, and after the stake sale, the proceeds will go to the selling shareholder and not the company. Talking about the shareholding pattern of the company, Bharti Airtel has about 70% stake, whereas TCIL's shareholding will reduce to about 10%. 10%, and the government currently holds a 30% stake in the company. Also talking about the company, it was founded in 1995 and it exclusively operates in markets such as Rajasthan and Middle East, and it also offers fixed line and broadband services in Rajasthan.
All right, now it must be noted that the government-owned business telecommunications consultants has initially planned to sell up to 10 crore equity shares, but it has brought down that issue plan to 7.5 crore shares. Here's Sanjeev Kumar of TCIL explaining why the size of the IPO was brought down. Listen in.
See, this company has been in loss for one of the year out of last 3 years. So the waiver from SEBI was required. If we go more than 15% sale of shares in one go, that's one reason. Second, the TCL found to maximize its returns, 15% size will be the best suited IPO size to maximize return in overall disinvestment process. Though there was a mandate from government to sell off up to 30%.
All right. Now, we haven't mentioned it yet, but it's important for you to pay attention to this as well. Larsen & Toubro, the board yesterday approved a fundraise through debt issuance of 7,500 crore rupees. And the reason why this is raising a few eyebrows is that just about 6 months back, the company completed a buyback of shares to the extent of 10,000 crore rupees. And as you know, buybacks are done because the company has cash on the books which it wants to distribute to shareholders. So what some people are asking is why the company is now suddenly looking for an approval and has gotten approval from the board to raise debt of up to 7,500 crore rupees. That is something that we will be getting you clarity on. We've of course reached out to the management to get a sense of what they have to say. Now, before we wrap, sustainability is seemingly the buzzword as India is moving towards growth in the ever-changing geopolitical space. Gautam Adani has announced that Adani Green is aiming to produce 45 gigawatts of renewable energy by 2030. He was speaking at the inauguration of the Energy Revolution Gallery at the Science Museum in the United Kingdom. Listen in.
We are the bridge between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come.
No, the statement is not from the recently released and much talked about Netflix sci-fi drama Three Body Problem, but Gautam Adani, the chairperson of the Adani Group, laying out the need for sustainability while inaugurating a new science museum gallery in the United Kingdom. The Indian billionaire spelt out the near-term plans of the world's leading solar power developer and India's largest renewable energy company, Adani Green.
We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England.
Adani also told the gathering that Khavda in Gujarat will soon see the world's largest renewable energy park come up. It will have a generation capacity of 30 gigawatts of energy and is spread over an area of 538 square kilometers, an area 5 times bigger than Paris. Bureau Report, NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Hello and welcome to India Market Open. We are gearing you up for trade this morning and it's expected to be a range-bound session, Neeraj. Not too much happening. Global cues also largely muted. Of course, you've had that big accident at the port of Baltimore, but apart from that, I think everything is looking largely stable and on the sidelines.
Yeah, something that you spoke about yesterday as well, and just turning out to be that way now. Let's see if our expiry brings about some fun and games. Yeah, but otherwise, yeah, you are absolutely right. But interesting days.
Yeah.
Truncated week, so on and so forth.
Yeah, so volumes generally are actually quite light across global equity markets. Asian markets was that what we'll start with. But just before I jump into that, a quick check on how implied Nifty is looking. It's expected to be a flat start to the day, so don't expect fireworks. A 50-point downtick is what's expected in trade. So today's implied Nifty looks very similar to what we saw in yesterday's implied Nifty as well. Range-bound trade is what we're expecting in the session. Like I said, Asian markets are trading flat to slightly higher. It was Wall Street that continued to see profit taking for the second straight day. This comes in after those markets made a record high last week. Markets, remember, have pulled back just a little bit. Volumes are also quite light, given that it is a holiday truncated week for Wall Street as well. Traders will monitor commentary coming in from the Federal Reserve Governor Christopher Waller on later today. So that's, of course, Wednesday evening for Wall Street as well. Markets will be reacting, or we will, of course, take a check of that only in tomorrow's day of trade. In stock-specific action, Boeing, we believe, is at a risk of a Moody's downgrade on cash flow concerns. Tesla had a pretty sharp rally, moved up 3%, still trading much, much lower year to date. But yesterday's trade saw the stock gain 3%, largely on back of a launch of a full self-driving technology in the US. So a free 1-month trial for existing customers in the US is what it's unveiled. Apart from that, not market moving for us, but interesting that Trump Media and Technology Group jumped 16.1% on its listing day yesterday. Apart from that...
sorry, just that one interesting thing that I was reading a story that as per some math, Trump Media at a point of time was the most expensive US stock to bet against. There was no other stock in that space which was that expensive as Trump Media. So pretty interesting what it did, because I think it went up to some $77.
79.38.
And then ended at about 57. So fairly choppy day for that one.
And on a day with the market momentum was fairly subdued. So yeah, I guess Trump is trumping on the exchanges as well. But apart from that, remember, you've got a whole bunch of data that the markets will be eyeing in. Keeping that in mind, you're seeing traders on the sidelines. So just to take you through everything that's lined up for the week, you've got jobless claims, GDP and consumer sentiment for the US that comes out on Thursday, inflation data on Friday, and Friday is the big day. Remember, it is Good Friday holiday, but the markets will very closely watch out for what that inflation reading shows up. Some big sell-side brokerages have indicated that if by any chance there's any indication of an uptick in inflation, an indication by the Fed that there could be a rate hike, a rate pause, that could spell death for global equity markets. So very closely watching out for that inflation data that will come out of the US. Apart from that, I don't know, Neeraj, whether this is of any interest to you, but we've been talking about the Bitcoin, and after a launch of those ETFs in Wall Street, I believe the London Stock Exchange will be launching Bitcoin ETN on the 28th of May. So, of course, Bitcoin continues to trade strong. It trades above $70,000 a barrel, $70,000. But very interesting fact that I came across, the current market cap of Bitcoin is higher than the GDP of 159 of the world's economies of 2023. So that's an asset class that was shunned and now larger than most 160 economies.
But quite stunning, really. And the use cases that Bitcoin and crypto is turning out to be always had and now getting reinforced. Pretty interesting as to what's happening.
It cannot be ruled out that we might even see it, become a reality in mainstream asset classes. Who's to tell? But for now, a launch in the London Stock Exchange is what we're expecting. Crude, on the other hand, trades flat. Remember the Russia-Ukraine stress, no cuts from OPEC or increase in production from the OPEC Plus meeting is expected. But a slightly muted dollar is what's keeping crude okay as well. Gold, on the other hand, continues to move up. Safe haven buying, some may call it. Fears of a global recession still not completely ruled out. So that's what the world looks like, Neeraj. But I think back home, a little bit like yesterday, today also may be range bound. Mid-caps did see some euphoria in trade yesterday. A whole bunch of QIP, so stock-specific trade, will pretty much dominate today's action as well.
And we're going to talk about all of those. There are 3 or 4, and one where QIP prices have been firmed up as well. But the trade setup, firstly, when I look at the put data and typically follow what options do as opposed to what charts could indicate, universal, right, options. So the put data shows 22,000 having the most OI, and therefore you could argue that that could be the key support level from a very, very short-term 2-day perspective, if you will. Look at that put option data, and 22,000 has this highest OI, and which is the very interesting support. 20,500 far end, I mean, really, it's got to do a lot with writing options in order to make sure that you take the trade home or take the money home. But from a support perspective, 22,000 on the put side seems to be the key thing. Samina was mentioning the mid-cap index. Now, the anomaly yesterday was, though, that while the mid-cap index did very well for itself, but the market breadth wobbled yesterday. We didn't have a very good market breadth. So again, I don't know if it's a March end or what have you, but look at that. On a day when the mid-cap index was firmly in the green, you had an advanced decline ratio which was 2:1 in favor of the declines. That was the key point, I thought, in trade yesterday, and a very interesting one at that. So Let's see if mid-caps continue to grind lower despite the fact that the index at an own level might be doing okay for itself. The one thing though that is coming out very interestingly, and yesterday I was talking to some dealing rooms, and today morning I saw a Nomura note which said that their road shows across, I think, the Asia-Pacific region seems to suggest that PSU banks are starting to see demand. Never did we ever hear foreign clients getting constructive on PSU banks. Now, that is something that Nomura is saying is happening. So that, to my mind, was very, very interesting. And Samina, you travel a lot, so maybe you would have an insight here. But yesterday I was being told that the wedding season in full gusto is leading to packed banquet halls in hotels. So the F&B side of the business, not just the room revenue, but F&B could actually be very strong in this quarter maybe, but certainly April, May, June.
I think I agree because a lot of those banquet sales have gone up. Corporate bookings as well for banquets. So of course with travel returning back, a whole bunch of offsites, corporate huddles also seem to be helping them. But you know, Neeraj, you were talking about option data, and I want to bring up what we saw in terms of June bets. Now, this is betting on the big election. And in terms of option activity, we are seeing 21,000 and 24,000 strike, seeing aggressive amount of activity. Very obviously indicating that the traders are betting on a 3,000 point volatility in that range. So between 21,000 on the downside, 24,000 on the upside is pretty much where the markets are betting on for the general elections. We've also seen an above normal jump in open interest in the June contracts. So these really are early signs of positions. And of course, what caught attention was a lot of money is at play, expecting that there could be a big move up to 24,000. So what we saw is that shorting of options are much higher than call options, indicating a very positive, a clear positive bias, at least for now, in terms of an election outcome. So markets or traders not pricing in too much of a negative outcome for general elections. Apart from that, the April series, which is the next month's contracts, have also seen in the money put option of 24,000 strike, indicating that large money is expecting a sharp rally over the next 30 days. Neeraj, these numbers, while they look great and indicate what the market sentiment is or what the big money is really thinking, it's also leaves you very little room for error. Because God forbid there is an outcome that's not in line with expectation. If all the bets are on betting on a positive bias, I am not sure how the market reaction would play. Of course, 21,000 is seeming like a base, but nevertheless.
Yeah, I mean, the black swan of sorts, who can budget for that? Difficult to say that, but for now, policy continuity being bet upon, and let's see how that shapes up. Just the very other interesting aspect is, and before we get to stocks, and Samina, just the quantum of QIPs, block deals, bulk deals getting launched. We have about 3 or 4 that we are talking about today, but 2024 or FY24 has been a year of promoter exits, PE exits, not promoter exit really, promoter stakes coming off, PE exits, most importantly, and MNCs shunning a very large portion. So I think in some sense on 31st March or maybe tomorrow when we kind of show what's happening on that front, it'll be very interesting data.
Yeah, and that definitely is one big reason why the wealth industry in this country is doing exceptionally well. And even tax collection, because of course as promoters check out, you do land up signing big tax bills as well on back of those cash outs. But like Neeraj said, yesterday's morning was about brokerages that were helping counters and trade. Today, the story is QIPs. Couple of big ones actually. I'll start with CDSL because this is something that hit the street post-market close yesterday. Standard Chartered Bank, which owns stake in CDSL of about 7.18%, is looking to offload its complete holding in CDSL. JP Morgan is going to be leading this block deal. The deal size is valued at $151 million at a floor price of up to 7.5 million equity shares. Remember, the floor price comes in 1,672 rupees, which is about a 6.5% discount to yesterday's close. So again, significant stance marks its exit. Remember, like Neeraj also indicated, with the euphoria that we've seen and the kind of price increases, valuations going up for a whole bunch of these companies over the last few years, it's only obvious that some of these institutions or investors would take some profits off the table. Similar for Aster DM as well, its private equity player Olympus Capital, which is taking some stake off the table from Aster DM as well. They are looking to sell close to 10% of the holding in the company. Aster DM holds 18.96%, Olympus holds 18.96% in Aster DM. So not a complete exit, but a major chunk being exited from Aster DM. This deal is priced at $235 million. Floor price is about 400 rupees a share, which is again at a 9% discount to yesterday's close. Remember, the stock has been an outperformer. Over the last 1 year, it's up 146%. In the last few months, it's up about 35%. And Aster DM has been very clear that they're constantly looking for partners, looking to aggressively grow the India business. Last year, of course, they had a major sort of inflow coming in from a GCC partner as well. So they never ruled this out. Now, of course, this is becoming a reality. Interesting to see who picks up that stake in Aster DM. Angel One is the other one. Again, Angel One has also gone on record to say that they are looking at expansion plans. They are looking to venture into beyond equity and mutual funds, into credit and fixed income products, go into smaller tiers where there's underrepresentation of Angel One. And to back that up, they're launching a QIP at a floor price of 2,555, once again at a 7% discount to yesterday's close. So Neeraj, more or less an expected anything. Work hard as well caught our attention. We've talked about this. We've got details of that deal too.
Yeah, I mean, 517, a bit of a discount to that floor price of 544. But let's wait and watch how this one shapes up. So that's, you know, the sum and substance viewers of the key stocks that will definitely react because of the QIPs or the block deals.
But you know, Neeraj, if there is, the demand is robust. We saw that with Walkart as well, right? I'm not sure why these QIPs are coming in and stake sales are coming in the kind of discount that they are, because liquidity is still ripe, you'd imagine. I mean, a 7% discount or 10% discount. These are big discounts, right?
Yeah, I mean, but hopefully that's, I mean, just the floor price and maybe the demand comes in higher. But
unlikely. For Workhard, we didn't see that either.
Yeah, Workhard we didn't see. But for one of the others, I think from what banking sources were saying that that they want to come in at a QIP, or they wanted to come in at a QIP, which was, I mean, the promoter entity obviously wanting a slightly higher price, the bankers wanting a slightly lower price. It's got settled somewhere in between. So the floor price was merely an indication of what the worst can happen. But let's see. Workhard is a case in point wherein the issue price, what is a discount to the floor price as well. So let's wait and watch.
And I think we've also seen that for your Mama Earths, where the Ps were exiting, but the floor price was what was respected. It wasn't on the upper band of the price band.
Most certainly. So that's one. So the QIPs is one block. And then there are research notes. In between, there is Sanofi India. So I just want to mention that one. It's announced an exclusive distribution partnership with Cipla to expand the reach of the CNS portfolio in India. This should be a positive piece of development for Sanofi. So therefore, watch out for this one. And then brokerage notes. There are a clutch of them, actually. I'm highlighting two, and then we'll highlight more as well. But Goldman on Reliance, and because it's Reliance, and because yesterday, if you see the contributors, Reliance, HDFC, etc., took the index lower. Goldman has a buy call, but they've raised the target price to 3,400. They are saying that consolidated returns are at an inflection point in FY24. They estimate that the cash return on cash invested will expand by 270 basis points. Effectively, cash flow will improve for Reliance Industries. They expect, of course, capex to fall sequentially, and that's the other aspect, that the money that's getting generated will not be used in capex because it might be coming to the end of the capex cycle. So the capex will fall sequentially. And Goldman expects, now this is the, maybe the tricky part, they expect 17% EBITDA CAGR over FY24 to 27. The Bloomberg consensus estimate is about 6 to 10%, or rather slightly lower than that, and Goldman is way above those consensus estimates. So that's the key thing, that their estimates are aggressive when it comes to Reliance Industries. Let's wait and watch. But if Reliance reacts today, you know why it is reacting. It's on account, one of the reasons could be on account of the Goldman note. Very constructive. What is also very interesting, and maybe an even more eye-popping note, is UBS on ABB. And why do I say that? Because ABB is not a cheap stock. It's trading at about 75 times, 76 times 1 year forward earnings. But UBS has come out with a buy call, and they've raised the target price to 7,550 versus 5,380 earlier. So substantial uptick in target price. Why they have done this? They're saying that electrification in motion will drive growth and margins. And they believe that ABB is the best play on infrastructure scale-up in voltage electrification. They expect improvement, they expect scope to ramp up in the voltage electrification portfolio, of course, but they expect improvement in margins, which should support premium valuation. Now, here there are more notes, and we'll come to that, but Samina, just one quick thing out here. I was talking to Naveen Chandramohan of ITIS Capital yesterday. We were talking about valuations, and ABB at 75 times seems expensive. ABB, the last 10-year history, when it traded at its worst multiples, except for COVID, of course, the multiples were 65 times. So it's never been a cheap stock, and now it is showing signs of growth. So the bulls are arguing that is 75 expensive? Yes, but it's all in the context of what it has and the context of the earnings growth that it can deliver, maybe the market will give it the multiple that it is given.
It's a fair representation of our markets as a whole.
Maybe. I mean,
that's a little bit like in the India story, right?
Yeah, but it just, I mean, my argument is just so expensive that how can you come out and, raise
justify
targets?
it and say that it's all relative. But another space, I think, Neeraj, we talked about this yesterday, and this is biscuit and biscuit manufacturers. So FMCG doesn't seem to be getting a breather at all. Cocoa prices are trading at record highs, and they're expected to continue to move up. Of course, a lot of the companies that have cocoa as a raw material have been hedging their allocation, but nevertheless, there could be an impact. So stocks like Britannia, Patanjali, ITC, and Nestle, you want to keep this on your radar. There could be a downside or downward bias to them on back of higher raw material prices, which is cocoa. Neeraj, we talked about this yesterday, but I think as this news catches up, there could be a little bit of a stock reaction even today and tomorrow over the course of the next couple of days. And it's not just cocoa, right? You've also got palm oil that's higher. You've got crude that trades higher.
Wheat.
Agri products like maize trading high. So 15 to 20% impact on gross margins is what most analysts believe this could have.
Yeah, and wheat on account of what's happening, Russia, Ukraine, etc. But cocoa has got some serious structural disruptions that have happened in Ghana and some of the other places. And as a result of which, it'll be very interesting to see if the chocolates that you and I consume, or at least I consume, I don't know about you, maybe they become a bit more expensive. So it'll be very interesting to see that.
So all that gain that we were hoping that El Nino, which was, abating, would be replaced by El Nina, is going to be replaced by, I mean, I'm not sure how these dynamics work, but for now, we will try and delve into this over the course of the next few days. But for now, it's back to Editor's Cut.
Yeah, but just before Editor's Cut, just two other stocks that people should keep in mind. So the newspaper reports about the Kalyani family feud deepening, and the nephew and nieces of Baba Kalyani trying to take some action against the holdings and gets their share or what have you. So just keep an eye out for Bharat Forge in case there is a reaction. So that could be one. Motherson has enhanced capacity to meet aerospace sector demand. So watch out for Samvardhana Motherson. That could be the other one. So two auto component stocks or in that space per se, but both of them different news flow for themselves. So watch out for that one as well. And lastly, in Uflex, the director of the UK unit, and there is some news flow coming around that, which is not necessarily the most positive. So maybe Uflex has some reactions. So there are two or three names that also could be interesting. Now, that's a lot of stocks, but let's shift focus to that one space that got very active and in news, Alex, because of D-Mart's move yesterday. But I dare say it's not only about D-Mart when you talk about retail.
Absolutely. And in fact, Neeraj, the stock that I would like to start with, or we're starting with, it's quite interesting. It's up about 30% in the year to date. That is just 2024. And if I look at for the last 12 months, it's up about 200%. Viewers, this is a stock that began its journey around the 1950s. And it was called Lakme at the time. So if you know your history, you know the stock that we're talking about. It is in fact Trent. But The story is quite interesting in the retail space, right? A few of these companies which have traditionally got really, really high valuations are being justified. And I know that you were talking about this on the trade setup as well. That is effectively the India story. But what's playing out here?
Yeah, so, it's interesting. I mean, there are arguments being made that, for example, if you can buy Trent or you can buy the rest of the retail sector,
right,
per se,
exactly,
in some sense. So look at this. The market cap of Trent at 1,38,000 crores on last count, circa 1,38,000 crores. The trailing 12-month revenues are about 11,260, which makes the price to sales of about 12.5 times. Look at the rest of the retail space and you get it circa the same valuations, 1,33,000. I've omitted DMart and Page out here, but for obvious reasons, but that's how it's coming to, right? But Alex, it's just interesting because while one can argue that, oh, if you don't buy Trent, then you get 7 other retail companies and different phases of retail companies, etc. But look at what Trent has done in the last few years and then question whether it's worth paying the price for Trent or no.
So, but talk to me about those earnings then. How do you compare between Trent and maybe some of the other players?
So again, we a standard disclaimer, you can't compare each of these businesses because they are different per se, but just purely numbers. This is just data, okay? We're not trying to draw too many inferences here, just data. Trent, from the COVID lows, 1-year lows, right? Today is 27th, right? So 27th of March 2020 is the start date, and 26th of March 2024 is the yesterday's date. Look at the price CAGR growth. Trent has grown, the price has grown at a CAGR of 68%.
Which
That's
is
the
nuts.
way of, which is not, right? CAGR of 68%. This is the kind of reward that Trent is given. Compare that to a Shoppers Stop, which is 40%, which was high. But then the rest, DMart, 21, Aditya Birla Fashion, 6%, Relaxo, 8%, Bata, 3%. If you invested in Bata at COVID lows, you made a CAGR return of just 3%.
Which is...
Imagine being invested in Bata versus invested in Trent. So that's part one. But there's a reason for this, Alex. The reason is
the earnings performance.
The earnings performance, the sales growth. I'm just looking at sales because earnings could be bottom line could be deceptive as well. Aditya Birla Fashion has a loss per se. But look at sales. Trent sales growth is a CAGR of 34%. Now compare this to the others. 34% CAGR, by the way, is really strong. Compare that to the others. Campus is an exception to the rule with 23%.
But
DMart,
the base also is
very low.
Yeah.
DMart 18%, Metro Brand 16%, and then the rest. Aditya Birla Fashion 11% CAGR, Vedant Fashion 10% CAGR. Relaxo has virtually had no growth in those 4 years. Bata 3%, Shoppers Stop 5%. So you can argue that some of these stocks have hardly had any growth, and because Trent has shown growth, Trent has gained.
So the argument, would it be, and you said at the start that you can't necessarily compare the earnings of all of these companies, but understandably, if you are in the branded retail space and you're trying to choose a company to bet on or rather to invest in, then you would necessarily want to look at the nature of the business as well. And it has been argued in the past that a Bata or a Relaxo, you're not going to go and buy 7 pairs of slippers and you're not going to replace them every 2 months. However, whenever the mood strikes you, you are going to walk into a store and say, hey, I need some new threads. So you buy new clothes. You buy more clothes than you buy slippers. So is that the argument?
That is the argument. But you can argue that from an investor's perspective, does she or he care whether he's buying what kind of retail? She or he wants growth from the retail sector. If the growth is coming from an apparel retailer, then so be it. I don't necessarily need to buy all forms of retail stocks, right? That's part one. Now, what's working for Trent? And then at the end, we'll bring out the anomaly, which is DMart, compared to Trent and others, okay? But what is working for Trent is the key thing as well. So the PAT growth of the last 5 years, not just the 4 years, I'm counting pre-COVID as well, has been about 25.6% CAGR. We've spoken about the earnings growth or sales growth being northwards of 30%. That's part one. Emerging categories for Trent are now contributing to 20% of its growth.
And those are?
And I mean, you look at Star, you look at the various new forms of non-apparel business that Trent is coming out with as well. Those are doing
groceries
very well.
as well.
Yeah, grocery. Star is grocery, right? And I'll come to grocery as well. But the emerging categories are now 20%, and they have a lot of scope to grow because you could argue that Trent is reaching a point of doing everything that it can on apparel, but there are other things as well that are coming out. grocery segment, Star, is seeing a strong like-for-like growth on a very low base, but it's a very strong growth that Star is showing. 67 stores, and it's already growing at a breakneck pace. Maybe it could do more, right? Because we know grocery is the in thing.
So they're basically reducing concentration risk. Would you say that?
You could argue Zudio came out of nowhere, right, in terms of growth parameters. Yeah. And when I looked at the analyst notes, most analysts are modeling a 30 to 31% revenue EBITDA CAGR over FY24 to 26. So while it's grown at a 30%, 35% revenue growth for the last 4 years, it's not slowing down as per analyst estimates. So that's the beauty.
And then what you were saying is that there's a bit of an anomaly here in the form of DMart. Why are you saying that?
But what I mean by anomaly is that it's just a fun argument, but the way people talk, why DMart comes to the picture is because of the move yesterday, right? So the way people talk about how if you buy Trent,
you can buy
seven retail companies. If you buy DMart, you can buy Trent plus those 7 retail companies from a market cap perspective. Because look at DMart's, market cap or what have you, right? So I have their data here, right? DMart is at 2,92,600 crores worth of market cap, a TTM PAT of 2,433 crores and a PE of 120. But if you include Trent, Aditya Birla, Vedant, Shoppers, etc., I have left out page here. But if you include all the others, their combined market cap is 2,71,000. So it is lower than DMart. Right. But the TTM PAT, DMart's TTM PAT is 2,400 crores. These guys are at 1706. This is principally on account of the losses that Aditya Birla Fashion does, to be honest. But be that as it may, while DMart might look expensive to a lot of people, and that's why it's not done anything for the last 2 years, but you buy a DMart versus buy the rest of the retail sector, so to say, and DMart still doesn't look as expensive as the rest of the sector.
That's a very interesting argument to make. And look, ultimately it goes down, I guess, to buying a company. You don't only buy it based on the valuations, of course, but then it is an important factor to consider.
Yeah, but I must concede out here, Alex, that this is not a fundamental argument that I'm making. This is more showing the opportunity size, right? A lot of people do that Ramesh Dawani bought alcohol sector in 2004, wherein the alcohol sector as a whole was available at a fraction to what some of the other sectors were, or other companies were. In the same fashion, a lot of the other retailers are currently available at a fraction of what a DMart or a Trent are. So the question is, Trent has been rewarded for the right reasons. Maybe DMart gets rewarded for the right reasons going ahead. Would some of the other retailers play catch up?
Interesting question to ask, and perhaps that will be reflected in the numbers that come out in just a couple of weeks with the earnings season just around the corner. Let us know what you think about Lakme, which is now Trent, and in fact DMart. Would you go out and buy these two companies, or the rest of the space which you could buy at the same price? Let us know, and do stay tuned. Lots more coming up before the start of trade. This is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Welcome back. You're watching India Market Open. A quick check on how the implied Nifty is looking. It's expected to see a slight gap down opening in early trade. Remember, Asian cues are also quite mixed. It is a dollar that looks steady, but it's the yen that actually has weakened to levels of 151.52 against the dollar. It's a whisker away from where the Japanese authority, remember, stepped in. So despite a rate increase by the Japanese central bank, it seems to be providing no support for the local currency. Their intervention cannot be ruled out at this stage from this Japanese central bank. Well, let's move. We'll also want to see how the Japanese yen equation plays out in the dollar rupee when our currency markets open up at 9 a.m. this morning. But back to the equity markets and back to the F&O action. Agam is standing by with more on that. Agam, with 2 days to go, where is activity?
There is none actually, and unfortunately, maybe fortunately for some. Well, we are not looking at too much traction when it comes to the benchmarks. We've hardly seen any change whatsoever, at least as far as your underlying is concerned. And that said, when it comes to your futures, where we are starting to see some rollover activity starting to take place as we move on to a new financial year. Just 2 more sessions for this FY to end. And well, that said, as far as the March futures go on, expected lines unwinding coming through in the April futures are in fact looking at an increase there. Now, we're already halfway through the average of what we've seen in March in terms of open interest, and it remains to be seen whether or not we do see strong rollovers coming through. But I reckon that we are heading into a bunch of volatile months, considering it is going to be election season soon. That said, let's take a look at Bank Nifty as well, and that's where we are seeing, in fact, about a 3.5% increase in OI. This is towards the March futures. But remember that the Bank Nifty futures will expire on Thursday, but the options will expire today. And hence, based on that, there may be a little bit of a difference here and there. But let's take a look at how things are coming through for April. Again, an addition, and this is on expected lines. Now, let's talk about the options market. Well, we have a lot of activity around, further out of the money options. So the 21,700 call, put, has seen writing on the higher end. We see writing around 22,500 calls as well. But when it comes to your overall open interest distribution, your max OI stays with the 22,000 put, and on the higher end, the 22,500 calls. So it's a 500-point range indicated by open interest at the moment. Moving on, let's talk about your handful of other stocks. So we do have longs in Manappuram Finance, HDFC Life and Metropolis, and Info Edge and Godrej Consumers, of course, looking at shorts. And in terms of stocks which are seeing unwinding, short covering for Laurus Labs, Muthoot Finance, as well as IGL. So it's been a mixed market yesterday. The question really is, what do you do with these cues and where do we go from here? Let's get in Aditya Arora of Analytics Research, who's joining us on the show right now. Aditya, good morning. Thanks so much for joining in. Let's start with your view on the Nifty and the Bank Nifty. How are you trading them?
Very good morning, Agam. I think you rightly summed it up that there's no action actually in the market on the index level. Nifty and Bank Nifty are consolidating with little downward bias. But overall, if you look at the data, then there's no significant long buildup or short buildup as compared to yesterday. And I think markets should, important takeaway is that global markets are trading on the higher end, almost at lifetime highs. But our markets are, not catching up with the global rally. So I feel this gap should, get solved very soon. So bias is on the upside. Yesterday market was down, but market participation was good. because a lot of small caps and mid caps were participating in the market. So I think the traction is now building. Momentum is building on the upside. We saw momentum in a lot of NBFC. So I think soon this will trickle down to banks as well. And I think Bank Nifty could lead the rally, but we are waiting for a breakout, which could happen at 47,200. So once that level is taken out, I think then a good momentum could start and we can see a 1,000 to 2,000 point rally. So that's the view on the index.
Right. Well, of course, on the Bank Nifty, 47,200 is the level that everyone is keeping an eye on. But we move on to stocks then, Aditya. I believe the first one on your radar is Muthoot Finance.
Correct. We are seeing good activity in gold and bullion markets since a long time, and gold is trading at multi-year high. So Muthoot is also seeing some good volumes these days, and I think yesterday was a good day for the stock. So momentum could continue in this counter, and Muthoot is a bullish candidate. So April contract 1400 call could be bought at 63.85 and 1500 call has to be sold at 24.50. Maximum loss potential in this trade is 21,642. Maximum profit potential is 33,358.
So there you have, that's a bull called spread as far as Muthoot Finance is concerned. What about Tata Chemicals? I believe that's also on your radar, Aditya.
True. Tata Chemicals saw very good upside in last 1 month, but that fizzled out and stock is now again back to its support level. I think it's a good buy at this price. So over here in April contract, Tata Chemical 1050 call could be bought at 54.40 and 1100 call could be sold at 32.80. Maximum loss potential over here is 15,620 and maximum profit potential is 11,880.
Okay, so, well, another spread there as far as Tata Chemicals is concerned. We'll continue to keep an eye on those names. On that note, Aditya, thank you for joining us and taking us through your views on the markets as well as giving us a handful of option structures on stocks. And with that, it's over to you, Samina.
Thank you, Agam, for that. Muthoot Finance, that's one of the picks being recommended on back of the way the bullion has moved over the last couple of days of trade. It's been all about QIPs, like we told you in trade setup this morning. Lots and lots of QIPs this morning. It's about Aster DM, CDSL, and of course, you've also got Angel One and the price span for Walkart. We've got Anushi standing by with more details on that. Anushi, it's quite an extensive list this morning on institutional placements.
Absolutely, Samina. More than like 4 stocks over here. So I'll start off with CDSL first, wherein Standard Chartered Bank is looking to sell up to of its entire stake of about 7.18% in CDSL. JP Morgan is to launch this block deal, and if you have to look at the deal size, that stands at about 1,258 crores at a floor price, which is about 7.5 million equity shares. Now again, this floor price for the same is set at about 1,672, which shows about a 6.5% of discount compared to yesterday's close. Moving on, we have Aster DM. Now this is based on the media reports wherein it suggested that the company, wherein PE firm, that is private equity firm Olympus, is looking to sell up to its entire 10% stake over here for about $235 million, which translates to roughly about 1,900 crore. The floor price for the same is pegged at rupees 400 per share. Then on the list is Angel One, in which the QIP floor price has been set at rupees 2,555, which is again at a discount of about 6.5% compared to yesterday's closing price. This was earlier notified that the equity fundraisers of up to 2,000 crore for this Angel One. Now moving on to Walkart. Walkart has closed its QIP yesterday at an issue price of about 517 to raise up to about 480 crore. Now this issue price again is at a discount of about 5% comparatively. Last on the list is Prism Johnson, which remains on the watch list over here, wherein the board is considering fundraise through non-convertible debentures over here. So for the same, a meeting has been set on March 29th. So the amount is not quantified yet. So for more details, March 29, the update remains to be seen. So these are the extensive list of stocks which are to be remaining in focus.
Okay. Well, a clutch of these, Anushi, thanks so much for bringing these, and a clutch of these on the back of the blocks and the QIPs, so clearly remains in focus. Watch out for this, these set of stocks. They all could be reactive, particularly Aster DM as well as CDSL, simply because of the quantum of the block on offer is actually very high. So watch out for these two in particular. Also interested in seeing what Angel One does. I mean, I'd love to talk to Angel One to understand what is it that they want to do with such a large dilution. So 7% dilution.
They talked about expanding to smaller cities. In the quarter that went by, they said that the focus has been equity and mutual funds, but they want to get into distribution of fixed income products. And they've also, the promoter also went on record to say that they're insignificant in the country at this stage, unpenetrated. So all that money is going to be going towards expansion. Wealth is also a critical arm that Angel One is focusing on. So lots of growth that they've got lined up, but yeah, the dilution is significant to say the least.
7% is very interesting. But anyways, so let's wait and watch. So that's, viewers, a few set of stocks to watch out for. Now, like we said on the trade setup as well, that there are a clutch of stocks that will react on the back of brokerage notes. They're thick and fast, really. Let's start off with the first one, Citi. Yes, has a neutral rating on Coal India, but they have opened a negative catalyst watch. I think the key is not the rating, but the fact that they've opened a negative catalyst watch on the back of Varsha, a disappointing e-auction possibility. What is it?
Yeah, Neeraj, so as you rightly said, so Citi has neutral rating on Coal India with a target price of rupees 430. Now, Coal India stock has more than doubled in the last year on strong volumes and power demand. Now, the key catalyst here is it is expecting disappointing e-auction price trends in fourth quarter. Now, according to Ministry of Coal, Coal India's e-auction premium to FSA prices was almost 39% in Feb 24. This was lowest level since July 21. Now, there's an inverse relationship between e-auction volumes and premium. Now, looking at the past, Citi thinks that e-auction premium could fall below the levels seen during Jan or mid Feb 24. Citi has incorporated e-auction volume at 70 metric tons in FY25, and it expects 10% change in e-auction volumes to impact EPS by 2.3%. Now, key downside risks that could push the stock below target price include lower volume on weaker power demand, lower prices, then lower e-auction volumes and unrelated investments, while risk that could push the stock above target price includes higher volumes and realization. So this is all we got on Coal India by Citi.
So what is that one, let's go slow, what is that one key reason why Citi has the negative catalyst watch?
So I think that it expects disappointing e-auction prices trends in fourth quarter. Now, management also highlighted in the third quarter about the lower e-auction prices. So this is the reason I think Citi has given this rating.
So it's the lower e-auction prices as a result of which the rating is not important in this. What is important, viewers, is that Citi's opened a negative catalyst watch, and thereby that is something you get to watch out for. We'll get in a fundamental guest and try and talk about the impact of this as well. Varsha, thank you for bringing this to us. Aditya Agarwala, Head of Research and Investments at Invest4EDU, joins in. So, Aditya, we'll talk to you about Coal India. We'll talk to you about some of the block deals as well. But very quickly, any trades that you're taking on the index, or are you leaving the index alone?
Morning, Neeraj. Thanks for the show. I believe index is locked in that range again. Last week, we were all gung-ho thinking of markets will touch 22,500. But again, it did not take out its 20 DMA as well, which is 22, 190, 170. On the downside, after this minor gap down open, one needs to watch out 21,900 very closely, because that is the immediate support for the market. Now, if 21,900 is broken on the downside, then maybe I can take a short trade. Otherwise, I would be more inclined in taking a long trade after this gap down open with a stop just below 21,900, and maybe markets can scale back to levels of 22,100 to about 22,200, where the 20 DMA is. Specifically, I would keep an eye on the Bank Nifty, because that is where the weakness was predominantly in trade yesterday, apart from the IT names. So Bank Nifty is something which is at a crucial juncture. 46,500 is something that I'll very closely. If that is broken on the downside, then maybe there is a case for further downside in the Bank Nifty. Otherwise, again, Bank Nifty 2 keeps oscillating between 47,000 on the upside and 46,500 on the downside.
Aditya, let's go into top trades that you're recommending this morning. So while activity may be limited on the benchmark, in terms of stock-specific action, what are you advising viewers on?
Morning, Samina. So the first trade that I got on my radar is Muthoot Finance. Stock did show a massive up move in trade yesterday, almost closed at the high point of the day. And looks like there's more room on the upside from current levels. The chart setup is excellent. It's more of a positional trade, I would say, rather than a day trade. So at current levels, one can initiate a fresh long for a target of 1700 on the upside with a stop loss at 1380 on the downside. The second stock is ICICI Prudential. Again, this is one stock which has been time and again showing signs of strength now, and it's broken out from a cup and handle pattern, which is a bullish pattern in the technical analysis. So at current levels, one can initiate a fresh long for a target of at least 650 on the upside with a stop loss at 585 on the downside.
Well, clearly, Muthoot Finance seems to be getting a lot of traction from experts. Aditya has spoken about it right now. Watch out for Muthoot on the back of the gold prices uptick that we are seeing as well. You know, Aditya, Coal India is a big stock in focus today, and there are others as well, like Reliance, ABB. We'll get to those. But Coal India, Varsha, my colleague, just highlighted that Citi's open a negative catalyst watch. I'm wondering if the charts are showing any chinks in the armor. Could there be any resistances at the levels that Coal India might be trading at? What is an ideal trade from a technical perspective?
So Neeraj, stock is actually facing resistance at a downward sloping trend line, which is close to about 444, 445 on the upside. And to be honest, if I flip the chart to a monthly time frame, it's trading at extreme overbought levels rather than if I plot an RSI also on a monthly time frame, the RSI is showing signs of an extreme overboughtness. So I believe this is a good time, and this was a time to actually look at booking some profits in this space, Coal India specifically. On the downside, I believe if the stock is not able to take out levels of 445, we could be in for a bit of a more of a consolidation, I would say, rather than just a massive price correction. On the downside, maybe 420 to 400 is a good support level for the stock. I believe stock will enter into more of a time consolidation and time correction rather than a price correction, because we've already seen a bit of a price correction in the stock from 480 odd levels to about 430 now. Maybe there could be another 10-15 rupee downside in the stock, but it will be more of a time correction rather than a price correction.
Right. We also have with us Mayuresh Joshi, Head of Research, MarketSmith India, joining in. Mayuresh, good morning. Thank you for joining us. Mayuresh, to begin with, where are your biases lying for the markets right now? We seem to be stuck in a range. You've got the big event, but still 2-3 months out. How are you approaching the markets?
Morning, Samina. So we are very, very selective at MarketSmith India because our belief is primarily based on the fact of how earnings are expected to grow and which sectors might show resilience in earnings, which are appropriately reflected through our EPS ratings and rankings. The second element also is because of a lot of these geopolitical and global volatility that we are witnessing and are expected to witness over the next few weeks and months. I think a lot of the domestic cyclical sectors can still continue doing well. However, I think even within this sphere, some of the sectors have run up a little bit too much for comfort, while some, I think the argument in terms of earnings still improving on a high base of FY24 numbers might still continue for FY25 and FY26. So we're being very, very selective within the PSU basket, within the PSU banks in particular. Pullbacks on stocks like a State Bank or a Bank of Maharashtra is something that we continue to hold in our global portfolios and like as well. The second element also is the real estate ancillaries as a space. Because when you talk about a real estate cycle which lasts for 6 to 7 years, the initial leg of the cycle is basically dominated by all the developers. The mid-cycle is where all the ancillary stock starts coming through. We are in the third and fourth year, and therefore I think, in my opinion, I think a more appropriate time to look at ancillaries as that first phase of the entire developer enthusiasm in terms of sales, in terms of pre-sales velocity, in terms of new launches, have all got gestated. As more and more houses are now getting into the pipeline, the expectations of refurbishment of these houses And again, I think even homes that are already existing, I think a lot of refurbishment happening there as well. Input costs have largely stabilized. Expectations of volume growth in this upcycle, which is still expected to continue for 3 to 4 years, can benefit a whole host of these ancillary players. So Century Ply, Green Lamb, Laminates. I mentioned Pidilite last time round as well. Pidilite is something that we still continue to like at markets where India, because our belief is that earnings will still remain resilient and strong. And a few stocks out of the auto ancillary pack, because the entire story in terms of the EV transition and the current servicing of the internal combustion engines, I think that is happening very well for a few of these players within this space. So I think battery makers, as an example, is something that we continue to like in markets within India. So being a little bit more choosy and selective at this juncture in the markets. But these spaces is where our belief is that the earnings might still hold.
Okay. So be a bit choosy. Mayuresh, two large stocks. Start off. Good morning, Neeraj here. I'll start off with Coal India. There's a negative catalyst watch. Commodity prices per se are moving up. Don't quite know that about coal, because Citi seems to believe that there could be a reduction in the e-auction prices, which could be a negative. Any thoughts here?
So I think the first, morning, Neeraj, first one. I think the first element in terms of e-auction prices actually going down a few weeks back. I think that is what probably took the stock down. Obviously, I think if you look at the overall blended realizations and volumes as well, e-auctions is almost around 10 to 15% in terms of the overall volumes for Coal India. And obviously, the realizations are far, far better than the normal realizations that Coal India has. Now, the expectations in terms of how much of production and offtake can probably happen for 25, 26. A large part of the market believes 750 to 800 overall volumes. Coal India should be anywhere around 75 to 80 odd, going by that logic of 10 to 12%. However, if the pricing probably comes down, which is probably something that is being reflected in terms of the trends, obviously the overall realization growth for Coal India starts coming down, because FSA pricing will come under pressure at some point of time. Obviously, the tailwinds in terms of structural power demand expected to grow exponentially over the next few years. I think that might act as a trigger. But then again, we are moving towards renewables as a source over the next few years as well. The target that the government has probably embarked upon, 270, 280 in the next 2 to 3 years, and around 500 gigawatts by 2030. I think that phasing out process will also have an impact on the larger part of the numbers 27 onwards for Coal India. So to a certain extent, I think the run-up has been pretty sharp and stark. It is probably gestating a lot of positives that can probably come through. And to that opinion, I think if anybody's looking at fresh investments at these levels, I think our sense is that he or she needs to wait out. There might be pullbacks onto these stocks because earnings might remain a little bit subdued if pricing comes down and input costs go higher. So I think there is clearly a case where operating leverage might not get cleared out on the balance sheet.
Yeah, what about you on the charts, Coal India and okay, I guess that's already done, but just a quick one on, before I go into the other ones, how does Interglobe Aviation look? Yesterday, the day belonged to Interglobe. It started off well, managed to pick up through the day and finally closed the day at the day's high point. If traders had bought this counter yesterday, should they continue to run the position? What levels should one be watching out for today?
Samira, definitely one should continue to hold, because this was also one of the stocks which I was eyeing to give for a trade this morning. See, the good thing is it's been sustaining all that mayhem that's going around. And yesterday it broke out from a trend line resistance on excellent volumes. Immediate resistance now on the upside, or I would say immediate target on the upside now stands at 4,100 for the stock. So I believe even at current levels, if you're looking to add maybe after this soft opening, if you get the stock maybe 1% or 2% lower, it's not a bad idea to add on to your positions or look for fresh addition in the positions for a target of 4,100 on the upside, with a stop loss maybe just a tad below 3,400 on the downside. So I believe there is good money-making opportunity in Interglobe Aviation, and this is something which is showing enormous strength on the chart structure as well.
Okay. You know, Interglobe Aviation, APAR Industries, Torrent Power, and some of the diagnostic companies, Dr. Lal Path Labs, Metropolis, etc. were amongst the key movers in trade yesterday. So watch out for some of these. We'll, of course, revisit them at 9 a.m. The other large one that could be in focus today is Reliance Industries. Goldman has this note. They have a target price which has been raised to 3,400. They believe capex intensity will come off, cash flows will improve, and multiple other reasons. The stock has largely languished. Could it move? DMart did move. Could Reliance also move is the key question. Mayuresh, doubt there is anything fundamentally not convincing about this, but it just doesn't move.
And the story is very well known, Neeraj. So I think most of the facets that we speak about when it comes to Reliance is very well known to the markets. I think the only variables that can probably change is how Singapore GRMs are placed. Singapore GRMs obviously have come off in the past few weeks, but Reliance has optionality in terms of multiple feedstocks. And that is why I think the premium to Singapore GRMs have always remained better. Obviously, I think with the evolving situation in terms of how China is expected to come back, has a say in terms of the downstream business. So I think the petchem part of the business largely depends on Chinese demand and how cracks are shaping up. So refining petchem probably remains volatile in terms of how global cues are shaping up in terms of demand supply. But the retail-oriented businesses are expected to continue doing well, whether it's Jio on the telecom part, whether it's Reliance Retail, which has shown a stellar show till the past quarter, and the expectations are with more tech support that they get at the back end and expectations in terms of volume activity staying resilient. The retail part of the businesses, which are more than 50% of EBITDA, should probably hold out pretty well in terms of the operating performance. As far as the new businesses are concerned, including Jio Financial, the kind of expectations that one really has in terms of embarking in the asset management business, the life insurance business, and plucking out the low-hanging fruits. I think there is sufficient amount of growth that can probably come from that part. And the new energy businesses, I think the calibrated capex that they're probably doing ensures that the debt does not accumulate significantly or gets front-loaded too much, which impacts cash flows and ROEs from immediate medium-term perspective. So I think well-known facts for the stock. There are a lot of triggers, as I pointed out, in the next few quarters and years. So I think we remain optimistic on this counter. I think, yes, but the counter will or shall not do probably any big moves now, because I think a large part of that has been gested. But if you are a genuine medium to long-term investor, I think this stock has all the ingredients that can deliver good ROIs and should remain in your portfolios.
Right. Looks good fundamentally on Reliance Industries. We'll take a break. We'll come back. We'll talk to Aditya as well, whether there's any money to be made on RIL or GeoFin, at least with regard to charts. We'll take a break. We'll come back and also track pre-open trade. So stay with us.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
with India market open, the implied open will come up on your screen, but I mean, not that it's too necessary, but we'll start off flattish is the key point that I'm trying to make. Let's see what happens post that. Specific stocks will be the order of the day. Remember, yesterday too, while the indices did what they did, the market breadth was terrible to say the least, and therefore let's not get deceived by this. There is also this nifty rebalancing, by the way, that will happen. A lot of people will talk about how the year-end NAV management, as is often said, could come into play the next couple of days as well. So let's wait and watch what happens. But we're in conversation with Aditya Agarwala and Mayuresh Joshi. In a bit, we'll be joined by Nilesh Shah of Kotak AMC as well. We were talking about Reliance with Mayuresh just a while back. Here are the pre-open rates, of course, in just about 8 seconds, and we'll mark them, of course. But Aditya, the other question that comes in is on Reliance on the charts. Does it show the probability of any kind of an up move?
Not immediately, Neeraj. I believe the first part of the up move is already done in Reliance Industries. I believe it will enter into maybe a tad bit of profit booking from current levels, if I can say is that. So on the downside, maybe closer to about 2,800 is what I'm eyeing on Reliance Industries. Closer to about 2,800 is where I will be a buyer in the stock. I'm not ruling out the fact that it will be a big gainer maybe for the rest of the year. But immediately, I believe there is a 50-60 point correction or maybe 100 point correction in Reliance Industries. After that, it makes an excellent buy for me. Then in that case, I will look for a target in excess of 3,400 to about 3,500. Immediately, if you ask me if I'll put my money on Reliance Industries, no, I'll wait it out for some more time.
Aditya, Uno Minda, did you track that one yesterday?
Not really, Samina, but yes, I did have a look at it today morning, and so immediate resistance on the upside is 677, 675 for the stock. Until unless that resistance is taken out, I'm not looking at a fresh entry in the stock. Yes, beyond that, I would be interested in going fresh long for a target of 720 with a stop loss closer to about 650 on the downside.
And what about Indus Towers, Aditya?
That has been one stock which has been topping all analysts' charts, and I believe this is one stock which is actually after years is now showing signs of a higher tick, which is higher highs, higher lows. If you already have the stock, definitely hold on to it. I'm looking for a target of 335, 340 on the upside. If you're looking for a fresh entry, I believe even now you can make a fresh entry in the stock with a stop loss close to about 270 now. Because the previous resistance of 270 is now taken out, so that becomes an immediate support for you. So 270 will be your support on the downside. I'm looking for a target of 330, 340 easily on the upside. Give it a quarter or two and you'll see those levels in Indus Tower.
Okay. Viewers, just a while back, we spoke about the stocks which will be in focus on account of the block deals and the QIP issues. So there is Angel One, QIP, CDSL, probable block deal, and Aster DM, a probable block deal. Now, for now, CDSL is well behaved. Aster DM showing a bit of a downtick. Angel One was showing an unchanged rate, but this is early days, so we'll wait for the rates to stabilize. And Wockhardt has finalized the QIP price, and that is about a discount of 4% lower than the floor price. But be that as it may, the stock is in or around this. Mayuresh, 3 or 4 names out here, all of which have some bulk deal or QIP element to them. Any of these fundamentally that stand out for you, and why?
So might be a little biased, but Angel One probably looks good, Neeraj, because I think what we probably seen in terms of the stock market activity happening, the kind of additions that have happened in the demat account over the past few months as well, and what Angel has really done in terms of the disruptive process of their app and the acquisition thereof. I think the cost per acquisition per client is significantly lower compared to its peers. The second element in terms of customer addition has been significantly higher, and that has been consistently delivered over the past few weeks and months. Now, they are in the process of also releasing a super app, which in my opinion should also garner a lot of expectations in terms of not just transition of the existing customer base and the stickiness thereof, but more coming their way in terms of more participants as they are joining the entire trading stroke investment activity as far as the markets are concerned. The second element in terms of the overall dynamics as it comes to the margin profile, in terms of the customer quality as well, I think it probably stands out as this juncture. And they've got a good clutch of quality investors that are probably also there onto their books. So I think pick and choose. I think Angel One is something that looks good.
Okay. So Mayuresh Joshi from amongst the ones liking Angel One. I mean, just ignore this comment about the bias. But that notwithstanding, the client additions at Angel One or some of the others have certainly been very, very strong, you have to admit. Okay, more brokerage notes. Today is a day of brokerage notes. We're not even talking about...
So was yesterday, Neeraj.
And so was day before.
Sorry,
day before was a holiday. But yeah.
Might as well. It's a little bit like Tata Investment doing a 5% down lower circuit every day.
Let's see what it is doing. Before I go to the
5% lower circuit, I could bet on that. I think
Can
so.
we see Tata Investment in the first 4 minutes of the pre-open before we go to Mihika? We should try and bring up that stock. Voila. Well, Samina marked it all the way up. I'm marking it all the way down. So that's the key point. But nevertheless, let's talk about ABB. It's a day of brokerage notes. Remember, like I said, we haven't even spoken about the Kotak note on Gravita, which might be active too. But UBS, in its latest note, has raised the target price on ABB India on the back of healthy growth expectations. Mihika Johnson to give us more details about this note. Mihika, good morning. Take your time. Tell us, why is UBS bullish on ABB?
Yes, so they've retained a buy on ABB India. The price target has been raised to 7,550 from 5,380 rupees earlier, and this offers a 26% upside potential to the closing price yesterday. Now, electrification and motion is set to drive the growth and the margins of the company, was what UBS says, and they believe that ABB is the best play on the infrastructure scale-up, and this is mainly due to the scale-up in the voltage electrification. They expect a significant scope to ramp up the voltage electrification portfolio, in which ABB currently trails Schneider and SIEM, and they assume better growth in the export orders as well as the premium product mix as well as the operating leverage. And lastly, the improvement in margins is what should support the premium valuations that the company currently has.
Wow. Okay. Mihika, thanks for putting that into perspective. Now, it's a stock that has had a terrific run since its results and post that today, if these are the numbers that hold out, about a couple of minutes left for the pre-open rates to settle. But look at that run that ABB has had. Now, fundamentally, it's very expensive. Aditya, though, charts may tell a completely different story about trade. Would you trade ABB down the upside?
Not really, Neeraj. In the similar space, there are other pockets which look interesting to me. So I believe I'll give ABB a pass. See this entire gamut of stocks, ABB, Thermex, Siemens, Cummins, all of them have done excellent. And if I have to pick one, maybe a Thermex or a Cummins for me stands out. And I would want to bet my money on these stocks rather than placing my bet on ABB, because 6,000 for me is a major resistance for ABB. Till the time that is taken out, I don't see stock will see a major up move.
Mayuresh? So that argument is well taken, right? It's expensive. It's always been expensive. That's the point that somebody was making yesterday. Would you allocate fresh capital to include ABB in your portfolio at the current valuations, or would you believe there are better options available?
So I think if you look at the entire pack, Neeraj, ABB, Siemens, Cummins, all these stocks have done phenomenally well, primarily based on the fact that the order book has been quite resilient. They have been adding to their order book every passing quarter, and therefore the book to revenue visibility has improved significantly for this financial year. The second aspect also is that the margins and these orders are coming are significantly better, and they're executing it well as well. So I think all the ingredients that you probably need in terms of a good financial show, a good bottom line show as well, is something that all these stocks have probably exhibited. Now, whether to get afresh at these levels, obviously I think we need to wait for pullbacks. A, I think it's way above pivot levels as we see it at Markets.Bet India, and B, I think the valuations are way ahead of mean estimates as well in terms of how much they can deliver in terms of earnings growth over the next couple of years. So I think it's priced to perfection at this juncture. Any quarter or two where execution probably lags, or there is some element of derailment that probably happens as far as earnings is concerned, I think the reaction in terms of price action can be equally sharp as well. Nevertheless, I think the kind of technological advancements that all these companies are probably doing. Over the weekend, I think Tata Cummins probably has released a prototype or have started a production in terms of their hydrogen engines as well for commercial vehicles. So I think a lot more is happening in this space. It's obviously a proxy in terms of how the capex story is playing out for India. But I think we will, or one has to wait for pullbacks to probably come through. Whether that comes or not is a question mark at this juncture. But patience will be the key to enter these stocks.
And patience is what you need to trade these counters. ABB's was indicating to 6% gap up, but now looking at about 3% odd. Aditya, I don't know whether you've shared your view. You have already talked about ABB, but beyond that, a couple of names that are looking good in pre-open trade. I want to ask you what traders should do if those starts are close to this. Sanofi is expected to see a 3.5% gap up. If we do get an opening closer to the 7,990 price, what would you recommend traders to do? Would you play for more upside or would you avoid it?
There can be more upside here, Samina, because stock has seen a decent correction from the highs, has taken support at the 200 DM, and from there it is showing signs of an up move. And today it's opening with a big gap up. So maybe once after open, if it cools off closer to about 78.50, 78.60, I would be a buyer in this stock for a target of 8,200 to about 8,400 on the upside. Not a bad trade to take. Risk reward is in favor of going long in Sanofi at current levels. So yeah, one can actually look at it.
Mayuresh, Aster DM, there is a big exit there from Olympus today at a 7% discount to yesterday's close. Pre-open is expected to indicate, or rather is indicating a 6% downside as we open shop today. Would this be an opportunity for an investor to buy Aster DM? I mean, fundamentally, it is a solid company and the outperformance is there for everyone to see over the last 1 year.
Yeah, so I think I'll wait for some amount of stability that comes in terms of price. A lot of triggers moving for the stock and a lot of news-related action that is probably ensured that the stock remains in the limelight. But I'll wait for some amount of price stability as we speak. We still continue, as I said, holding on to the larger names, Sun Pharma, Dr. Reddy's into our global portfolios. And we'll wait for some element of pullback onto a stock like Natco Pharma within this space. Because our belief is that the kind of portfolio that Natco has, 14 FTFs in the pipeline, very strong EBITDA margins, expectations in terms of the branded generics expected to hold well, and more launches expected specifically in the formulation space as far as the US markets are concerned. So solid story. I think any pullbacks on Natco probably remains actionable at our end. Aster, let the price settle down.
Right, that's the word coming in. Aster DM expected to see a 6% downtick on back of the block deal, where Olympus PE is looking to exit about 9.5–10% of its stake. CDSL, that's the other one that's looking weak in pre-open trade. Aditya, on the chart, CDSL, if we get a 4% gap down, would you short the stock?
Not really. I wouldn't go ahead and short the stock. Rather, I would look to buy the stock if I get it slightly more lower from current levels. Closer to about maybe a 1650, 1640 is where I would look to enter the stock. Because clearly these stocks, if you short at intraday, where you get a quick pickup and a spike, you never know. So it's better avoid shorting these stocks, rather look to buy on a decline. And on the upside, maybe stock can easily test levels of 2000 and beyond again.
Right, CDSL. Mayuresh, you want to quickly comment on CDSL? How does this one look? If you get an opportunity to go in at 4% lower today, would this be a buy? More tactical, I'd like to know.
No, I think I'll prefer an Angel One on a decline.
Okay, very, very clear with his loyalties and biases. That's a pick coming in of Angel One by Mayuresh fundamentally. Technically, I don't know, Aditya, if we got your view on Angel One, you want to quickly take us through what you do and what does Angel One look like on the charts?
I would say a +1 with Mayuresh, because if you ask me actually to pick between Angel One and CDSL, I would also go ahead with Angel One, despite the fact that no biases out here. Purely going by the chart setup, it's completed its corrective wave. It's broken out from a falling wedge pattern, taken support at 200 DMA. RSI is turned off from the lower end of the bull zone. So all set for the stock. Risk to reward is in favor. Maybe with the stop loss at 2,500 on the downside, I would look to go long on the stock. I would rather say aggressive long on the stock for a target of maybe 3,200 to about 3,400 on the upside. So Angel One definitely looks very good on the chart setup as well. And I believe one should definitely look at it and play out the up move that is due on the chart setup as well.
Okay, just very quickly before we start the market, Aditya, the NBFC stock, the biggie that has done really well is Bajaj Finance in the recent few days. We've just about 30 seconds. Do you have a view on Bajaj Finance?
Neeraj, after this up move, I would want to take it a little slow. Maybe if I get a decline closer to about 6,900, 6,850, I would look to initiate fresh long here. And on the upside, 7,200 is capped. So I believe stock is trading in a narrow band. So 7,200 on the upside is capped. On the downside, 66, 6,500 is the support, major support.
Okay. Fair call. Meresh, we'll let you go on that note. Thank you so much for taking the time out and being with us. Aditya, stay on. Just one opening comment post-market open from you to just get a gauge of what the charts could be showing. But about 6 seconds left. We'll start off in a skittish fashion. The only problem is there's no fear out there currently. Let's wait and watch. In fact, we're starting off with the green, if I'm not wrong. About 1/3% in the green. So above that 22,000 mark for the Nifty. Wonder if banks are leading and PSU banks are leading higher, about 1/4% for the banks. IT should come up on the screen next. Mid-cap index 0.4. Okay, so broader markets have actually done better. Small caps 0.5%. And IT should come up on your screen. Well, about 1/4%. So nothing too great on IT either. Let's get the heat map. And before Samina talks about the mid-cap end of the market, well, the large cap end, a lot of green and very little red. That's the key thing. Britannia yet again starts off lower. By the way, Britannia started off 2% lower yesterday and ended in the green. So keep that in mind. This cocoa, milk, wheat price uptick didn't impact the stock too much yesterday. What's doing well? Reliance Industries, Adani Port. Adani Port, by the way, after yesterday's 2.5% up move, yet again at 1.25%. So doing well. BPCL, the city as a house has given a very constructive note on OMCs. Reliance, Goldman has given a constructive note on Reliance. With this 1% up move, Bajaj Finance is now closing in under the 7,000 mark. So that seems to be doing okay. Adani Enterprises is about 1/3%. So no large movers, but for the fact that Adani Port, BPCL, Apollo and Reliance are amongst the top 4 and Bajaj Finance actually top 5. And the only one which is showing some weakness, but nothing too great either, that is Britannia. About 0.5% higher, lower actually. So, Samina, much as we thought that between Reliance, OMCs, etc. would be top, and they are, but Adani Port's topping the list currently.
Yeah, on approval of that 100% acquisition of that port. So that could be the big reason why you're seeing Adani do well. But across the broader markets, I think the action is a lot more, but unfortunately, there's more activity on the downside than on the upside this morning, at least in terms of the stocks that I've picked. It is the morning that belongs to block deals and QIPs, which we've talked about. So let's quickly take a look at what's on my radar. CDSL, Standard Chartered, looks to make a complete exit of CDSL through a block deal at a 7% discount to yesterday's close. As expected, the stock has seen a gap down opening with a 6% cut in trade as we see it. Aster DM, similar there. Private equity player Olympus is looking to pass some stake in Aster DM. They own about 18%. They're looking at an exit of about 10% in Aster DM. The stock is down 6% in trade as we see it. On back of that, the floor price there too is fixed at 6.5% to yesterday's closing price. Well, along with that, a few more names that are on our radar is Angel One. Very aggressive expansion plans. Both are analysts on the show like Angel One. The company, the stock not seeing too negative a reaction on back of that news of fund QIP for, of course, expansion. The stock is down 2%. Wockhardt hits upper circuit. The price band was fully subscribed, of course, the QIP. But what was interesting on Wockhardt is it was at the lower end of the price band. But despite that, the markets now with this move behind them, looking ahead, Wockhardt looks okay with a 5% up move in trade. Muthoot and Manappuram, they're on my list because technically those counters were looking good, and also the bullion has been moving very sharply, at least in terms of what we've seen. You'd imagine this to impact Muthoot and Manappuram in a positive way, but both those counters ignoring that for now at least. ABB, UBS, buy call on the company. has led to a pretty massive run-up on ABB, a 5.5% move. This is despite the fact that this is an expensive stock. Of course, UBS does believe that relatively this looks like a good, in terms of valuation, is attractive, but nevertheless, a 6% up move on ABB is what we have. Sanofi, they've got an exclusive distribution of Ciplas products. On back of that, up about 2.5%. So, Neeraj, it's not very exciting. You've got a few handful of gainers, but I think the QIP block deal is going to give traders on the short side a lot more opportunities.
You're absolutely right, but it is all about brokerage notes if you're looking at the upside. So Samina highlighted ABB. The one more name is Gravita India, which is up 7% on that Kotak note. So that stock has really jumped up. I think the target price is 1200, 8.5% for Gravita. The target price is 1200 from Kotak Securities, as a result of which 9% now for Gravita, really shooting up in trade. So very strong show by that one. The other stock that has done well is Sangvi Movers. Sangvi Movers is up another 3% today, was up about 8% yesterday. So that's done very well. And lo and behold, Zomato is at fresh life highs. 188 and counting on Zomato, one internet business. There is Paytm, PB Fintech, Cartrade and various others. I think the one that has really done well relative to the others seems to be Zomato. So extremely strong showing by this one as well. In moments from now, we'll have Nilesh Shah of Kotak AMC joining us as well. But Aditya, quick opening thoughts and a couple of chart checks as well on one, Zomato and a Gravita, if you've looked at the charts there.
First, let's talk about the market open. It's pretty much on a flattish side, Neeraj, and I believe 22,100, 22,170 is where the resistances are. I still believe markets will continue to oscillate in that narrow band on the downside, 21,900, on the upside, 22,100, 150. If you're looking to go long, maybe now your targets will be 21,700 and 22,170, which is just a 100-point uptick. Talking of Bank Nifty, maybe that is something that one should keep a close eye on, as 46,500 has held. And now if it starts to trade above 46,800, maybe there can be a case for a 200 or 300-point up move. Now, talking of Zomato, definitely one of those strongest looking chart setups here. Even though it's trading at overbought levels, there is still room on the upside. I believe 200 is something that I'm eyeing on for Zomato, and who would have thought a year back that the stock will show this kind of move. So yes, it's a very strong looking chart structure. If you get a decline closer to about 175, 170, it will offer you a good buying opportunity. At current levels, 200 will be the target. Add on declines if you're looking for a fresh entry in the stock. Talking of Gravita India, yes, Neeraj, it's showing strength, and after this massive, almost 10% kind of an up move, I believe stock has broken out from its immediate hurdle of $1,000. So maybe above 1,000, I'm looking for a target of 1,100 or 1,150 on Gravita. If you're looking for a fresh entry, maybe your risk to reward will be a little skewed at current levels, because on the downside, immediate support is at 950, which is almost about 9,500 point down from current levels. So just wait it out. If you get a cool off intraday, then you can latch onto the stock for a target of 1,150 on the upside. The stock was at 950 on the downside.
11% higher for Gravita and counting. So some of the brokerage calls are just really shooting up in trade today. Aditya, great to have you today. Thank you so much for taking the time out, and for whatever it's worth, Happy New Year. We'll see you in the new financial year, if you will. But it's an absolute delight to have Nilesh Shah, MD and CEO of Envision Capital, joining us on the show. I got confused earlier when I mentioned that Nilesh Shah of Kotak AMC is joining in. So Nilesh Shah, Envision, excuse me for that, but you know it's a pleasure to have you always. Thanks for taking the time out today.
Thank you, Neeraj. Thank you so much.
So Nilesh, there's a lot of talk around how there are telltale signs which point to market exuberance, and therefore there being a possibility of a very large gash in the markets. You would have heard of many of these and probably more. I'm wondering if you are concerned about valuations and a possible downtick, or do you believe growth will take care of the valuations?
Yes, so Neeraj, clearly it looks like that over the last few weeks, or maybe over the last couple of months, the markets seem to have moved on to a bit of a risk-off kind of mode. especially with concerns around the kind of up move that we have seen in the mid and the small cap segment of the market. The broader markets have been a lot more weaker. But what I believe is that you clearly seen that a lot of the froth which was there is out of the way. A lot of stocks have corrected by 20 to 25% from the recent highs. And our view is that if growth sustains, then it takes care of the valuation. As long as we have growth, we have premium growth, then valuations become less of a concern because equity markets is all about buying into growth. Clearly believe that the next financial year as well is likely to be a strong year for the economy and for our GDP and therefore growth for corporate India. So clearly believe that post this recent correction, the markets now seem to be relatively well balanced, if I may kind of use that word. And probably we might see some bit of time-wise consolidation. I clearly believe that post a few weeks from now, we'll be back on the upward trajectory.
Nilesh, hi, it's Samina as well joining, and I'm of course talking to you after a number of years. But nevertheless, what is your stand in terms of your portfolio? How much cash are you currently sitting on? Are you aggressively allocating? Are you looking at lump sum allocations on big falls? Is it more SIP? And I'm assuming it could be STP largely because you think there is a time-bound correction around the corner.
So we're not sitting on any significant cash. We probably have about 5 to 10% cash levels on an average in individual portfolios. Maybe for some of the more recent investors' portfolios in the last few months, maybe the cash levels are tad higher than the single digit. So we honestly don't take too much of cash calls, especially when it's on, unless we are yet in the process of building a portfolio. So those are the kind of situations where we would have cash, but otherwise, we clearly believe that the markets have become relatively attractive versus where they were a couple of months back, or maybe where they were at the end of last calendar year. So clearly continue to be very constructive, see several opportunities in the broader market. And the fact that we are seeing a very broad-based economic growth, that's translating into broad-based opportunities in the broader market. So that's essentially what our view and our stance is.
Also, the bigger sort of returns over the last year or plus has come in from the broader markets, and no one can deny the fact that that is probably the most tempting space to be in. But for the last few months, we've been consistently talking about how large cap should be, carrying the baton going ahead. Do you feel if an individual or an investor should be looking at rebalancing his portfolio? And if he does rebalance his portfolio, should the bias now shift to large cap stocks?
So, I probably think that would hold out for the short term. If you're really taking maybe a 3-month view or a 6-month view, that can still play out. There could be a bit of tiredness or fatigue in the mid and small cap space, because of which, they may not deliver the kind of relative outperformance over the next 3 to 6 months. And in that eventuality, the large caps may outperform for the very short term. But the bottom line is that large caps as a basket, especially if I were to kind of really look at the large cap IT services companies or the large cap FMCG companies, unlikely that they will be able to grow at a rate which is more than single digits. So clearly believe that ultimately it's going to be more about growth. And I believe that the broader segment of the market, or the mid to small caps, will be displaying or exhibiting much stronger and higher growth versus their peers in the large cap space. So yes, for the next 3 to 6 months, or maybe for the very short term, large caps can outperform, and as long as we believe in a kind of a quasi risk-off mode. But once, we've seen price-wise consolidation, if there's some bit of time-wise consolidation, it's quite possible that the broader market will kind of get back into its trajectory of outperformance.
Okay. Nilesh, the other aspect is, just before we dwell into specific pockets, but before the break, one aspect is the macro situation. Are you constructive on macros? A lot of talk around CAD and coming off, and the resultant impact on the currency and what it could do for stability. so on and so forth. Any thoughts here?
So, Neeraj, macros have never been as good. In the past, we've had situations where the economy has grown at 7 to 8%, but that's kind of led to higher inflation. Clearly believe that the macros continue to be extremely robust. Macros are benign. I think the government has taken essentially a very well-balanced approach of having relatively high growth with an eye on inflation. So to that extent, I think it's a great situation to be in. Most of the big institutions or economists are still kind of upping their estimates of forecasts for economic growth, and I would tend to concur with that. So we seem to be in a period of maybe about 7 to 8% growth, and about maybe around 5% of inflation. And I don't see a cause of concern for that. In fact, that's a great situation to be in. We seem to be the standout nation, the standout economy from a global context. Second is, again, on the currency, and I would actually believe that, yes, currently there is still that inflation differential of about 2% between the targeted inflation rates between India and the US. And so to that extent, you could basically see the depreciation of the currency to that extent. But over the medium to long term, I wouldn't be surprised that with the initiatives on localization, indigenization, import substitution, the huge focus on manufacturing, all of these factors are going to probably lead to at least a more measured depreciation, and who knows, maybe an appreciation of the Indian currency. In addition to that, of course, flows coming in from FPIs, flows into bonds. These are all the kind of developments which at least will lead to a relatively benign scenario on the currency side, which will have a positive spin-off effect on imports and inflation. In addition to that, of course, this whole drive towards energy security is probably for the first time we are seeing it. And I believe that that itself is going to be a significant game changer for India, maybe for the rest of this decade. So I think on the whole, India's macros are great. India's macros are very compelling. And that in turn is likely to result into a fantastic investment climate.
Okay. Nilesh, stay on. So much more to talk about. We slip into a quick break. We've spoken about the big picture. We try and speak about the micro in just moments from now. Viewers, stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Back with India Market Open right here on NDTV Profit in conversation with Nilesh Shah of Envision Capital. Nilesh, a question that comes to mind is what will benefit going ahead? We are at the cusp of an earnings season. We're looking at possibly some earning revisions on the downside after the pace of earnings growth that we've seen in the last 2-3 years. Where is it that Nilesh Shah is most constructive on?
So clearly from a very longer term perspective, Neeraj, clearly believe that there are three very, very strong phenomena which are expected to play out. First, of course, is the whole journey towards digitalization. So to that extent, if I may use the word, that India is basically transiting towards a digital economy. And therefore, this is likely to be India's decade. So that's one big kind of theme, and therefore one very large kind of pocket of opportunity. The second is been our traditional stronghold, which is the consumer economy, and there are phenomena like higher penetration and then premiumization as well. Are the kind of twin forces which are driving the consumer economy, aided by support coming in from the digital economy and an aspirational India. The third big opportunity is around the physical economy, and this typically would entail the energy security, which I was alluding to earlier, and the whole shift towards renewables and decarbonization. The second is manufacturing with a drive to have import substitution, localization, and eventually exports. And third, of course, is the whole infrastructure built up, the public sector capex, the private sector capex. So I'd broadly say that the opportunities are going to be around the digital economy, the consumer economy, and the physical economy. These three are essentially going to be the big sources of opportunities from an investment perspective.
Nilesh, while bulls aren't yet ready to give up on the potential of PSU bank stocks given the earnings turnaround, the case of the underdogs are getting louder, at least at a valuation level of PSU banks, as they, of course, trade at historical highs, while private banks are the ones that are languishing near decade-long lows. Where do you think the trade is? It's a tale of two opposites. Which one are you betting on?
Well, for now, I probably believe the trade is more skewed in favor of private banks. The private banks are emerging out of a long period of stagnation from a stock price performance or a relative performance as well. It's probably been maybe 3 years of underperformance, and still believe that going forward, the private sector banks will continue to sustain a double-digit growth rate on the balance sheet side, especially on the loan side. Yes, there could be a bit of challenges on the NIMs, but I guess the franchises are very strong enough to be able to navigate through that. Versus that, the PSU banks, probably a lot of the capitalization and the balance sheet strengthening is kind of factored into their stock prices. So I probably believe that the private sector banks have a better chance of outperformance. The only caveat here being that post the general elections, if there is a privatization initiative, and one or two banks have been lined up for privatization, that's at least been the intent and the policy announcement. If that materializes into action, that could lead to the next round of re-rating for PSU banks. But otherwise, purely on a very steady state standalone basis, I probably think that for the short to medium term, it's very likely that the private sector peer group will outperform their public sector peer group.
Okay. The other thing, Nilesh, like the UBS note today, for example, right, talks about a very expensive capital goods stock and says that the margin uptake and the earnings uptake will make sure that the premiumness and valuation stays. How to best play the capex theme now? Because the capex which will unfold over the next 5 is arguably going to be very different from what happened in 2003, 2008, right? So how to best play the upcoming capex cycle?
So clearly continue to be very positive on the capex cycle, but it's quite possible that going forward, the private sector or the capex play led by the private sector will essentially at least be as good or will do a catch up with the public sector capex. So I probably believe that actually the capex oriented opportunities will only expand. Traditionally, at least over the last 1 or 2 years, we've really seen the the government take the lead, and therefore it has been pockets like railways and defense which have done extremely well. But going forward, clearly believe that it's going to be a lot more broad-based. I earlier alluded to the energy side and the kind of investments which are happening on the energy side. So clearly believe that companies or businesses which are a proxy for the huge investments which are expected in renewables and this whole drive towards decarbonization will essentially probably take the lead or at least be a pocket of strong outperformance versus rest of the pack. The rest of the pack will essentially do well. We've seen some bit of price correction in terms of their stocks. It's quite possible that maybe they would probably consolidate for maybe a quarter or two before the markets get again confident about their higher growth trajectory. Once there is evidence of that, I expect even the rest of the capex pack to basically catch up. So I think across the board, be it railways, be it defense, or be it energy, or some of the other private sector-led capex, clearly believe that it's going to be, again, a basket of opportunities out there.
Nilesh, you are probably the best voice on the IT sector. Tell us what you think about this space. The last 10 years, this is one sector which has been the best performing sector. It's done double-digit returns. But the fact remains business is slowing down. There were days when you'd see the rupee move weaker and IT stocks would actually react positively. I know, very naive in that sense. But even those sort of trades have now become history, right? With the changing landscape, AI, digitization, cloud, politics in the US, how does one approach the IT pack? Is it time to go overweight, or is there still some time to go before an investor can make such calls?
So there are surely headwinds for the large cap IT sector and IT services. There are clearly headwinds out there. Even over the last decade or so, these are companies which probably have grown at best 10% in terms of their revenues or their earnings. Maybe the earnings might have been a tad higher. But I probably think the revenue growth, especially on the organic side, has been single digit. And I don't think over the next decade or so, or over the next 5 years or so, I don't see the growth rates for the large cap IT services companies to kind of trend higher. Probably the best case situation would still be single digit growth rate. And I don't think you should be in equities for a business growing only at single digits. So probably believe that the large cap IT services companies will at best be kind of short-term trading opportunities or short-term investment opportunities, where you probably buy them when there's a sell-off and then you kind of play for that mean reversion. However, with the caveat, of course, that if any one of them announces something really big on the generative AI side, then that's obviously a very, very different kind of a development. But otherwise, clearly the opportunity in the Indian IT services side continues to be very bottom up, continues to be more around the tier 2, tier 3 names, or maybe the mid to small cap companies, where given the limited size, they probably be more fleet-footed to get incremental business and deliver cost-efficient solutions to their enterprises, their enterprise customers. And these could be companies which are focused around engineering, R&D services, software-defined vehicles, mobility, a whole bunch of opportunities, including, of course, implementing AI. So I probably believe that the bias would be, or the preference would be, for the tier 2, tier 3 IT services companies, which are very specialized and are going to be a lot more fleet-footed versus the large cap peers.
Nilesh, very lastly, for the next 1 to 2 years, your top sector to bet on. From the larger sectors, give me one sector, and from the smaller ones, maybe like an insurance, anything that you like, a diagnostic play, because those are two themes that have been, ruling the headlines in the last 24 hours. But two sectors, one big one and one small one, where you're seeing value and one can buy.
So clearly believe, the whole drive towards digital India, India's decade, and the fact that we are having a huge formalization and financialization of the economy So clearly the online fintech segment continues to be a very kind of an attractive opportunity. Clearly, be it online broking platform, be it an online insurance platform or an online credit platform, clearly that's a great opportunity to be in, or it could even be a very normal home lender, but using technology to kind of deliver loans in the affordable housing segment. So that, I think, as a pack continues to be very great. So I'd probably say that the online financial or the fintech space continues to be very attractive from an investment point of view. And the second would be around the premium consumption side. Still believe that there's a huge opportunity for premium consumption, and that would probably be the second area of preference.
Okay. Nilesh, such a pleasure talking to you. Thanks for taking the time out and being with us today, and look forward to seeing you in the studio soon.
Thank you. Thank you, Neeraj and Samina. Always a pleasure.
Thank you. Viewers, on that note, let's take a break. The markets are okay. On the other side of the break, we talk about whether this delayed real estate ancillary demand finally comes to fruition in FY25 or no. Keshav Bhajanka, Executive Director of Century Ply, joins us on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Century Plyboards is a stock in focus. We know that the real estate ancillary demand has been kind of chalk and cheese, but they also have a new capacity that has come on stream. And lovely to have in Keshav Bhajanka, Executive Director of the company, to talk about how does he pencil in FY25 demand scenario, what kind of capacities have come on stream, and how does that place them in terms of execution. Keshav, great having you. Thanks for taking the time out. And fill us in, Keshav, on the recent developments. I believe there is a capacity that has come on stream, and I believe, or rather, I would love for you to tell us how is the demand scenario looking like currently.
Good morning. Thank you so much for having me on the show. You are absolutely correct. A new capacity has come on play, and we actually had trial production earlier this month itself. It is the largest capex in the history of our company, and I think it bodes very well for next year. We have doubled our capacity for MDF, which is medium density fiberboard, from 950 to 1900 cubic meters. And I think this is going to give us a huge growth engine for next year. Currently, we are predominantly a north-based player, having a unit in Hoshiarpur. Post the south unit coming into full production, we shall be a pan-India presence, and that is going to help us substantially.
Could you quantify that substantial? Because for a company to get in
its largest capacity on stream would mean that the company had thought through about the demand scenario in most times, and it's coming in at a time when demand might pick up and they might have the ability to be able to service that demand. So now give us the scenario with the newer capacity having come on stream perspective.
No, you're absolutely right. Firstly, let me say that we're extremely bullish about the demand scenario. I know everybody has been talking about a slight slowdown in the short term, but the reason behind this is that after COVID, the takeoff in real estate was fantastic. The quantum of inventory that got depleted, that meant that there was a supply gap in the market. Now with new launches catching up, we believe that the next few years are going to be very good. And this real estate cycle hopefully will last beyond 7-8 years, and it shall give us a lot of impetus. At the same time, certain products in India, such as particle board and medium density fiber board, are underpenetrated. So already they have substantial tailwinds. Alongside this, the real estate cycle doing well is going to give us further impetus.
Okay. So, okay, let me try and get a sense in a different way, Keshav. For the longest time, you guys were known to clock in that consistent compounded growth rates, which on the revenue front, I'm not even going to bottom line, which may have gotten a bit disturbed, if you will, the last 12 months, let's say. Do you return to the consistency of revenue growth as a result of hopefully better demand, as which you said you are constructive about, and capacities to service that demand? So what's the kind of outlook that you can paint for FY25 from a growth perspective on the revenue front, and then it'll come to the operational metrics?
I think, we will safely be back to the sort of 20% plus compounded growth that you are referring to. And we are fairly confident on the same. Both the demand scenario and the new capacities coming on stream are going to aid in the same. And the objective shall be to outperform that 20%, but definitely we are looking at 20% plus growth.
So now you have the capacity as well, but just one quick thing on the revenue front as well. 20% could be the volume growth. There are question marks, or rather there were some thoughts around some articles around MDF pricing having come off in Q3, and correct us if we are wrong. So what is the current pricing trend, and could that impede the benefits that come out of volume growth in the MDF business?
You're absolutely right. It's a very difficult question, tricky question to answer. But I think that, yes, we are looking at a 20% plus value growth. So I think the volume growth plus the realization, both taken into account, we should grow our revenue by 20% plus.
Oh, okay. So independent of not just MDF, but the other aspects of the business as well, even if there was pricing pressure, you believe volume growth will take care of it?
Yes.
And if pricing behaves better then, Keshav, then you think that 20% can be eclipsed?
I think that we will try and overachieve that 20%. If the macroeconomic scenario favors us, then maybe a little higher than that.
Okay. Okay. Last couple of things, Keshav. One is this whole argument around why the ancillary demand may not have been very strong, and one of the reasons being given was that the old inventory was getting cleared, and now people have gotten the keys to their homes, and now that the interior works would have started, so on and so forth, etc., we will see the demand for ancillary products booming in FY25. There's also this whole argument around how global capability centers have set up shop in a big way, especially in South India, and we'll probably see demand from the commercial space coming up in a big way too. I would love to know if that is the basis of the strength in demand that you are forecasting, or is it something else?
You're absolutely right. That is a big basis for the strength in demand that we are looking at. But alongside that, I think one other element is that there is a move towards more branded players. I think that the unbranded segment has lost traction post-COVID as compared to the branded players. So I think both of these are going to play in our favor, and this is going to lead to an overall positive scenario going forward, not just in the short term, but in the medium to long term as well.
In the medium to long term as well. Okay. Last question. Do you foresee any reason or any need for raising any kind of capital, equity or debt in the near term? Part one. Part two, could operational metrics or margins come under pressure because of rising costs?
No, I don't see any need to raise any equity going forward. Having said that, yes, on a short-term basis, we might have to take on board some debt, which we have provisioned for, because a lot of the capexes, for instance, the Andhra unit or the Chennai unit, will all come into play within the space of 12 months. The short term, there might be some debt that we take on board. In terms of margins, yes, margins for MDF and particle board are likely to remain under slight pressure for maybe a few quarters. But in plywood and laminates, we are going to see consistency.
So overall margins will probably see a slight dip, not a substantial dip.
Yes.
Okay. Fair call. Keshav, lovely having you. Thank you so much for taking the time out and being with us and giving us some idea about your forecast on demand, and talk to you post your results.
Sure. Thank you so much.
Thank you. That's Keshav Bhajanka of Century Ply talking about, well, hopefully a volume plus value growth combined of at least 20% in FY25 over FY24, and newer capacities that have come on stream which might aid that kind of performance as well. Now, before we take that break, just a quick word on what's moving and what's not. I'm looking at the broader end of the spectrum. So while the markets are up about 0.5% and the large cap end is dominated by what's happening to Adani Ports or maybe a Reliance Industries, actually the Nifty 50 gainers will come up on your screen, and you will see that there's some strong gains into select names like the ones that I mentioned, but the contributors list will have exactly the same set of stocks that were putting pressure on the markets yesterday are actually doing well, save for Infi, which continues to correct. But the broader end of the spectrum, some very interesting names. So after a long time, I'm seeing Lakshmi Machine Works, Bharat Bijli, Sangvi Movers, Genus Power, this very capex focused themes doing very well for themselves in the session today. CESC is up about 4% as well. So that's one bucket. ABB continues to do well, 6% higher and stays higher. So that's the other one. And since ABB is a result of a brokerage note, Gravita is the last one that I'll mark, up about 10.5%, 1022 on the back of the Kotak note. Okay, 9% now, but in or around those levels of 1010, 1015 and doing very well for itself. So watch out for this stock as well. It's a wrap on this leg of India Markets Open. Up next is Talking Point. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to
the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide?
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for the chat today, we try and talk about economic cycles versus earnings cycles and where do the two have a confluence or divergence, if you will, because our guest can give us some really strong perspective on that. How to bet on capex beneficiaries, especially if the belief is that we might be in the first half or the beginning of the capex cycle. And of course, can capital good companies continue to trade at FMCG valuations? At least some of them are. Can that continue in a potential long-term capex cycle? To talk about all of this and more, our guest today is Kenneth Andrade, CIO of Old Bridge Mutual Fund. Kenneth, such a pleasure having you. Thank you for taking the time out.
Thank you, Neeraj. Thanks for inviting me on the show.
Now, the pleasure is entirely ours, as you know. Kenneth, let's start off with this. I would love to understand from you the perspective of this this whole conundrum that people have about whether earnings can match up to the kind of valuations given the economic cycle that we have, both globally and locally. What's your sense about this tug of or the push between the economic cycle versus the earnings cycle?
Well, as we've always seen in multiple cases, the earnings cycle is usually back-ended and stocks actually represent, or price earning multiples usually represent the opportunity that is there in that exact space. And that's essentially what's playing out at this point in time. So you'll have to map that entire value chain from the developer. And when I say this on the capex or the infrastructure cycle that we're talking about, from the developer right to the raw material provider, which is the commodity players, and see essentially where the opportunity lies and which part of that value chain can be extremely valuable to own over a long-term perspective. So every investor has got its favorite allocation, right? Now, there is an investor who likes capex businesses or developers, but then the balance sheet size that consistently continues to expand. These are companies or these are businesses which attract a lot of bondholders. So obviously their return on capital employed is very close to the cost of capital, or it's an arbitrage between return on capital employed and cost of capital. So that's the developers. Then there is the capex good manufacturers and then the commodity manufacturers. And I think that entire cycle is going to play out as we go through the course of the next couple of years, or next, I would say, all the way to 2030. And this is not just in India, but it happens across the world. And you can see the Western world also trying to put serious capex into play. And that capex in inverted commas is largely largely linked to power capex that is or energy capex that is taking place. So I think that's where we are. That's a position that we are on. We are at this point in time, and every part of this entire value chain is going to benefit quite substantially.
So, Kenneth, would it be fair to assume that this could be a multi-year capex cycle? We might not be at the very beginning, but we is definitely far away from this capex cycle ending.
Some of these numbers are a little hard to believe, but let me give you a small perspective from 2001 to 2017, and that was probably a cycle that we've seen, or probably I have seen it in my career, right? And I talk about just one cycle out there, which is the energy capital, which is power and the kind of power capacities that we put at work out there. Between 2001 to 2015, or maybe 2016, India invested one time is GDP of year 2001. So the day we started our capex, it was one time GDP over the next 15 years that we invested in our power capacities. Now think about it this way: for the next 15 years, if we have to replicate that cycle, the size of opportunity is significant. And how do you capture that, and where do you capture it? And that's what everyone's and that's what some of the valuations of stocks are foretelling. Okay, so we've gone beyond the value phase or valuation zone to actually mapping some of these companies on the opportunity or the total addressable market that is there, and that makes it very difficult in an environment like this for investors like us to try and pick the right businesses at the right valuation. Okay, so that's where we are at the cycle. We are just about probably starting, and there's one large industry that always leads it. It's not just in India but anywhere in the world. It's basically the energy cycle, and I'll give you a small structural size of how big this opportunity could be.
Okay, so can I just to clarify, just to get this clarification, you are saying that the way it happened between 2001 and 16. If the same thing gets replicated from 2024 or 2023 for the next 15 years, then the size of the opportunity is very large, and as a result of which, you're not getting businesses at the right valuation. Some of the valuations have run up.
That's right. That's right.
Okay, but if the cycle is so long, Kenneth, would you go out and buy some of these businesses even at higher valuations? Because the opportunity size, I mean, say for execution risk, the runway is very long.
Yes, it depends upon what you want to choose and what you want to participate with. So obviously we are part of the cycle. We like the way the environment's playing out, and I wouldn't say we're very loaded onto some of these businesses, but yes, we've got a fair representation of some of these companies in our portfolio.
Just one quick follow-up question, since we dabbled upon energy. It's again a very wide bucket: the traditional energy, new energy, power financiers, ancillaries. It's a wide bucket. I'm just trying to get some sense for our viewers as to what within this whole gamut, maybe I missed something also, but what within this whole gamut do you like more than the others?
I think the contractors, the capital goods companies, and obviously the commodities. And commodities is my favorite for now.
Sorry, did I hear you say commodities is your favorite for now?
Yeah.
Okay, and by commodities you mean fossil fuels, come other aspects which are going into the energy sector?
May not be fuel inputs, but everything else that goes into building out the capex, that's probably where we are.
Okay.
So everything in the metal cycle seems to be fairly large and quite reasonably priced, I would say.
Got it. Just one follow-up. So say for some special metals which might be going and which might be hard to get, the base metals and both ferrous, non-ferrous, would there be an overhang of a lack of clarity around China demand, which might be stronger than the longer term demand out scenario for these companies on the capex side?
So it's a little complicated when you bring in the Chinese environment and why they supply deflation into the economy. Now, this is a complicated statement by itself, but if you notice what's happening globally, right, there is reasonable amount of inflation which is there in the West, and the same holds true for even India or other parts of the world. Now, the only country that's providing cheaper products into the marketplace right now is companies from the Chinese economy, right? Now, when you link that, they are providing cheaper products into the global environment. If you link that to the Chinese stock market, okay, so lower prices is lower profits for the Chinese, which leads to lower market capitalizations, and that's what the entire Chinese economy is stuck with. So our sense is that this may not be. We may not continue this scenario in perpetuity, and there may be a cycle somewhere between maybe a year, 2 years, where this actually reverses. So in our limited understanding of capital cycles, the deflationary impact that or the lower prices that the Chinese have been supplying the world with, okay, may not last into maybe another 1 year, maybe maximum 2 years, and that will bring back pricing into virtually every product that is there on the ground, and it could be inflationary, but it's very good for corporate profits, and I think that's what our take, and that's why we like some part of the commodity basket extremely well.
Got it. And can I do a follow-up before we take that break? And therefore, how does that augur for the end user segments, Kenneth? For now, or at least the better part of 2023, some of these companies have benefited or shown earnings growth, not because of volume growth necessarily, but for margin expansion that has happened, presumably because of low costs as well. Does that change?
Of course, it will change. So, Neeraj, if you essentially look at the way the environment keeps moving, margins keep moving from one part of the value chain to the other part of the value chain, right? So, when you had a commodity boom in 2020 and 21, the converters suffered. Okay, and then you had the users or the converters who did well in the last year or two because the commodity prices came off. Okay, so margins will be always transitionary, but over the cycle, over a longer term cycle, both benefit, and that's why you'll have an economic expansion.
Okay. Kenneth, the other argument, and I'm just rounding off, or maybe we'll talk about the other aspect on the capex side on the other side of the break as well. But just one quick follow-up on this, and which is, you've constantly told me, right, about the deleveraged corporate balance sheet and how that augurs well for India Inc.'s capability to undertake capex. Hitherto, save for select sectors, and please correct me if I'm wrong, but we haven't seen the advent of private capex in a meaningful way. Does that change in FY25 or calendar year 24?
I think 2025 you'll definitely see the advent of private capex.
Why that belief, Kenneth?
All of us, I mean, if you get on the ground, everyone's running out of capacity. And if you have the government continuing to spend and incentivize capex, you will see that come back very, very strongly. Private capex.
Okay. Well, hold that thought, Kenneth, because I know we're making this a bit of a capex conversation, but it's just lovely to get into details with you. So maybe we'll extend that a little bit before we talk about other things. But stay tuned. Stay here, Kenneth, and viewers, stay tuned. We have to take a quick commercial break. We'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options.
Back with Talking Point right here on NDTV Profit. We're talking about CapEx. Couldn't quite ignore what's happening to some of the high-flying movers in the session today, one of them being ABB. UBS has come out with a note there talking about why the valuations could be premium for ABB going ahead. Anushi Johnson for a very quick perspective there. Anushi.
Right, Neeraj. So if you look at ABB India, it is trading at its life high today, seeing about more than 6 to 7% of gains. This is on the back of the UBS note, which has implied a price target of about 7,550. So which showcases about more than 20% of an upside over here. Again, a couple of reasons that they have cited. ABB first is the motion and the electrification. The largest segments are expected to drive growth going forward. Also, the focus now remains on its low medium voltage portfolio, which is also expected to remain in the key focus area where there's a lot of scope for ramp up. Again, now if you have to look at the export products portfolio as well, now this will be driven by a more premium mix, which will support the margins going forward. And with now the improvement in margins, that supports the higher premium valuations as well. So these are the couple of reasons why ABB is in focus today and has been gaining about 7 to 8% of gains in trade.
Thanks, Anushi. Thanks a lot for that. Kenneth, just one last question on this whole CapEx thing and the valuations that some of the stocks are trading at. And now, clearly, different reasons for why different stocks might be doing so, but earnings growth, margin accretion, and the long cycle seem to be the common points amongst all the expensive CapEx beneficiaries, capital goods space. You believe these valuations could stay elevated for some of these businesses?
Usually when these cycles last, I think valuations will remain elevated for a very long period of time.
Okay, so that's a clear missive. Maybe some of these stocks may continue to remain expensive. The only reason why I specifically thought of asking this to you, Kenneth, was because I believe in one of the forums you mentioned that some of the CapEx beneficiaries are trading at FMCG-like valuations. So I was trying to wonder if that could continue or no, but you gave the answer.
Yeah, this is the new norm.
This is the new norm. Okay. Is lower valuation and low growth a new norm for FMCG companies in the bargain, Kenneth? We've just not seen them perform. I'm moving tracks now.
I would say low valuation. These are very sustainable businesses that are out there. So they will consolidate around these levels. And I mean, if you look at typically capital cycles or the way money actually works, money is always directed towards faster growth, right? And you've got a situation or you've got an inflection point wherein traditionally all FMCG and consumer names have always grown low double digit. Okay, and the highest earnings growth has been probably closer to 20%, but that's no longer the norm right now. And you've got a shift in the way investors actually think about growth. They're moving to something which is much more scalable, larger, etc. So that's how capital moves from one part of the market to the other, and the other part of the market, because there's so much of visibility that is out there, whether it is infrastructure, whether it's power, or whether it's the capex cycle, there is a rationalization in how you see portfolios actually change. So 2010 to 2020, it was all about consumption because in infrastructure, capital, capex, etc., fell off the cliff. I think you're seeing a reversal of that entire cycle between 2022 to 2030 and maybe beyond that for a while. And there's got to be some losers, or there's some businesses, and those businesses are not losers not because they are bad companies, but they just have to go through a consolidation zone. So I think that's what will happen with consumer businesses. They don't fall off the cliff. There is a reversal to mean. If I remember this right, in 2006, 7, 8, most of the FMCG businesses, including levers, came down between 24 to 35 times earnings. So that's how you will see this environment also play out. I don't know what number they'll settle at, but it could be a stagnant situation for companies like this.
Got it. And viewers, what I meant by lower valuations was relative to history. FMCG companies still don't trade particularly at low valuations in the strictest of senses. Kenneth, since you talk about cycles, I would love to talk to you about two pockets which have kind of stagnated for the last maybe couple of years. Maybe so one of them is specialty chemicals. The toast of town until 2020-21 suddenly has gone into hibernation as a bucket at large, say for maybe one or two specific pockets. What's the sense here? Do they make a comeback at some point of time, or the survivors particularly of this current cycle?
Mm-hmm. Of course, you will see them revive themselves. When is the big question mark? And obviously, we're going through a supply glut that is there in the international market, obviously driven by one particular country. So we will have to see how that environment plays out. But these are situations that come through. So what happened in 2000? What happened in the early 20s is that you democratize capital for this industry. This industry got capital. They've been able to set up capacities. Now they have to work on costs, and they have to go out and get market share. So this is a period of time where they actually consolidate their business, and they actually and drop costs, go out and get incremental new consumers and customers. And there is a lead time to all of this happening. I think we are going through that lead time. I'm pretty much sure that the next cycle that they come through, they'll come through faster. So another industry that went through the cycle is pharmaceuticals. 2015 it hit stop, and 2021, 22, 23, we saw a number of companies take out their previous cycle. That was a 7-year cycle. So you've got to give these companies time. And when I say you've got to give these companies time, I don't mean stock prices time, but you give these companies time to recalibrate their business, look at the business opportunity with a new lens, go out and get market share. And once you get their market share, I think you get back to category dominance. And as an investor, you necessarily have to look for companies with category dominance. And it will all come through probably in the next 2 or 3 years.
Does the same thing, so just extending that just for clarity, Kenneth, does the same thing hold true for some aspects of pharmaceuticals? I mean, in some sense, the US generic companies have made a first move in calendar year 23, but CDMO, API, and the likes, or all those have kind of stagnated now for a while. Do they kind of make a comeback too?
You already seen profits out there, and they've made an historical high since 2015. I think 2024, you will have all pharma companies. I won't say all pharma companies. Most pharma companies facing the US come through with extremely high profitability. And I don't see this slowing down, at least for the next couple of years, because there's a lot of capex that is already there on the ground. There are a lot of registrations that have been done. And the best part of all of this is the Indian companies are gaining market share against their counterparts in the West. So it's a kind of an IT cycle playing out, wherein Indian pharma companies are going to dominate. I wouldn't say dominate, but they are going to take their fair amount of market share in the international arena, whether it's the rest of the world market or the US. So I'd watch that space. We are very optimistic about that part of the environment.
Are you taking are you going out on a limb and trying to take an early position into information technology, Kenneth, or are you avoiding it? The commentary, even from Accenture recently, had no ray of hope, if you will.
So they are fairly mature companies. So let's divide that into large companies and small companies. The large companies are fairly mature businesses. Now to trade them at extremely high multiples may not be the right case. To see them dip in terms of margins and retrace them back immediately over the course of the next 1 or 2 years is extremely difficult. So you have to grade yourself. They're not going to be businesses that they're going to be very stable businesses and a very stable part of your portfolio. If you expect some of the large IT companies to have a blue sky scenario, may not be the case out there. So they're stable businesses, great for a part of the portfolio. Look for kitchen sinking in some of these companies as new managements come in place. Take the opportunity of that and utilize that. So it comes down to very stock specific and stock picking in this industry, and I wouldn't categorize the entire industry as a buy.
Okay. Specific pockets within there. May I ask you, what is it that you are most constructive on? And I'm not talking about a specific timeline of 12 to 18 months. You could well be investing, because you invest at times for a very long period of time as well. Where is it that if you had a chance to put in money currently without bothering about when the return will come, as long as the return is magnified, what would that bucket be?
Okay, let me break this down. Okay, so we are at 3% or 3.5% of world GDP, and we are at 23% of population. And as we continue to grow, we have to take market share from the rest of the world.
Right.
Now, you have to go and figure out companies that will build their franchise in the rest of the world. That's one element of all of it. We've seen how much wealth IT has gotten created. We've seen the dominance of Indian pharmaceutical businesses in the West. We've seen how Indian chemical companies have gone out and made their mark. And from there, you will see multiple number of more businesses. I mean, we are the second largest steel manufacturers in the world right now, and we're growing capacity out there. So all of this is coming together quite nicely. Now, pick your franchise out there, and this is the large trend that is playing out. Domestically, infra businesses and utilities, I mean, they are expanding at or at least the numbers that if you put the numbers together, it's going to be a scale business that is out there. Now, in that scale business, you've got to allocate your capital to parts of the value chain where you feel comfortable with, and where you think the returns will I won't say it's back-ended, but to have a large extent an outlier return out there. So these are the two pockets that are there. The third pocket, which is the consumer economy, I think that will come back. It might have a shorter cycle than the last time, but whenever it does come back, you've got to be a little ready for some of those businesses. Now, case in point is if you look at all the QSR businesses, they're going through a massive expansion in number of stores or in capacity, not numbers, so in capacity. But the market cap has gone just one way, which is down. So look for these trends, look for a bottoming out of the entire cycle, and just work your way around it. So the first two are my priorities. The second one the third one is essentially something that we're waiting and watching for.
Kenneth Andrade, it's such a pleasure talking to you in advance. Easter greetings. Have a great weekend.
Thank you, Neeraj. Wish you the same.
Thank you, and look forward to talking to you more often. Most importantly. Well, viewers, that's all the time that we have on this edition of Talking Point. Thanks so much for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and
Labour Department report highlights persistent challenges in India's labour market despite overall progress. Hello and welcome. This is Agam Vakil and you're watching the FNO Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. At the moment, markets are buoyant. Both the Nifty and the Bank Nifty are in the green right now. They've come off just ever so slightly from day's highs, but they were at day's highs just about 5 minutes ago. And it seems like they're taking a little bit of breather after the sharp up move that we've seen in the first 1 odd hour of trade. Where do we go from here? That's the big question, isn't it? And we have two big expiries now. Today is the Bank Nifty expiry. Tomorrow is the Nifty expiry. And of course, we're also going to see the futures expiry coming through. So let's not rule out choppiness coming through. Let's talk about all those stocks which are providing the push towards the Nifty upwards. Let's take a look at the contributors and how things are panning out there, and that will give you a better idea of things. So we do have Reliance, where we have a broken note, in fact, this morning as well, which has led to some strength in Reliance as well. HDFC Bank is the other one which is providing support along with ICICI Bank. Remember, both these banks were weak yesterday. and Maruti Suzuki continuing to make new highs as we speak. On the losing end, we don't have too much. We have something like an Apollo Hospitals, Nestle, Britannia, Hero MotoCorp, but the weakness out there just isn't in the index. There certainly is a lot of strength, and that is what is evident as far as the indices are concerned. With that, let's take a look at the snapshots for futures, because that's where we are seeing the most amount of traction. Of course, we're going to start seeing a lot more in terms of rollovers. So let's pull up the Nifty futures and see how things pan out. Of course, here the open interest is dipping by 20%, but April futures are looking at 5% increase in OI at 130,000 in terms of open interest. And well, the fact that the Nifty is holding on to 22,100, pardon me, is of course always going to be a big positive. You do remember that 22,000 has served as a little bit of a pivot, but more so as a near-term, a very near-term support of sorts, and it continues to strengthen around there. How about the Bank Nifty? How are things panning out there? As far as your March futures go, unwinding of 28%, again on expected lines. But what about your April futures? So about another addition of around 4% there. And it'll be important to now start noting the rollover data in the future space, because it's now that we'll start seeing a lot more traction today and tomorrow. Tomorrow being the last trading day of the financial year, as well as the last trading expiry of the financial year. Again, a lot of experts are not ruling out choppiness, but then there are also a pocket of experts which is suggesting perhaps some more sideways movement in the final couple of days in this financial year. So we'll be continuing to keep an eye on that one. Now, this is your overall open interest change as far as the Nifty is concerned. And for now, while we continue to see writing around 22,500, the question really is that can we in fact expect the Nifty to go all the way there? Well, it's going to be a hard one, but it's not improbable. And the Bank Nifty, of course, today is a little bit more pertinent because the weekly options expiry, you never know how things can in fact pan out here. But as far as the Bank Nifty is concerned, continuing to see 46,900 at the moment. And I reckon that at some point in time, the index may want to test 47,000 as well. Remember, a lot of traders will then be active on the long side once we start seeing the Bank Nifty hedge towards 47,100, 47,200. That's when things can really change for the Bank Nifty as well. So those are the few levels that we keep watching out for. But overall, this is how things are panning out as far as the futures and options space is concerned. Let's bring in our experts for today. We have Ashish Kyal, founder and CEO of Wave Strategy Advisors, and Bhavin Mehta, VP of Derivative Strategies at Daulat Capital, joining us on the show. Good morning to both of you. Thanks for joining in. Bhavin, what's your take on the Nifty? One, from the expiry point of view, as well as a positional take. What's the way forward?
Okay, so what we have been observing over last couple of trading sessions is that Nifty was forming a consolidation band just around 22,000 mark. We have seen Nifty holding on to this level over last couple of trading sessions, and today it is finally trying to break above 20-day exponential moving average. Now coming to the option side of the markets, what we were looking at is good amount of put writing at 22,000 and 21,800 strike on the downside. This was clearly on the positive side for the market. At the same time, the call writers that we have observed were in the range of 22,200 to 22,500 kind of a zone. Believe that if we take out 22,200 on upside, there could be further move. And historically, this particular time frame from last week of March towards the first week of April, we have seen general positivity across the board, specifically the broader market indices, and that has been observed over last couple of trading sessions as well. So I do not see any material drawdown in near term. Believe that Nifty will try to hold 22,000 on the downside, and will probably, if moves about 22,200, there could be a very sharp momentum on the upside for at least Nifty 15 EMs. Coming to Bank Nifty, again, 47,000, as you have pointed out, remains a crucial level. But if this level is taken out, there could be some amount of up move. However, relative to Nifty, Bank Nifty continues to remain on the weaker side. So while we are looking at a call spread or looking to buy call options for Nifty, for Bank Nifty, we are a bit cautious. We are particularly looking at 47,500 as a crucial level. And till the time this level is not taken out, my sense is that it will be largely ranged going forward.
Sure. Okay, so that's the view on the Nifty, the Bank Nifty. Ashish, how are you placed here? If you could also give us an intraday view as well as a positional view on both these key indices.
See, if you look at Nifty, after a long time, we are seeing some kind of a positivity over here where the opening hour candle has managed to break that 22,080 mark and is sustaining there. So I think there is going to be short-term positive move that we can expect towards 22,200 on the upside. So any dips over here, if you can get around 22,100, can be a buying opportunity. And we can also see some build-up on the call side. On the put side, we can see 22,000 open interest has been increasing on the put side. That suggests that the put sellers are getting confident and we can expect market to expire above that level. And that is what is possible. But the momentum is slow. Definitely, we can clearly see that the earlier when we used to see very good, strong momentum and rise, this time we are not seeing that much traction. But having said that, the overall tone remains bullish as of now, and we can expect 22,200 as the target. As far as Bank Nifty is concerned, we can clearly see Bank Nifty is also moving in a range in a consolidation pattern because there has been a very different structures that if you look at a PSU banking space and when you look at the private banking space, both looks in a very, very different pattern. Where the PSU banking has been much stronger compared to the private banking space. But I think there can be some positive reversals on the upside in the private banking stocks as well. And that can help Bank Nifty. But we are yet to see any kind of a momentum. I think on Bank Nifty, if I have to check, we need a move back about that 47,000 mark, which is yet to be broken. It attempted multiple times to cross that 47,000. It failed to do that. So now if 47,000 is taken out, then we can expect some kind of a pullback towards 47,400 levels. And on the downside, the support for the banking index, which is the lower Bollinger Band area, is on an hourly chart is 46,500. So I'm going to wait for taking any position on Bank Nifty because I need a breakout above 47,000 and the support is at 46,500.
All right, so there you have it. That's the view on the benchmarks going forward. The question really is that what do you do with them? And I reckon the questions will perhaps also be answered over the course of the next few weeks because remember that we are heading into election season. Along with election season, we also have earnings that we will have to start tracking come mid-April. And that is going to be a lot. And, you know, we will most likely see a lot in terms of option premiums, potential expansion, as well as the India Volatility Index, which of course at the end of the day is a function of option premiums. But on that note, let's take a break. And on the other side, we get you a lot more in terms of stocks. Stay tuned in and we'll be back in just a bit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Welcome to AU Video Banking.
यहाँ बैंक के सारे काम हो सकते हैं। सोच बदलो और बैंक भी। AU स्मॉल फाइनेंस बैंक, बदलाव हमसे है।
पतंजलि शुद्ध सरसों के तेल के साथ हर घर की यही कहानी। इस तेल का तेज ऐसा जो लाए आंखों में पानी और स्वाद ऐसा जो भर दे मुंह में पानी। स्वाद और शुद्धता का मेल, पतंजलि सरसों का तेल।
This is an everyday reality for millions of people with disabilities in India. The truth is, we disable people with disabilities by not considering them or their needs. Disabilities should not define what we can or cannot achieve. So let's bring down these barriers and pledge for inclusivity. क्योंकि जो नहीं किया आज तक वही तो करना है. समर्थ बाहुंडे, मंजिल उनकी, साथ हमारा.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back to the FNO show. Well, we started by taking a look at how things are panning out in the stock future space. I'm going to pull up the April futures because naturally all the stock futures in March will essentially see unwinding. There'll be very few which will in fact see an increase. That said, when it comes to the April futures, if you disregard the kind of change in OI that you're seeing, naturally those numbers will look very big because, well, we are moving into the April series. But we are looking at longs in something like a Z Entertainment, something like a Biocon. Tata Chemicals, of course, is under pressure at the moment. Or pardon me, it isn't. In fact, it has changed. So that should also be in the long side because now we're seeing an advance of around 1%. Birla is also up and about, advancing, and ABB, of course, is reacting to a broken note that we've had this morning. I reckon that there must be at least some institutional buying coming through, which is on account of which we've seen that 6.3% up move as far as the ABB is concerned. Remember, the entire capital goods pack, specifically names like Siemens and ABB, have been very, very strong of late. So that's something to keep an eye on. But with that said, let's take a look at what our experts have to recommend to us on the show today. Ashish, coming to you, what stocks are on your radar? What are you recommending?
See, the first stock pick is going to be Sobha Limited. We can clearly see that the stock has been an outperformer over the past few days. It formed a very important low around the 1250 levels and has showed a very strong bounce back on the upside. So that is going to be on the buy side, and one can create long positions here, keeping a stop loss of 1450 for the target of 1610. And the next stock on the buy side is going to be Prism Johnson. We can clearly see that the stock has shown a very strong trend and breakout in today's session after a lot of consolidation that we observed on the stock for over past many months. And this breakout has happened along with a huge volume. So there is a possibility that the trend is resuming on the upside in Prism Johnson. One can create long positions here, use any dips as a buying opportunity. Aiming for the target of around 192 and maintaining a stop loss of around 173 levels.
Okay, there you have it. So those two stocks out there. Of course, Prism Johnson is not something that belongs to the futures and options space, but well, it's an idea from Ashish in any case. Bhavin, what about you? Stocks which are on your radar here?
Yeah, so two stocks, one on the long side, second one on the short side. First one is ONGC. The stock has been forming a very strong base in this particular range, about 260 kind of levels. Anticipating this stock to once again move closer to 285 on upside. If you look at roll cost, last series, this series has been very strong. Even rollover has been on the stronger side so far versus the 3-month average. So my sense is that eventually the stock will move closer to 285 on the upside. One can look to long this particular counter with the stop loss of 259. Second stock that we are recommending is on a sell side. This is a particular private banking name. So as we have been highlighting that Bank Nifty is something where we believe some amount of weakness is clearly being observed even in yesterday's trade and previous trading session. Kotak Mahindra Bank from this particular sector has been showing a kind of rejection just around level of 1780 to 1800 range. So we are recommending short on the stock with the stop loss of 1805 for a possible price objective of 1700 on the downside.
Okay, so two interesting calls there, one on ONGC and the other one is Kotak Mahindra Bank. Kotak Mahindra Bank, some may not find it surprising that there's a sell call coming from Bhavin because this has been a little bit of a lackluster stock, not just off late, potentially over the last many months and also the last many years. But that said, let's take a look at some, maybe two stocks that we want to spot and see how things could potentially pan out. The first one is Maruti Suzuki. What's really happening here is that it continues to show a lot of strength. At the moment, of course, it's trending well over the mark of 12,500. And what we're seeing is that after it's hit this life high and moved over the seminal 12,000 mark, the question really is that does it have more legs to the rally? Ashish, how are you reading things when it comes to Maruti Suzuki? How do you see things panning out for this one?
See, if you look at Maruti Suzuki and the chart, I think it's a very strong outperformer. When the broader markets and even the major index has been consolidating in a broad range, this stock has continued to move on the upside. And even today's session, if you look at it, it has given a very strong move on the positive side. And I think this can be the possibly third wave on the upside, which is usually the strongest wave as per Elliott wave. And we can expect it to move towards the level of around 13,200 on upside, which is going to be positive. And one can maintain a stop loss for the stock at around 12,000. So positionally, I think the stock has much more higher levels to cross beyond 13,200 as well. And any dips can be utilized as a buying opportunity as long as 12,000 remains intact on closing basis.
Okay. And the other one is Reliance Industries. Now, this is where, once again, we've had a broking call this morning. And they are, of course, sanguine. The question really is that how do technicals look here? What is the derivatives picture looking like out here? Bhavin, this one is for you. What's your stance on Reliance Industries right now?
Yeah, so even last time on this particular show, we had clearly mentioned that we continue to remain positive on Reliance Industry. Any drawdown from level of 2850 to 2900 remains a very strong buy zone. At the same time, awaiting a close above 3000. Now, this 3000 level is very crucial for Reliance Industry, given that we have seen good amount of quantum on call writing front. If that happens, eventually, if you look at a channel resistance, it comes to around 3200 to 3400 kind of a range. It's a rising channel. So my sense is that that will be a particular level that participants should ideally aim for going forward. If you look at be it on the roll side, the longs aggression has already been there in this particular counter since start of this calendar year. So we continue to remain positive for a possible price objective of 3200 to 3400 initially at least.
Okay, fair enough. Well, we'll leave it at that. Thank you so much for joining us, Bhavin and Ashish, and taking us through your views in the markets and giving us a handful of ideas. But from there on, we move on to JBM Auto, which is also in focus today. The company has bagged the government's e-bus orders worth 7,500 crore rupees. And my colleague Puneet Javeri caught up with Nishant Arya, Vice Chairman and MD of JBM Auto, and began by asking them about the details of the latest order in terms of their execution plans. Listen in.
This order is very prestigious for us, and we'll be executing it in the next 12 to 18 months. The execution of the order would start as we speak in the beginning of the coming financial year itself, but the deliveries would start happening from Q4 of FY25, and within 18 months, so basically Q4 of this coming financial year and Q1 and Q2 of FY26, we'll be executing this order.
Great. Now, where will these buses be supplied to? Because as I understand that this comes under the PM E-Bus Seva Yojana, which covers roughly 160 plus cities in India. So could you just give us a view of the geographical exposure of this particular specific order?
So we'd be supplying these buses in about 20 cities across Maharashtra and Assam.
Okay, and just as per the PM E-Bus Seva, as they said that this is roughly 10,000 buses are procured under this particular scheme. I just wanted to ask how many are already tendered under this particular scheme on the industry level, and how many are specific to JBM Auto?
Right. So currently almost 2,000 buses, I believe, have been concluded. And out of close to 2,000 buses, 1,390 buses have been awarded to us.
What do you expect on the order wins for you and in this particular scheme? Do you expect the government to be proactive over the next year? Because as you know, we are getting into an election year. How do you expect procurement to continue in this particular scheme for the next financial year at least?
No, I think government is very proactive and very focused on this particular project, because this is going to cater to people across the country and in tier 2, tier 3 cities primarily. So I think that's a big focus area for them. And clearly, they would not like to really lose out on any opportunity of deploying these vehicles. So I think immediately after the elections are concluded, things would be taking off on this front as well. That's what I see as a likelihood.
Now, just to go back on what you said in the previous question, you said that a lot of these orders would be procured in Maharashtra in this particular specific order. Now, just to get your view on this particular scheme, it is to develop the underdeveloped e-bus markets in India. How do you see the charging infrastructure of this particular segment going forward? Because as you will be also maintaining and as well as supplying these buses, where do you see going forward the newer cities getting added which have not been receiving these electric buses? And do you think the charging infra is already set up there, is in the process of setting up there? Just wanted to get your view on that.
Sure. So charging infrastructure, when we talk about the charger and the downstream charging infrastructure, is also part of our scope. So we'll be setting that up, and that becomes much easier when you're doing buses, because all the buses have specified parking locations in the bus depots and terminals. So therefore, that can be done very easily. And the upstream power infrastructure and other things are being driven by the central government Ministry of Housing and Urban Affairs, along with the respective states and cities.
Got it. And could you just throw some light on your current order book and how much is currently the electric vehicle buses as a percentage to the current order book?
So current order book is 100% electric, almost, I would say. And earlier we had an order book of about 5,000 buses, and this year we have executed between 1,000 to 1,500, which will be concluding end of this financial year, FY24. So from the previous order book, we'll be carrying forward about 3,500 plus buses. And the new order of 1,390 would take it to again about 5,000 odd buses as an opening for the next financial year.
Sorry, the 1,390 buses would be included in this 5,000 or will be over and above that?
Included, as I explained, 3,500 plus the 1,390 buses. That's what makes it close to 5,000 again.
Correct. And previously you had mentioned that for FY24 you expect roughly 2,000 buses to be executed. I think currently you're mentioning a little lower number than that. Is
2,000
that
crores of top line is what I had given as a guidance. The number of buses ranged between 1,000 to 1,500.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
Welcome. You're watching the Small and Mid Cap Show. I am Mahima Vachrajani. Well, before we move on to speaking with two interesting managements today, that is RK Swamy and Star Health, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmark indices, Nifty is trading around 0.6% higher. Well, they've totally come off the day's lows, so the Nifty is trading in green at present. In terms of Sensex, the Sensex is also around 0.6% higher. In terms of Nifty 50, the top gainers on the Nifty 50 are Adani Ports, which is up around 2.5%, Maruti Suzuki, which is up around 2.7%, Reliance Industries, which is up around 2.6%. And in terms of contribution, well, RIL is contributing the most points, then HDFC Bank, L&T, Maruti, and the ones dragging down the Nifty include the Apollo Hospitals, Britannia, Nestle, a bunch of FMCG stocks. In terms of the broader markets, well, the Nifty, if you can pull up the Nifty 150, Nifty Mid Cap 100 chart, it's up around 0.57%, so pretty much in line with the benchmark indices. The small cap 250 is up around 0.8%. If we talk about the gainers on the Nifty, Nifty 150 mid cap, the gainers include Torrent Power, which is up around 7.4%. There is Bharat Heavy, BHEL, which is up around 2.5%. There is Mankind Pharma, which is up around 2.7%. There is AIA Engineering, which is up around 2.3%. Steel Authority of India is up around 2.3% again. Adani Power is up around 2%. In terms of the small cap 250, the gainers today include Lakshmi Machine Works, which is up around 8% in trade today. Prism Johnson, which is up around 5.45%. Now, this is because they're considering fundraising in the board meeting, which is to take place on 29th of March. There's Jamna Auto, which is up around 5.4%. Sobha Limited is up around 4%. Angel One is up around 4.5%. A bit on how the stock-specific actions on the news flows that have come yesterday after post-markets and today. If we can pull up the chart of ABB India is up over 6%. Now this is on the back of a UBS note which has provided an upside potential of 26%. CDSL, if we can pull up the chart, CDSL is down around 3%. Around 77 lakh equity shares were exchanged in a large trade today. Sources to NDTV Profit suggest that the seller is Standard Chartered. Well, Sanofi India is also in focus. Both Sanofi India and Cipla. Sanofi is up around 4% right now. The companies have announced exclusive distribution partnership to expand reach in CNS portfolio. Cipla will distribute Sanofi India's 6 CNS products. And there is Angel One, which is down around 4.6%. QIP raising, on the back of QIP raising. Walk Hard up around 5%. Again, the firm closes its QIP. Pratap Snacks up around 3.4%. But moving on, the stock in focus is RK Swami. Well, RK Swami is the first company in focus today, and it's an integrated marketing, communications and customer data analysis company listed on the bourses in the March itself. In the recent results, the RK Swami's revenue declined by 5%, but the profits and EBITDA margins saw double-digit growth. To discuss the quarter gone by and what lies ahead, Shekhar Swami and Rajiv Newar joins us now. Welcome to the show, sir.
Good morning.
Good morning. So my first question to you is that what is the kind of revenue mix that you've seen in the 9 months that have gone by in terms of all of your 3 segments: integrated marketing, customer data analysis, and the market research?
So you just to clarify the numbers and to explain the numbers at a high level, and then we get into the questions. The way we look at this is that we look at gross margins. So if you look at the gross margin, it is revenue less the direct operating expenses. Gross margin for the 9 months period is up 15%. What that does is it drops down to EBITDA and PAT thereafter. So the PAT has gone up by 27%. We have been explaining this to people again and again, that the focus for us should be on the gross margin. The gross revenue that happens is, includes a lot of operating expenses. So we really need to take that out when we are looking at these numbers. So 9-month performance has been fairly, I would say, robust in that sense. Your question on what are the 3 segments and how they break up, roughly 50% is marketing, communications, and content, and the other 50% comes from data analytics, marketing technology, and full service market research. This is held fairly consistently. We don't expect this to change too much. We are driving all these segments simultaneously. Each of them have their own parallel management teams and their focal points and their targets and so forth. So that will continue. That is not going to change. And this is why it's, if I may use the phrase, there are 3 horses pulling this chariot, and that's what makes this different.
Right. So I also wanted to understand that your margins are around at 8%, and as you said, the focus has to be on the gross margins. How sustainable do you think are these margins, and what is the kind of margins that you're looking at by the end of FY25?
So, yeah, sure. So if you would look at the trends, even for the past couple of years, the margins have been have been sustained. And in fact, it has only grown from year to year. And let me also remind you that for us, the fourth quarter is the most important quarter for us, right? So we have still completed only 9 months, which includes the first half of 6 months, which is not the best period for us as compared to the second half of the year in terms of revenue. Now, within this period, what is very encouraging for us is to see is that the gross margin, as Shekhar said, has grown by 15%. The cost overall has grown only by 2%. So we have been able to contain the cost fairly well there. At a PAT level, we have grown by 27%. And if you were to look at the other income, which is lower for the current period compared to the previous period, if you were to also adjust the operating performance alone, or after adjusting the other income,
the PAT has actually grown by over 40%. So that's really been our performance. So we have been very mindful on the fact that we will continue to focus on gross margins. And one of the key drivers for us as far as the gross margin is concerned is the digital focus that we have. So the digital proportion of the revenue continues to be almost 3/4 of our total revenue. And that continues to be our focus. And that gives us the margins as well as the growth.
Right. So just for the viewers, that is Mr. Rajiv Newar, Group CFO of RK Swamy. Well, one more question to you, sir. Just in terms of the revenue mix, which segment is more margin accretive for you and which is the least margin accretive for you?
So, firstly, I would say that overall for us, each of these segments are very important and complement each other. Right. So had it been individual businesses, probably we would have looked at it very differently. At an integrated level, all of them complement each other because there are many clients who use 2 or more of our services. So that's one. Having said that, the communication business is something which gives us the highest margin, followed by analytics and followed by research.
Coming to you, Mr. Shekhar Swamy, who's the group's CEO and whole-time director of RK Swamy. Well, I just wanted to understand that while filing your IPO, you had mentioned that you want to make investment in the IT infra sector. Around 33.4 crores is what you had, allocated those funds to. I just wanted to understand that what kind of expansions or what kind of investments are you making in this particular space?
The RHP outlines the initiatives as well. For example, we are looking at a consumer data mart. A consumer data mart is essentially, the foundation of that will be a fair bit of IT infrastructure that needs to be built. The customer data analytics space is growing. And in fact, in the 9-month period itself, we have executed more campaigns than we did last year. So that will require further IT refresh. In the communication space, also we are looking at IT refresh and in the expansion in the computer-aided telephone interview space in the market research business. So every part of the business will go through a fairly significant IT refresh in the next 12 to 24 months, which I think is necessary. And this will then prepare us, we regard this as essential infrastructure. So this will then serve us well as far as the client outreach is concerned, as well as what we can do to make our services more efficient for our clients. So this is the plan.
And Mr. Swamy, one more question to you. From what I understand is that in this particular space, there are a lot of regional players also. So what does the competition in your industry look like?
The competition is a long tail and it varies by segment. If I look at the data analytics piece, frankly, the competition is not that significant in the sense it doesn't have too many players, and we are well placed, and we compete with IT majors actually in that space. Long tail ka sawal nahi uthta because this is very tech intensive. The marketing technology play in that space is very high. Research has a very long tail of competition because entry barriers for research is not that significant. As far as the communications and content piece is concerned, our focus is at the high end in terms of corporates, institutions, and big brands. Those organizations, by definition, look for companies with strong infrastructure, capacity, ability to respond, and so on and so forth. So if I really look at the competition in that space, it would simply be a handful of firms, not a very long tail. A long tail exists, but they can't really step up to compete with the demands of the big companies and the big institutions that we serve.
Right. And my last question to you would be, what are the kind of growth opportunities that you're looking for? Are you planning to foray into some other segment? Any sorts of plan in this particular area?
We are looking at not necessarily new segments. I think we need the space we are in is actually a rich space. Our clients are big and their demands themselves are quite significant. So if anything, our focus should be to increase our share of existing client businesses, which is significant, And we always have a pipeline of new business in any case. People are reaching out to us and we are in conversations. At any point in time, there will be at least 15 distinct new business conversations going on in some part of the business or the other. So we have to be mindful to mind that, even as we are continuing to grow our existing portfolio of, or our share of existing client businesses as well. So the strategy is, I guess, you can say aim small to grow. When I say aim small, I mean keep the focus very sharp.
Well, thank you so much, gentlemen, for taking out time and speaking with us at NDTV Profit. It was a pleasure talking to you.
Thank you.
Thank you, Mike.
Let's take a quick break now. Up next is Nilesh Kambli of Star Health, who joins us in to talk about their recent approval to set up office in the Gift City. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
Welcome back. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani. Well, Star Health and Allied Insurance Company Limited is in focus. The company has announced that it has been granted registration by IFSCA to establish an IFSC international office at the Gujarat International, that is Gift City. The company plans to commence its operation with a branch in Gift City by the end of March 2024. The company will offer non-resident Indians focused insurance that caters to the needs of the global Indian Star Health Insurance, and will also be able to attract foreign inward business as reinsurer. The company will provide insurance for Indians going abroad and India's growing international student community. To discuss this further and to understand the synergies, we have with us Mr. Nilesh Kambli, CFO of Star Health and Allied Insurance Company Limited. Welcome to NDTV Profit, sir.
Thank you.
So my first question to you is that what is the kind of size of market that you're looking at through this particular Gift City branch that you'll be opening, and what are the kind of synergies that you'll expect from this particular expansion?
See, when it comes to international business, we see that this can easily be 4 to 5% of our overall business in the coming years. It's a very big opportunity, and it's creating the market rather than capturing the market. There are a lot of NRIs who are wanting to come back to India and who wants health insurance cover so that there is continuity of benefits. We see a huge business potential for this. There is some kind of business which is currently done, but there are a lot of regulatory issues. But through Gift City, it can be seamless experience for the customers. We see a lot of medical tourism in India from Middle East, African countries, as well as Southeast Asian countries. It's a very good opportunity for these patients to come to India, and with Star Health's extensive hospital network, the kind of knowledge and experience that we have, it will be a win-win situation for both the customers as well as for us. So we see a big opportunity when it comes to the Gift City operations.
Right. And what are the kind of margins that you'll be expecting out of this particular branch? Will it be margin accretive? What do you think?
Yes, absolutely. So in terms of margin, yes, definitely it will be, it can operate anywhere between 90 to 94% combined ratios. It will give a healthy 5 to 6% margin, as well as the cash inflows, which will help in generating the investment income. So it will be in line with our existing business operations.
Right. And what are the kind of loss ratios that are that you're aiming at from this particular portfolio?
See, it depends upon the kind of business that we are writing. The retail businesses should operate at a lower loss ratio. When it comes to reinsurance inward business from foreign countries, the loss ratios will be higher, but there will be no operating cost or the cost of intermediation. So based on the kind of business as well as the the kind of customers that we write, it will be a combined ratio that we spoke about.
Right, Mr. So, right, Mr. Kamli, I have a more macro-based question. Well, the IRDA has issued final regulations for Bima Sugam, right? How will this change the landscape of insurance sector, in your opinion?
Yeah, it's a very good question. See what the IRDA is looking at. It's looking at affordability, availability, and accessibility of insurance to the population of India. When it comes to health insurance, India continues to be an underpenetrated market. So what the regulator is doing to Bima Sugam is it is creating accessibility of health insurance by creating an online platform. It's ensuring that the insurance is available to the end customers. It will also have a service infrastructure. Health insurance has suffered a lot because of the lack of customer trust. So through the service infrastructure, where the hospitals will also be on the platform, the digital health records of the customers will also be on the platform. There will be an elimination of customer distress in the industry. The rejection, the delays in settlement of claim through anywhere cashless facilities, which will also be available on this platform. So it will create availability, accessibility, as well as affordability of customers. Insurance is a law of large numbers. As more and more customers get into this platform by health insurance, it will also lead to affordability of health insurance. So it's a very big objective, forward-looking, and it will ensure that the health insurance will have a long runway of growth over the years.
Right. But in terms of Star Health Insurance, do you think that because of this, there will be some kind of market loss, share of market loss?
No, absolutely not. Health insurance continues to be a push product. It requires a lot of customer engagement. That is why till today, when it comes to health insurance for retail customers, 72% of the business is through the agents. For us, it's close to 82%. So the agency, the intermediaries will also be on this platform, which they will engage with the customers, which will create transparency, as well as it will be help in expanding the market. So we believe that it's a very good opportunity for a player like Star Health, which has a huge distribution network, to further its growth targets.
Right, but from what I understand is that Star Health has been losing its market share. So do you think that this will further add on to losing the market share, or it will benefit you?
So I'd like to clarify, today Star Health has around 33% market share. It continues to grow in line with the market. So last year we had 34%, 5 years back we had 26%, 2 years back we had 31%. So we continue to improve on the market share. This year it's a year of transition where we had taken a base price increase. So for this year we are growing in line with the market. But the kind of changes that we have done with the focus on quality business, last 3 months have been really good for us, and we see a big runway of growth in the coming years. We'll maintain our market share or continue to improve on our market share going forward.
Right. And Mr. Kamli, can you guide us on loss and combined ratios for FY25? Because the risk that is reigned in will, see loss ratios come off. So what is the guidance for FY25 then?
Yeah, so I'll not like to give a guidance on the combined ratio, but the initiatives that we have taken, focus on quality business, we see very good results. The price increase that we have taken is showing good results. Jan to March is our biggest quarter. Okay, the price increase benefit in terms of earned premium will continue to flow in 24-25. The kind of changes that we have made in our EOM structures, all that is paying up really big dividends for us, and we see that the normalized financials will be, the normalized PAT will be for 24-25. In terms of IFRS, which is, the new standard that is coming in, we expect ROEs of 19 to 20%. That is basically on the deferment of cost basis.
Okay, and you have planned and taken price hikes in FY24. Now, tell us about the extent, timelines, and the potential impact that is, that the portfolio has seen overall.
See, we had taken a price increase, so we are getting a good premium yield of 25%. The renewal of the portfolio is in line with our expectation. We're expecting some losses, the loss of business because of this, and that was built into the price increase. So it is exactly in line with our expectation. We continue to monitor all our portfolios. We plan to take price increase in our certain other portfolios, which is around 10%. And now with the inflation coming back to normalcy, the price increase will be close to 15%. This was a bigger price increase post-COVID that we had to take.
So price increase in FY25 is 15%. That's what you're saying?
Yeah, for 10% of our portfolio.
Okay, all right. And you've spoken about, risk first, growth later. And how are you strengthening your underwriting processes? One thing. I mean, if you can tell us more about how it has changed over the last quarters and where it is headed.
Yeah, so what we said is we'll focus on quality business, and that's the reason where with 16 years of experience, we know which areas are fraud prone. There is abuse and wastage that is happening. We have identified the portability business in certain categories was giving higher loss ratios. So we have abstained ourselves from writing those businesses. And that is where we have focused on quality business. What it has done is, it has led to a reduction in our rejections as well as grievances as well. So it is giving us huge benefits. The portfolio is now realigned. We started this process in April last year. It's typically 1-year policies. So from April onwards, we see that the base is set and we'll get a larger benefit out of it in terms of the overall growth rate as well as the loss issue and customer service initiatives.
Right, and the net earned interest in 9 months FY24 saw a 14% growth. Now, do you expect the growth to moderate in FY25 or it will sustain at the same rate?
So the investment yield continues to be very strong for us. With the rising interest rate, we have seen a good improvement in our portfolio. We have realigned our portfolio also, with investments in REITs, InvITs, quality papers. We see that it should not get impacted much.
Right. And what are the kind of expansion and growth plans that you're aiming at in FY25?
See, typically we have 4 levers. When it comes to agency business, we continue to add close to 80,000 to 90,000 agents. We have 7 lakhs plus agents, and this is our biggest channel, and it will continue to grow in line with the market. Digital and banca channels are the biggest growth driver for us. When it comes to digital channels, we are adding infrastructure in terms of telesales units, the spends on performance marketing. This business is growing at 35% plus. Today, it is around 8% of our overall business, growing faster than the overall growth rate. When it comes to bank assurance channels, we have 50 plus partners. And this again, the quality of the business is very good. 50% of the business comes through benefit, 50% to indemnity channels. It's a good profit-making business, and the current year growth is around 35%. In terms of group business, we continue to focus on SME segment. What we have seen is the mid-market customers, there is an improvement in rates, and this again, business is doing well for us. So it's firing on all cylinders when it comes to health insurance business for us.
Right. And my last question to you would be that with regards to the new SAHI approval, what is the kind of markets and what is the competition scenario overall?
See, we look at a market on an overall basis. There are 30 plus players, and the regulator wants that newer players should come and expand the market. So with the kind of distribution and product segment that we have, we are happy that, everyone is coming and expanding the market, and which helps a big player like Star Health.
Right. Well, Mr. Nilesh Kambli, thank you so much for speaking with us at NDTV Profit. Yeah, it was a pleasure talking to you. Well, that was Mr. Nilesh Kambli guiding us through the future of how the future of Star Health and Allied Insurance Company looks like. Well, that's all we have on the show today. Stay tuned to NDTV Profit for more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and this is Ask Profit. This is a show that gets you answers to all of your stock-related questions. And if you've got those questions, you can send them to us on any one of our social media platforms or indeed on the WhatsApp number that should be on your screen right now. We are going to be talking about one particular stock at the start, but let me very quickly take you through what is happening with the markets right now. You have gains of about 0.7% for the Nifty 50, and you have the broader markets that are doing reasonably well at this juncture. You have the mid-cap index that's higher by about 0.6%. I'm looking at the 100. You also have the 150 that's gaining about 0.6% or thereabouts. And you have the small cap 250 index that's up about 1% or thereabouts. And that means that the market breadth is tilted quite firmly in favor of the advances today. Of course, that's a break from what you've seen in the recent past. Among the sectors that are doing reasonably well, you have most sectors that are in the green today, led by oil and gas, which is up about 1.5%. Energy is up about 1%. So is auto and so is realty. The other sectors that are moving, you have banking as a pack that's not doing too much, but it's in the green, up about 0.4%. And on the losing end, you have FMCG that's down a little bit, down about 0.1% or thereabouts. A few of the updates that have come in on the input cost side, something possibly that are weighing down on a couple of these stocks. Now we are focusing on ABB India at the start today, And it is because of a brokerage note that has come in. And we've got Anushi to break it down for you. Anushi, what can you tell us about this UBS report?
Absolutely. So quite a field day for ABB India. The stock has sparked a new life high today. Well, this is on the back of a brokerage note that is from UBS, wherein they have increased, they have retained the buy rating, increasing the price target to about 7,550, which showcases about a 26% upside if you have to compare it with yesterday's closing. A couple of reasons that they have cited out. First is the electrification and motion, which are the biggest segments, will continue to remain the key growth drivers for the business going forward. Another is the ABB is now pegged as, they believe that it is pegged as the best play in the infrastructure space with the ramp up of their low to medium volt electrification business. Again, currently it trails behind Schneider and Siemens, so there is a lot of room of growth to catch up over here. Now, coming to the export side of the business, which currently makes up to about 10% of the mix, that is supposed to drive better margins for the business as now the focus shifts to the more premium side. So with an improvement in the margin profile for the business as well, this supports the premium valuations that we are currently looking at. So all these couple of factors in place are the reasons why UBS retained the buy call rating that we are seeing today.
And indeed, the stock is up as much as 6% as we speak. Thank you so much for breaking that down for us, Anushi. It's time to introduce our guests for today. We've got Avinash Gorakshakar, Director Research at Profit Mart Securities, and Ayush Mehta, Technical Research Analyst at Nirmal Bang. Thank you so much to the both of you for taking the time, as always. Always a pleasure having you on the program. Let's start with the conversation on ABB India. Avinash, you just heard what my colleague was pointing out. There's a UBS report that is possibly the reason why the stock is up. But what do you make of ABB India? Should an investor consider a fresh entry at this point?
Yeah, good morning, Alex. I think clearly, ABB is one of those franchises which has got a very well laid down marketing network, enjoys a very strong order book. And I think, tailwinds for ABB look pretty strong. They have a very large order book, and plus, their product is largely derived out of, growth numbers which come out of the economy. Our sense is that, over the next, say, 1 to 2 years, the company is very well positioned considering the kind of product dominance it has got, the kind of customers it enjoys, and obviously the kind of incremental growth opportunity which is going to come to ABB. So I think despite the fact that, valuations are slightly expensive, if one were to take the next 2 years in mind and then take a, kind of an investment call, then I think one could definitely, nibble into the stock, in a small quantity, and then on any decline, one could further add positions here, because my sense is earnings growth for the next 2 years are going to be very solid. And there is hardly any potential for any downside here, considering that, commodity prices have also softened. So basically, the company is not going to be bothered on the raw material side. Incremental order book is going to be now the key trigger. If the company gets large orders, which are obviously announced, then the execution of these orders is going to be very critical. So I think add on declines and give a time frame of at least 2 years if you're thinking of investing. A very good company, but I think the risk reward will come over the next 18 to 24.
All right, 18 to, so have a little bit of patience is the view coming in from Avinash, but he's also pointing out that the earnings growth looks strong. Let's jump straight into the questions then, and we've got quite a few that have already started pouring in. A reminder to you, if you're tuning in for the first time, you can send them to us on that WhatsApp number that's on your screen as we speak. Now, the first one that I'll take is from Samir, and he's asking about Tata Investments. He's wondering whether to get into this, or rather, I think he's saying that he's holding on to this. I do not know what level he's bought at. But Avinash, this is a stock that has gone up quite substantially in the recent past. It's been a bit wobbly here and there, but I think there's a lot of talk about that Tata Sons IPO. It's up as much as 5% today as well. What should the strategy be here?
See, my guess is, Alex, most of the investment companies which have gone up dramatically. And I think normally we always value investment companies at a discount to their investment value, which they have across all their, holdings. So my sense is that Tata Sons, there have been some conflicting reports that possibly some of the companies which Tata Sons owns, the privately owned companies are going to go public. And that is where Tata Investments will make a significant upside, because a majority of the shareholding is held via Tata Investments. So I think, if the investor has got at least, say, 12 to 18 months, because for all these companies to get diluted, I think there would be a proper process involved. So I think if the investor has the next 12 to 15 months time frame in mind, he can continue to hold. I wouldn't suggest fresh buying at these levels because the stock has skyrocketed quite significantly. And I think fresh risk reward from these levels may be a bit tough, but somebody who's holding on earlier from lower levels can continue to hold for the next 12 to 15 months. I think once the dilution of these private companies starts, which Tata Sons has got a majority holding, that is bound to benefit Tata Investments, and that will definitely give a decent risk reward. So I think it's a hold from our side.
Got it. All right. There's a question coming in on YouTube, and I don't have a name. Friend of Retail Investors is the handle. Guys, if you are writing on social media or in fact on the WhatsApp number, do tell us your name and ideally where you're tuning in from as well. That will help us identify you. The question is on Restaurant Brands Asia, bought at levels of 111. Should it be added more at this juncture? Burger King and Popeye's outlook for the next 6 months. And I believe the question is for Avinash. Ayush, I know I've kept you holding for a little while. I'll come to you in just a bit, but we're getting a lot of fundamental questions. What's the view here on QSR and specifically on Restaurant Brand Asia, Avinash?
Alex, I think QSR business in India is expected to grow quite significantly. It's a consumption theme kind of product, and I think ready to eat as well as quick service kind of restaurants products are quite popular within the younger generation in our country. Most importantly, I think clearly in the next say couple of years, the company plans to roll out a very large geographical network, and I think post COVID now things have normalized. Not only the online but dine out facility has increased significantly. So I think you need to exercise a little more patience here. There has been some competition pressure, from many other QSR companies which are listed. But I think at 100 rupees, the downside looks limited. And I think if the investor has at least a 12 to 15 month kind of time frame, he could definitely expect a decent risk reward. So I think somebody who's holding on can obviously hold on, but even fresh buying around 9,500 could be a good bet, in a kind of a growing sector, but over the medium to long term.
All right. Let me come to you now, Ayush, with the next question. Sankara from Chennai is asking about Axis Bank for the next 6 months. Not too much action as we speak in the private banking space, but would you say that it's a good bet for 6 months period?
Well, looking at the charts of Axis Bank, it has retraced from the higher levels of approximately 1150 and currently trading around 1050. It has taken a good support from its 200-day moving average, which was placed at around 1030. I feel Axis Bank will show a sign of reversal once it crosses 1080. So 1080 can be seen in the next few weeks maybe, and once it crosses 1080, then we are again seeing 1150 on the cards.
Okay. One more coming your way. This is on Suzlon. And we've got Vishal, who is asking about what the target price would be for the next 6 months. And while you're at it, would you also be able to provide the support level for Suzlon?
So the support level for Suzlon is placed at around 35 rupees. So 35 will act as a very strong support zone, as it has formed a formation of triple bottom here, plus there's a weekly swing support as well. So I think Suzlon is looking good because of the support zone. Once it crosses 40 on the closing basis, we can see 50 again. But 35 rupees will be a strong support zone. Once it crosses below 35, then there should be an exit from the stock.
Okay. Vikas is asking an interesting question. So he's, first of all, he's looking at a fresh investment with a 2-year perspective. Which one of these two companies should be considered? Avinash, the companies he's listed are Cyient DLM as well as Tanla Platforms. And could you give your rationale as to which you would pick between these two?
I think Cyient looks to be much better positioned considering the fact that they have a well diversified base. They are present in the railways, defense, as well as the aerospace sectors. And my sense is that it's been a much more consistent performer as compared to Tanla. In fact, Tanla is more on the OTT side, on the value-added telecom services side. If you look at the performance of Cyient, I think it's been a steady performer even in challenging bad times. And even as of now, I would suggest that if the investor has a 12 to 18 month time frame, because IT companies, according to me, the growth quotient is yet not visible. So if you want to buy now, I think you will have to give in some more time, because all these companies are well managed, fundamentally very strong, good cash flows. But I think the growth quotient could possibly come in from the second half of FY 24-25. So Cyient, I think, would definitely give a better risk reward as compared to Tanla. and I think the risk will also be mitigated. I think it's a fairly slow moving but a more safe counter as compared to that.
Okay, now I think that this is a very interesting question. Avinash, I'm coming back to you because it's more of a strategy and portfolio question. This is a question from Martin. Martin is writing in from Mussoorie. He's saying that he's 24 years old. He's started investing last month and he's holding shares mostly in the power sector as well as utilities and a few banks. Now he's asking, he's not named which these stocks are, but he's asking what should his strategy be in April or when the elections start, because he's getting a lot of confusing signals from various places and he's a little confused with the different views being expressed. I would think that because he's so young, he's got such a long time frame, should he really be worried about what's going to happen in the next couple of months?
Yeah, I think Alex, I don't know what kind of stocks he has purchased, but I think if he is stuck to large cap names in the power generation sector, then I think he should not worry. My sense is that banks also, if he's holding on to some of the PSU or the private sector banks, I think longer term, both the banks as well as the power generating companies would continue to do well. And I think he's young, so there's a long runway for him to make money. He needs to exercise a lot of patience. And I think if he gives in at least 2 years, then I think, that portfolio what he holds, without knowing, of course, the company names, can definitely do well. Election will come and go. There will be volatility in the market from mid-April when the elections start. But I think once June 6th happens, and I think we get a conclusive result, and obviously, markets are also expecting that after this, there could be some rate cuts coming in.
Yeah.
So I think the markets will continue to go up. So I think just hang on and think long term. And I think risk reward will definitely happen positively.
So Avinash, a quick follow-up to that, because we were having conversations on the channel as well. And one of the views that was described in the power space is that the guest that was speaking was positive on power generators that are focused more on thermal and also have a play in renewable, because he expects that renewable will pick up over a period of time, and also on transmission. So do you hold to that, and which stocks in the power space and in banking space should you be holding at this juncture for the long term?
I think in terms of power generation, I think we still continue to like Tata Power. We believe that, longer term, a lot of money can be made here. Secondly, I think in transmission, there are many companies which operate like KEC International. There is REC also, which has also got a very good exposure on the power distribution side. My sense is that, these are companies where the visibility of earnings is solid. You need to take at least a 2-year view plus year. And most importantly, as you rightly said, the renewable energy names, the earnings growth has not yet come in. I think the narrative has played out very well, except for 1 or 2 companies like KPI Green, which is a lone performer in the solar energy market. I would believe that, it's better to have large thermal companies in your portfolio, some good transmission companies and power distribution companies, because clearly, I think these are more matured players. And obviously, as time goes forward, if they have a combination of renewable and green energy, that would add to their revenue and bottom lines.
Ayush, coming to you on the next one. Jayakrishan from Kozhikode is asking about GMR Infra. He's bought at levels of 94 for the medium term. He's wondering whether exit at this juncture and shift to something like an IRFC, which, by the way, has been buzzing viewers. It's been up and about in the past few sessions. Ayush, what's the view?
So I will recommend to hold it with the trading stop loss, because GMR Infra, the chart is positive. It has shown good reversal from its 100-day moving average and currently stuck between this 20. So once it gives a closing below 80, then we should exit. Then the person should exit from here, and then you should definitely look for options such as IRFC is definitely performing well. Once it crosses 150, I feel there's a new target coming up, which is going to be around 165.
Got it. All right. On that note, we have to slip into a very quick break. Avinash and Ayush do stay with us, and viewers will be back on the other side to take more of your questions. So do stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching Ask Profit. Now, we are in the midst of taking your queries, and the next one that I'm taking is from Mohit. He's writing in from Ludhiana, and he's asking about Fortis. He's bought at levels of 270 rupees per share, and he's got a time horizon of about 2 years. Avinash, what's the view on this particular counter, and is this the best pick in the healthcare space?
I think, see, hospital space has gathered a lot of momentum, and specifically specialty hospitals is one space where I think you're going to see a lot of traction going forward. Fortis definitely looks positive. I think over the next 2 years, we could expect not only the overall bed capacity to increase, but even the specialty business could contribute quite significantly. Plus, they have their diagnostic business, which is expected to be monetized in the next 2 years. So that itself is also going to give a leg up to Fortis. But I think some other stocks within the hospital space we like is Alex Shalby Hospitals. This is also one company where a lot of good fund buying has happened. The company has been operating hospitals, especially tertiary hospitals in Tier 2 and Tier 3 markets, where I think the risk reward could be significantly better. I think we've got good institutional as well as HNI investors like Vijay Kedia also buying a chip of the block here. So I think both these companies look interesting, provided the investment time frame is at least 12 to 18 months.
Okay. We've got a question from Ramesh. He's writing in from Hyderabad. He's got Delta Corp at levels of 164, and he's got Lakshmi Organics that he's bought at levels of 364. Both he's experiencing losses in. He's got a long-term time horizon, but should he average or book losses from the perspective of what the price movement is? Ayush, what's the view on the charts?
Let's talk about Delta Corp first. Delta Corp has given a breakdown that in all the time frames, and we are seeing profit working from higher levels. I feel you should exit Delta. You should exit Delta Corp once it gives a closing below 115, because that is the last support zone for this stock. And I feel 100 rupees can be seen in this stock also. And the next stock is
Organics, which he's bought at levels of 364.
Lakshmi Organic. That is LXCAM, right?
That is yes. It's currently trading at 235.
So Lakshmi Organic charts are a little positive right now. It has given a reversal from the 220 rupees level, and I feel you should continue to hold this as there's a trailing stop loss I would like to recommend here is 228. Once it drops below 228, then you can exit. Otherwise, you should continue to hold it, and 250 will be seen very soon in this.
All right. The next question is quite interesting, not something that you hear every day. It's from Shyam, and he's asking, should he switch from Reliance Industries to Jio Financial Services from the perspective of the long term? Avinash, I think a lot of questions I have had about Jio Financial Services and what the plan is with regard to the business, but clearly the stock seems to have no issues, or rather the market seems to have no issues about where things are going from the business perspective. The stock price has gone up quite substantially in the year-to-date period. Should a switch like this be contemplated though?
Yeah, I think, Alex, Reliance Industries, first of all, is the parent of Jio Finance. And I think, if the investor has purchased shares independently from the market, then it's a different thing. But otherwise, if he has been already holding Reliance shares, then I think most of the Reliance shareholders have got Jio shares free of cost. So my sense is now, if one were to buy Jio Finance and sell Reliance, I would believe that would not be a wise decision, because see, Reliance has got a more matured business model. Not only does it have financial services and new business vertical, it's got telecom, retail, where a lot of value unlocking is going to happen in the next, say, 2 years. So I think, Jio does well. Obviously, that will benefit Reliance first, because it's going to get consolidated in Reliance numbers. And I think the tailwinds for Reliance are quite encouraging. I would not be surprised that next year could be a very strong year for Reliance, both from the telecom, retail, as well as from the Jio financial side. Jio is still maturing. It's still putting all the blocks in place. And I think probably in the next 2 years, you could see some material revenue and profits coming in from this business. So I think it's better to hold on to Reliance.
Okay. Torrent Power is the question, or rather the stock that Uday Bhaskar wants to know about, and he's bought at levels of 1350. Any view on the charts, Ayush? What target would you give for this particular counter?
Torrent Power is performing really well, and we are seeing a breakout on its weekly as well as monthly chart. So I feel the first target we are seeing here is 1525. Once that is seen, and 1600 levels are also on the card. If someone wants to put trading stop loss here, then 1375 is a trading stop loss level.
Okay. Best Agro Life. I'm just trying to pull up the counter. Do you have a view on this, Avinash? We've got a viewer who's Ravi Kumar, who's asking about this. Is it the right time to buy this counter? I believe it's a pesticides company.
Yeah, I think, Alex, this is into agrochemicals. And I think like all agrochemical companies, the last 6 months have been extremely challenging for them. There's been a lot of inventory pile up in the system. I think fortunately now things are slightly better. And hopefully next year, when the season starts, I think all the agrochemical companies, including Best Agro, should do well. We believe that this is not a global phenomenon. It was largely restricted to the Indian markets. And I think unless the investor has got at least the next 12 to 15 months time frame, he can definitely consider buying a small quantity here, because agrochemicals as a sector is a very crucial sector in the economy. And hopefully next year monsoons are good and the season starts positively, you could see a good bounce back in Best Agro. So I think definitely for the next 12-15 months, it could be a good risk reward opportunity.
Okay, I'm going to try and pull up what has been shared. Anuradha Menon from Mumbai is asking about Artemis Medical, I believe. Let's pull up that chart and see where it's currently trading. And Nelcast, I'm not too certain about what the levels are, but she's looking to hold these for the long term. So Artemis is currently trading at 175. Do you have a view on this, Ayush, on the charts? How does it look?
Artemis charts are looking positive. It has made a formation of flat pattern, and the breakout is awaited at 176, 177, and which will happen maybe today or tomorrow. And I think Artemis should be holded for a short term. And the first target we are seeing here is 190. And next stock is Nelco, right? Nelcast. Okay. So Nelcast has formed a bottom at around 120 and is in the range of 120 to 130, currently trading around 132. So it should be holded as well. The first target we are seeing here is 145.
All right, first target is 145. Gentlemen, that brings us to the end of this particular edition of Ask Profit. As always, as I mentioned at the start, it's a pleasure to have you on the program. Viewers, I hope that this benefited you. Even if we weren't able to take your specific question, we've discussed a number of stocks, and there's a lot of advice that was dispensed over the course of the last half an hour. And you can use all of that as well. That brings us to the end of this particular edition of Ask Profit. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and are the flavor of the season. But before that, quick look at the markets, and at the moment we are looking at some advances for the benchmarks. Sure, the Nifty has advanced, and in fact the Nifty is trading near its day's highs. So a lot of impetus building towards Nifty moving back towards the mark of 22,200. On the other hand, it is the Bank Nifty which is underperforming by just one step behind, because we've seen it come off to a certain extent after, trading at day's highs, but it's in the green all the same. So essentially, the bulk of the strength on the Nifty at least is on account of Reliance Industries, which will be very evident for you when you consider the contributors at least as far as the constituents are concerned, you do see Reliance as the top contributor for the green on the Nifty. Maruti Suzuki, L&T and HDFC Bank, all of them up and about in trade, and all of them also doing what they can to provide those gains. On the losing end, we don't have too much to speak for. TCS and Nestle, along with something like a Britannia, sure, trading in the red, but all these are marginal losses, and they barely make a dent when it comes to the Nifty's move upwards. Even in terms of your broader markets, it's been fairly mixed. Sure, we do have the mid-cap index, which is moving largely in tandem with the benchmarks. And the small-cap index, that's where we are seeing a 1% gain coming through. A lot of changes have been taking place of late, and it's there is a little bit of rotation as well, because as we move into the final 2 days of this financial year, I reckon there will be some more churn among stocks. I reckon there will still be some amount of tax planning from an institutional and HNI point of view as well. When it comes to the broader markets as well, a lot of that changes can come through. So sure, markets can remain choppy perhaps for the next 1.5 sessions. Which is what is the final couple of days of this financial year. But as you can see on your screen, there are advances to declines to the tune of 4 is to about 3 odd. So it's a good day of trade. There's no doubt about that. And the fact that the key benchmark is once again advancing with good gains is something that you'd want to take with both hands. That said, let's take a look at all the stocks that we want to address in today's day of trade. Well, we talk about Reliance Industries. We've had yet another brokerage upgrade, putting up a good target up on the upside as well. Then, of course, we have ABB India once again reacting to the brokerages. Besides that, we have a long list of other counters which are also up and about, and something which is going to be up for discussion. So we're going to take all of these up with Sharmila Joshi of sharmilajoshi.com, who's joining us on the show right now. Sharmila, good afternoon. Thank you so much for joining in. Sharmila, before I come to you, let me go across to, let me go across to Anushi to give us an update on ABB and the latest here. Anushi.
So quite a field day for ABB India. The stock has sparked a new life high today. Well, this is on the back of a brokerage note that is from UBS, wherein they have retained the buy rating, increasing the price target to about 7,550, which showcases about a 26% upside if you have to compare it with yesterday's closing. A couple of reasons that they have cited out. First is the electrification and motion, which are the biggest segments, will continue to remain the key growth drivers for the business going forward. Another is the ABB is now pegged as they believe that it is pegged as the best play in the infrastructure space, with the ramp up of their low to medium volt electrification business. Again, currently it trails behind Schneider and Siemens, so there is a lot of room of growth to catch up over here. Now, coming to the export side of the business, which currently makes up to about 10% of the mix, that is supposed to drive better margins for the business, as now the focus shift to the more premium side. So with an improvement in the margin profile for the business as well, this supports the premium valuations that we are currently looking at. So all these couple of factors in place are the reasons why UBS retained the buy call rating that we are seeing today.
Right. Well, that's your view on ABB. Anushi, thank you so much for getting us that update. Sharmila, what's your stance on ABB? We started to see a little bit of a run in Siemens, in ABB, and handful of these, some of your relatively larger mid-cap capital goods companies. What's the way forward?
Yes, so I think that, as you rightly said, it's not just ABB, but I think the entire capital goods space is seeing some kind of a renewed interest to buying whatever, because whether it's Larsen, whether it's Siemens, everything is seeing some amount of interest coming in. And I think in most cases, rightly so. Like, for instance, if you remember in the case of Larsen, I think it was maybe 4 or 5 months back when they spoke of some mega orders in the Middle East that they were likely to get. And then I think they closed a couple of those. And by that, I mean, the order sizes, by mega orders, I mean the order sizes is much larger than the typical order size that L&T gets. And that, I think, clearly now puts them, sort of in a different lead trajectory, whatever. I think even where ABB is concerned, now I've held the stock for the longest time. So I have, some amount of historical perspective on this. So I may have had it, before that demerger with that what became Hitachi Energy Systems later happened. And, for the longest time, the stock has not really done much in terms of, the stock price movement, because post the split and, whatever, that whole sort of rationalization had to happen. But, off late, with the kind of order wins that we've seen, definitely there has been interest in the stock. I think the only caveat would be that going forward, this flow of orders has to continue, first of all. And secondly, in the last quarter, for instance, you saw that margins were perhaps a little lesser than what was anticipated. That is because, some of the orders are fairly long gestation in nature. So, for them to come to the bottom line takes that much longer. So having said all that, of course, it's a stock I'm positive on. As I said, I own it. I don't know about the target which the broking house is talking of. That seems a little far off, but I would continue to hold whatever I have.
Okay, continue to be positive, and I'm sure a lot of other investors, just like Sharmila, would have had ABB in their portfolios for a very, very long time, and I reckon the best idea is to perhaps hold on to these companies. Well, but let's move on and talk about yet another company which has a very high probability as being a part of your portfolio, or rather, and in general, an investor's part of the portfolio, and that's Reliance Industries. This one is up around 3.4%. And this time we have another broking note, and then this one is from Goldman Sachs, who has a buy rating on Reliance Industries and it's put a price target of 3,400 rupees per share. Reliance Industries is nearly at around 3,000 rupees per share currently, so about a 400 rupee upside from current market levels. Well, Goldman Sachs argues that return on cash invested to expand by as much as 270 odd basis points in FY27, just a little bit longer term view here, and they expect a 17% EBITDA CAGR over FY24 through FY27 and on a consolidated basis. Reliance Industries investments over the next 3 years to be less capex heavy, and we know about this because Reliance has already put in a bulk of the investments in several of its business over the last 2 years already. So I reckon the capex element will certainly come off, it'll moderate, and that can also, in conjunction with growth potentially lead to better operating margins going in. And of course, Reliance Industries tends to outperform during the expanding returns. That's what Goldman Sachs is saying in terms of an observation. And they say that they expect valuation discovery via stake sales in newer businesses. This is something that everyone is keeping an eye on, like a hawk too, because we know that Reliance Industries is not just one company, but it's 5 or 6 companies, 5 or 6 businesses rolled into one. And that, of course, unlocking and potential listing of these separate entities as well, some of them which are already on the anvil, could of course benefit Reliance Industries going forward. Sharmila, I reckon this is a no-brainer. Would you agree? Would you admit to this as well?
Absolutely, and I think that for me, I've not really read this report, but I think that this report for me becomes interesting because what you touched on briefly. I think like the broader investment thesis that we made for Reliance of late has been the fact that their new businesses offer a lot of value, and when you have a business like Reliance where they're generating so much cash, then it becomes very important to see what are the new businesses that they're getting into. Because that sort of gives you the direction as to where they think that which are the businesses that they think that growth is going to come into, and whether then they are able to deliver on that. And so far, whether it is telecom, whether it is retail, they've been able to. They've, of course, Geo Financials has been listed as a separate entity. But what makes this brokerage report particularly interesting is that they're saying that their older businesses, that's where the capex was going. That is now sort of coming to an end, and the growth can come from there, which I find very interesting because very honestly, where that business is concerned, there aren't too many parallels that you have in the Indian context. So, which is why these broking reports normally have some correlations that they're drawing to similar place companies overseas, and they have a better grip on understanding what that capex cycle has been and how that's likely to benefit you going ahead. So it's a very interesting report, and as you said, like a no-brainer. I think there would be, their sort of retail shareholder family is so large that I'm definitely a part of that.
Sure, sure, absolutely. Okay, so then we go on and talk about the depository, that is CDSL. Now, we do know that this morning we've had a very large bulk deal coming through. In fact, it was a block because we have Stanchart, who has, shelved off the balance 7.2% stake in CDSL. This particular trade took place at 1,670 rupees per share, which is still at a discount to the current market price after CDSL has already come off by 4.5%. CDSL is currently trading at around 1,708 rupees per share. You know, we try and guess as to why Stanchart would potentially want to exit. That said, I'm looking at the numbers, and in terms of revenue growth over the past few years, it's been a steady rise. What has been volatile, not necessarily on the decline, but what has been volatile are its operating margins, because of which its profitability also, shifts here and there. And sometimes it does see a decline, notwithstanding the continual growth, the continuous steady revenue growth that we've seen over the last few years. Now, while the margins may be volatile, the FY23 margins were still at around 57%, which had come off substantially by around well over 63, 64 odd percent. But remember that 2 years preceding that, the margins were around 42%. So I reckon that a lot of this depends on the mix of services that CDSL has to offer, and that perhaps gives you an idea on the kind of margins. However, on the other hand, you do see steady growth coming here. So I'm sure that there will be a handful of institutions who would have lapped up and bought into CDSL, where we have Stanchart going ahead and selling it. But Sharmila, what's your stake, or rather, what's your call on CDSL and the prospects of it going forward?
A very interesting list of companies we have today, because I think that other than CDSL, we had another very interesting company, Angel One. Why I'm sort of talking of Angel One along with CDSL is that at the end of the day, what you're really talking of is, to one extent, is the business that financial markets offer these companies. And Angel One is, of course, more of pure play broking, whereas CDSL is more depository, and they also have insurance depository and various slew of other products in that space. But I think the underlying business is so strong. I mean, in the sense that because we are the kind of growth that we are seeing in India for both capital markets as general financialization of assets, beg your pardon. So, I think that's the interesting bit for me. So I don't, as you said, we can only guess the reasons why Stanchart has sold their entire stake, and it's a fairly large stake, and it was at a lower price. So I think the stress will be there on the stock price. But having said all that, I think that I completely agree with you in terms of the kind of visibility their business has going ahead, and that their revenue growth will continue to be strong. Let's see how they manage the sort of the margins side of business. But having said all that, I think you should allow this stock to settle at whatever price, because when you have such a large block trade that happens, you need to allow some time. But after that, I think this is definitely a stock that you should be looking at.
Okay, since Sharmila, you've spoken about Angel One, I'm going to bring that forward and talk about that first before we address Coal India. Now, of course, Angel One is also in the news today because it set its floor price for its QIP at around 2,555 rupees per share, which is, of course, still at a discount to the current market price. And it just so happens that Angel One has, in fact, advanced to around 2,875. But remember that Angel One, at one point in time, about a few weeks to a few months ago, used to trade at somewhere around 3,400 rupees per share. So we've certainly seen that correction come in. And that would, in fact, lead to the question of whether or not, at this point in time, there is some value. Angel One is continuing to spend on its technology. And that it has, and from the kind of feedback that we get from viewers, that it is evident in terms of the platform that it has or it is trying to build in order to compete with the likes of Zerodha and Grow. And of course, that said, the valuations will always be in focus. Now, I'm looking at trailing 12 months and its valuation stand around 25, 30 times, depending on how you want to see things. And if you look at forward, price to earnings, of course, that still comes to around 25 times. Is this a reasonable valuation considering the kind of growth that Angel One is expected to move at? Sharmila, what's your take on it? Also, is there an alternative to Angel One in the broking space if there's anything else on your radar?
So, such an interesting juxtaposition, because on one hand, you had somebody selling a stake, and here you have a company which is actually raising funds so that they can use it for future expansion. And both, to my mind, in a way, are related to financial markets in a very big way. Having said all that, of course, as we said, Angel One is a broker. I mean, they are offering you a broking platform, and they are in a very competitive environment. But they have totally reimagined themselves. And as you rightly said, the kind of platform that they built, the kind of continuous investment that it requires, because you have a number of investors joining in. And if you look at that data that comes from Angel One, that is certainly very satisfying, where you have new investors joining in every month, and that data is playing out well for them. Also, I think that if markets continue to be volatile, that also will play out well for them. So all things said, I think this whoever the investors in this QIP are, I'm sure they'll make money going ahead. Once again, you need to allow some time for this sort of price to settle, because now that you raise money, you also need. I also have a feeling that when the stock corrected, it was because they had said that they might be requiring money to for some acquisition, which market had not particularly liked. But now they've said I think now they said it is more for meeting funding requirements and expansion, etc. So I think market has taken that way. So let's see how the stock price behaves over the next couple of weeks. But once again, I think a stock that you should definitely have on your radar. And I think you could look at other broking options, to answer your question. But I think Angel One is right up there, really, in terms of preference.
Sure. At least in the listed space, it certainly is, or rather seems to have an edge. And of course, the other competitor in the broking space was ICICI Securities, but that's eventually going to merge into ICICI Bank. So that option also moves out of the way. But let's shift and talk about the commodity space, the coal space specifically. And we have Coal India with yet another broking note this morning, when I'm going to say no more and bring in my colleague Varsha to talk to us about that. Varsha.
Well, thanks for that. So yes, Citi has a neutral rating on Coal India with a target price of rupees 430. Now the key negative catalyst here is that it expects disappointing e-auction price trends in fourth quarter. Now according to Ministry of Coal, Coal India's e-auction premium to FSA price was 39% in Feb 24, which was lowest since July 21. Now there's an inverse relationship between e-auction volumes and a premium. So looking at the past, Citi thinks that e-auction premium could fall below the levels which were seen during Jan and mid-24, and Citi has incorporated e-auction volume at 70 metric tons for FY25. Also, it expects 10% change in e-auction volume to affect EPS by almost 2.3%. Now, key downside risk that could push the stock below target price includes lower volumes on weaker power demand than unrelated investments and also lower prices, while the risk or the things that could push the stock above target price includes higher volumes and realizations. So this is all we got from Citi on Coal India, but the key negative catalyst here is that it expects disappointing e-auction price towards quarter 4.
All right, Varsha, thank you so much for getting us the latest broking note on Coal India as well. Sharmila, your take on this one? I reckon that usually investors use this one as a dividend play more than a capital appreciation play. But how are you looking at things when it comes to Coal India?
That was the first thought that came to my mind, that what is its dividend yield at this price? Because precisely, I think for retail investors, if there is one stock where dividend yields are good, it's Coal India. And that's one, I think one very safe sort of stock that you can look at, because their dividend yield over the last many years has been in this, I think it's currently 5.5, so it's been in that 5.56 kind of range. And overall, I think that the only negative I find really more than all this e-auction and all that is that the fact that valuations look a little high. especially when you're talking of a commodity play. But I honestly don't really think that, I mean, from all the data, other data points that we have, the power demand continues to be strong. So maybe there could be a blip because of lower e-auction prices. But I think that net, I would be sort of neutral on Coal India more because of valuation than any other reason. And as I said, for retail, it's always a great stock to be in if dividend plays dividend yield is what you would like to be invested in.
Okay, all right, Shamila, stay with us. We slip into another break, and on the other side, we talk about the balance of stocks. Back in just a bit. Stay tuned in.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market
Welcome back to Hot Money. The final stock we have on our list today is Maruti Suzuki. It is making a life high, and for good reason, that we are looking at a change in the volumes trend that we've seen over the last few months, and the expectation is that once it comes out with its EV play, that is something which can also perhaps boost volumes for Maruti Suzuki going forward. Currently looking at a substantially high value of 12,600 rupees per share, and slightly over that in fact. Sharmila, I reckon that you wouldn't want to recommend investors to perhaps go and make new investments here. But if you were an old investor, would you add to Maruti Suzuki at this point in time?
Oh, probably not. But, I think that definitely a good stock that you should continue to hold. And yes, I think for all the reasons that you mentioned, I think at any point in time, any month when you see the passenger vehicles data for the month, and you see the top 10 cars, I think out of the top 10 cars, at least 6 will be Maruti products. So that's the kind of board that they still continue to have on the passenger vehicle market. Having said that, I think, the other auto plays are also interesting in terms of the kind of offerings they have, as well as their valuation, whether it is a Mahindra or a Tata Motors, both different sort of stories going for them. But perhaps to my mind, they look a little more interesting than Maruti at this point in time. So I wouldn't put fresh money, but definitely it's a great stock, and if those who have it should continue to stay invested.
Okay, Shamila, on that note, taking a moment to thank you for joining us and taking us through your views on the various stocks and sectors that we've spoken about. A very quick look at how things are panning out in the markets, and we've not seen too much change over the course of the last half an hour. Sure, the Nifty continues to hold on to the life high, not life highs, days highs as we speak. It hasn't really budged. There has been a little bit of volatility in the Bank Nifty on an intraday basis. It's moved back below the mark of 46,800, and because it's the options expiry, I reckon that over the last 1 odd hour of trade, a lot of activity has happened around 46,800. I reckon that more calls around the 46,800 strike have been sold as compared to puts. But you never know, and as the final hour of trade will once again likely bring you some sharper moves, considering that is what we've seen at least in the first half of the session. There's no guarantee of anything at all, because you never know as to the kind of intensity with which some of your larger hands come in and play, especially your month-end expiries. It's always a challenge, and it's always a little bit of a guess as to how things could eventually close. But that is all that we have for this edition of Hot Money. But don't go anywhere. On the other side, plenty more lined up. Stay tuned to NDTV Profit.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Profit. I am Mahima Vachrajani. Well, commodity prices have seen a steep increase year-on-year basis. Palm oil has rallied very steeply because of strong exports and Indonesian policy worry. Well, cocoa hits a new record today, and the concerns are because of overhang supply shortages. Well, wheat also hit a 3-week high, and this is because of worries of over Black Sea supply. Sugar prices have increased over 10.8% year-on-year. To further discuss about this commodity price inflation and how it is affecting the entire consumption space and industry overall, we have with us Mr. Mayank Shah, Senior Category Head of Parle Products. How are you doing, sir?
Fine, I'm sure.
Yeah. So my first question to you is that I really want to understand that how bad is this commodity inflation overall, and how badly has it affected the industry?
So if we talk about the current inflation, I think it's very concerning. particularly, three ingredients which are causing, trouble to marketeers. Part of it, I think, you just mentioned. Cocoa, I think that's one big ingredient when you talk about, chocolate varieties or chocolate biscuit varieties. So that is at a record high. It's at an all-time high of about 9,000 US dollars per ton. This used to be somewhere around 3,000 US dollars if we are talking about last June, July. So in a span of, let's say, just about, 9-10 months, we are seeing almost a 3x increase in the prices of cocoa and cocoa components. So that's, I think, one big concern that most marketeers have. Followed by sugar. Sugar almost, 15% high compared to what it was last year, same time. And if we talk about wheat flour is up about 10% compared to last year. So all those three put together, they form a significant portion of most processed food inputs. And given that we are seeing, prices of these three commodities moving up, I think it's truly a concern. As far as edible oil is concerned, yes, I think it's higher compared to last, few months, but it's still much lower compared to last year. So I think that's a cushioning factor. If we look at last year rates of edible oil, if we talk about palm, they were somewhere around 190 to 195 rupees a kg. Compared to that, we are talking about 100 rupees per kg today. So I think, almost about 50% of what they were, although they are forming up, since last few days. But I think, that's one cushioning factor that we have currently, especially when you are considering key inputs which go into either biscuits or any other processed food.
Correct. Since you mentioned key inputs, I just wanted to understand that how badly do you think will this affect margins of all of these consumption companies? Like, do you think there's a ballpark figure, a range between which the margins will change?
Yeah, so I think it differs from variety to variety. So, for example, if you're talking about anything that has any of the cocoa components, be it let's say cocoa butter or chocolate chips or cocoa mass, then they are prone to a higher pain compared to, or a higher erosion of margin compared to probably the products which may not be having any of the cocoa products, because that's the one which has seen the steepest increase among all the input key inputs. So to my mind, I think almost all chocolate companies or companies which have a major share in chocolate biscuits, would be seeing some sort of erosion and margins as a result of that. In fact, as we speak, and as we see the kind of price hike that has happened, or input cost hike that has happened, the worst is still to come, because what happens with most players is they are covered with forwards. So, and most forwards are available till about June, July, as in most players are covered till June, July. Post June, July, you will see a significant increase in the MRPs or consumer prices of these products. Currently, because most companies have hedged their positions, they are into forwards. I think till June, July, you may not see major problem. But looking at the crop failures and diseases, in cocoa crops in West Africa, we are not really expecting great output coming out from there. There's also a little bit of hoarding, I guess, that's happening. So all put together, I think prices are high, and the impact of the same would be realized by consumers post June, July. So our understanding is that post June, July, you will see a significant increase in prices of chocolate and chocolate products. So be it chocolates themselves, or be it any of the products which are using any of the chocolate components, including chocolate chips, so biscuits or cocoa mass, so even confectionery which might be using chocolate components or cocoa powder and stuff like that,
Right.
would really be affected.
Right. So, from what I understand is that from Q2 FY25, the companies will see the pain coming in, and as customers, we as customers will also, be feeling the pain. Right. So, I wanted to understand that, this inflation has been playing its role since the past 2 years, and we've seen that it has affected the mass consumption overall. And because of this, we've always talked about, when it comes to consumption and FMCG play, there's always an urban versus rural mix. And rural has always, the demand has always been subdued. What are the current trends that you are witnessing overall in the industry?
Yeah, so I think that's a very interesting question. Mahima, the way we look at it is that we did see, some sort of a slowdown in last 1.5, 2 years in rural, but we also need to keep in mind that that was on a significant growth for continuous 2 years in rural. So if you talk about the first year of lockdown and the second year of lockdown, rural was relatively less affected compared to urban, given the population density. And there was less disruption in business in rural. And if you look at the growth, in fact, food products were growing really well during lockdown because of pantry loading, because of speculative buying, and people being at home, higher snacking. During that particular time, most food categories did very well. And the growth primarily came in from rural. So a high double-digit growth. So if I'm talking about, certain categories like biscuits and all, almost about, 25-30% growth was coming from rural. And urban was only growing at about 8 to 10%, not more than that. So on such a high growth for 2 years, we are talking about that high base effect which kicked in last 2 years. And we saw, some moderation in growth or demand in rural. However, there were other reasons as well. Erratic monsoon was one of them. Last year, if you look at monsoon, it was erratic. Initially, it was really good. I mean, July was great, but August, was a spoiler. September, there was some revival, but not across India. And states like UP and Bihar, which constitute a major portion of rural India, were badly affected. So there were other factors as well. But, that slowdown in rural primarily was because of that.
Right.
This year, if we talk about the Rabi crop, which is currently getting harvested, there was a record acreage and the crop is expected to be bumper. Now, if that happens, we'll see a significant revival in rural growth. So concerns of inflation remain. But if we see, good crop, good harvest coming across and good yields coming across this Rabi season, we may not see such a issue or a major issue as far as rural demand is concerned.
Right. And also, Mr. Shah, I wanted to understand that there has always been this debate, that the regional players, that are not maybe branded, are probably stealing the market shares of all of these, large FMCG players. What is the trend that you're observing here?
Yeah, so that is a fact. There are two reasons behind it. During lockdown and post-lockdown, what we were just discussing, very high inflation. If you look at last year, inflation was, unprecedented. So the edible oil that we are talking about was at all-time high. Sugar was high, wheat was high, all of them were high. And I think most companies took a price hike to the tune of almost about 25 to 30%. Of course, in a staggered manner, it was phased price hike. And, while bigger companies are better placed to tackle this kind of inflation because, they have forward buying happening, they have forward contracts and stuff like that, they also have economies of scale. Smaller players are not really well placed to tackle inflationary situation. So most small players post-COVID were struggling and it was a question of their survival. So when input costs went down initially this year, I think they came back with vengeance. They went all out, and it was a question of their survival. So, they gave great offers. They gave, deep discounts. As a result of which, it became really difficult for major players or bigger players to continue with their prices. And I think, most big players took decision of either giving some kind of value, added value in terms of promotions or stuff like that, or some kind of price or even correction in MRPs. So I think, almost every player did that. Every big player did that to ensure that, they sustain their shares in the market. So it's a difficult situation, as you rightly said. I think, given that in the initial part of this year, we saw input costs going down, margins were better, but they were not sustainable given smaller players were, offering deep discounts, or they were offering much better offerings in terms of value, higher weight or higher grammage in bags. So given that, I think, bigger players were, forced to bring down the prices. They were, and it's not just smaller players. I think even competition within big players, I think it's a, perfectly competitive market. You cannot make super normal profits on categories like, processed food and all. So I think that was one of the reasons why, most companies took price correctives or price corrections. And I think smaller players were, or they played an instrumental role.
Right. Right. Well, this was actually my next question to you. You've already answered that. Well, thank you so much for speaking with us at NDTV Profit, Mr. Shah.
Pleasure talking to you, Mahima.
Thank you so much.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade. The Anup Engineering is a manufacturer of process equipments like heat exchangers, vessels, reactors, columns, and other things. Recently, they have announced an acquisition. They've announced some order flows coming in, and so much to talk about to Puneet Lalbhai as he joins in to try and tell us what is the growth landscape looking like for a business which maybe you could argue, Puneet, is still, if not in its infancy, then it's still in its earlier days, because it's not a very large business, but it's set up for maybe some strong things if analysts are to be believed. Could you describe in your own words, how do you see the next 2-3 years for the Anup Engineering?
Hi, it's a pleasure to be here. Very good question. I think the important thing to note is that we are in a very strong capex cycle as far as this industry is concerned. So you're right, it's a small business. We should be closing upwards of 500 crores this year. But I think we are poised for rapid growth. We've been guiding the market that we'll be growing for the next 4-5 years at 25% plus. And that is a reflection of the state of the industry, both domestically and abroad. And the demand is predominantly being driven by petrochemicals and oil and gas today, and also some strong demand in some renewable energy sectors such as green and blue hydrogen. So we see energy as playing a big role in the short term, oil and gas, and in the longer term, some of the more renewable forms. But the capex cycle is strong, and we are excited about future prospects.
Can you tell us, so is this more a return to demand from sectors which maybe, say, oil and gas was a bit dormant until recently? Or is it that you've introduced some product segments which are now catering not just to the erstwhile energy segment, but the upcoming or the longer term energy segment, if I can use that term, which is the renewables side. And is that what is giving you the confidence for this kind of growth for the next 4 or 5 years, or maybe more?
So there are many things that goes into why, we are confident. I think the topmost one amongst them is our own performance and growth. Initially, we were very small, but now we've acquired marquee customers. We have a very, very good on-time delivery record. We have a great number of repeat and happy customers. And we are also at the same time in a very strong capex cycle that is looking strong for the next 3 to 4 years is what we all feel. So given that we have grown both in size and capability, that our track record has been excellent, and that the industry itself is in a growth phase, that's what's leading to the confidence.
Okay. So in order to live up to this kind of growth ambition that you have, would it happen through organic order flows in, or would you, like the way you've done with Mabel, and I hope the pronunciation is correct, but the way you've done with Mabel, you will have to resort to the inorganic route as well?
No, I think it will be a combination of both. So we've also created a lot of capacity. As of last year, we brought on stream our second greenfield facility at Kheda, which is an absolutely world-class facility. And phase one is in its last stages of investment. So it should be complete around the April-May kind of time horizon. And that facility should give us 200 crore plus turnover. Our existing order is good for 550 to 600. And then the rest will come from acquisitions. Mabel currently is around the 50 crore mark. We should be 60 plus next year at Mabel. And the overall potential at Mabel is to easily cross 100 and get towards that 200 figure in the medium term. So the existing capacity itself has a lot of headroom to grow. And at the same time, we'll be considering all opportunities. If an interesting opportunity comes along, we have a very strong cash position, good cash inflows, very strong order book for next year, and a good capex cycle to sort of give us some tailwinds. All of this put together gives us a confidence of growth, and it will be a combination of inorganic and organic.
So, okay, a couple of things. One, before I get to the export versus domestic side and what are you doing globally versus locally, just one quick word. Is the uptick in raw material costs recently a bit of a worry, or would most of these things be passed through? And part two of my question, therefore, will be that you are circa 20-22% EBITDA, if I'm not wrong, EBITDA margins. Sometime post-COVID, you've also clocked in northwards of 25-27% as well. So as you scale up, as the revenues inch up, and as capex picks up and reflects more in your order book, would the new normal be 20-22%, or could it be higher on the EBITDA margin front, that is?
So I would say that the new normal would continue to be 20-22% for two reasons. One, we are increasing the sort of product complexity. And by product complexity, the main driver is more and more critical and exotic metallurgy. When that happens, the raw material as a component of the overall cost goes up. But the return per square meter or under the crane, that will continuously go up. So as the product mix shifts towards higher metallurgy, we expect EBITDAs to sort of come down somewhat, but overall profitability in terms of the return on effort, return on activity, return on square footage, that goes up.
Oh, so sorry, you're saying that while revenues, I mean, or two ways, I mean, you can slice and dice either way, revenues going up, but margins coming down, or that margins might come off from 2022 to maybe lower teens or maybe mid-teens, but you will still see revenue growth.
No. So we will maintain the margins at current levels, despite the product mix becoming more complex towards exotic metallurgy. And we are able to do that because operating leverage is kicking in that you were mentioning.
Got it. Okay, fair call. Now, just the the global market versus the local market picture, Puneet, because you are winning global orders too, I presume. So what is the current revenue mix, local versus export or local versus global, as the case may be? And what is the current order book, right, in terms of local versus global?
So the current year, we should be at around 25% exports. However, the situation is very heavily indexed towards exports going into the next year. So next year, we expect the export percentage to be closer to 50% on a 700-ish crore opening order book.
Okay. And just in terms of conversations, I mean, whether through the Mabel acquisition, some other, or I mean, it might be an ideal mix for you to be able to attract customers that you might not have been able to thus far, and so on and so forth. Tell us what's the kind of order flow that you believe will come in. I speak to a lot of companies who are talking very highly about the kind of response that strong engineering companies in India are getting in the Middle Eastern geography.
Absolutely. So I think, one has to understand that our product cycle is anywhere between 12 to 18 months. So in a sense, next year is already locked in terms of, the capacity that we have created. We are almost going to be at full capacity. We have already confirmed orders of 700 crores plus, which will be a 25% growth from this year. Of course, we have to execute, which we've shown a very good track record of in the last few years. So that's where we stand on the opening order book. The two major geographies for us, as you rightly mentioned, one is the Middle East, and the second is North America, closely followed by Europe. So these are the three places where our products are being exported to. As far as Mabel is concerned, there are four things that we get through the Mabel acquisition. First is an expansion of product portfolio. So Mabel does products that we currently don't have in our basket. Products like silos, product like storage tanks, site fabricated equipment, all of that will come into our portfolio with Mabel. The second thing we get is proximity to our customers in South India. We have some of our very strategic customers down south, and being close to them is a big advantage, especially big and bulky equipment. Transporting them is a huge cost, so being closer to your customers is an advantage. And third, we will also have the capability of more engineering bandwidth that comes with Mabel. And fourth is capacity expansion. Mabel will be about 10 to 12% of our overall capacity going forward. And there is room to expand at Mabel as well. Today, only 6,000 square meters out of the 20,000 square meters possible has been built there. So we should be able to grow at that location as well.
Okay. My final question. What's the visibility like? 700 crores gives you the ability to grow at 20-25%, which is fine. But what's the order inflow visibility that you may have based on conversations that you guys are having with your clients for, let's say, FY25?
So it's looking very good. It's looking quite good. So our target would be to build up a similar type of growth number in terms of building up the order book for the year after during this year. So currently, a lot of projects are being announced. The capex cycle is robust, so we are pretty confident that we should fare well going forward.
So sorry, and I'll just wrap up the interview with this. Is this the normal book-to-bill ratio that you would typically operate at, or could it in your business, or could it be actually higher as well?
No, so I think it's important to maintain your on-time close to 100% in this business. And that's what's given us the ability to move up in terms of complexity, in terms of metallurgy, in terms of the level of trust we enjoy with the customers. So your growth has to stay in very closely in pace with the capacities you build. And so we are currently doing that, very, very precisely and comfortably. So we've built the new facility at Kheda. That facility has started operating at the right levels of efficiency. Q3 and Q4 met the dispatch targets from the new location. And we are in the final stages of completing the full phase 1, which is 2 bays at Kheda that should give us 200 crores. So that matching has to happen. And the investments and the order inflow have been planned to be able to grow at this 25%, hopefully if things support at 30%. So hope that answers the question.
It does. Thanks so much, Puneet. And all the best for the quarters ahead. Much appreciate you speaking to us today.
Pleasure. Thank you.
And viewers, that's the view from Anup Engineering. Thanks so much for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
Benchmarks trade higher with the Sensex soaring over 500 points. Nifty breaches 22,100 levels while the broader markets continue to outperform. All sectors trade in the green barring FMCG. Nifty Realty and Oil and Gas lead the gains while Nifty Auto also advances. La Nina is set to return with multiple weather agencies predicting above normal rainfall this monsoon season already. hearing in Arvind Kejriwal's liquor scam case is currently underway in the Delhi High Court. Delhi Assembly has been adjourned till April 1st after AAP MLA's staged protest. Hello and welcome. You're watching Market IQ and I am Pallavi Nahata. Now, we have a lot lined up on today's show for you, but before that, it's time for a very quick markets check. It's no doubt a good day of trade in the markets. The Nifty 50 and the Sensex well in the green. The Sensex is almost close to up by about 600 points. The Nifty 50 safe above the 22,000 mark, up by almost about 0.75%. And not too far from the 22,200 mark. Let's have a look at some of the key constituents that are leading the gains in the Nifty 50 today. RIL, of course, right up there at the top. It's in the green, up by almost over 3.5%. Maruti Suzuki, Bajaj Auto, Adani Ports, Eicher, all trading up by well over 1.5%. What's not performing well is Britannia. The stock is down by about 1.5%. Nestle too down by a little over 1%. But as you can see, clearly markets in favor of the bulls today. Let's pull up the advances and declines ratio as well. But as you can see, the gainers are leading by a considerable gain, while the contributors to the losers are not so many. And there again, advances almost 1,166 in the green stocks, while the declines are at about 847. So clearly a good broad-based day of gains in the markets. In cues with that, most sectors too trading in the green. The Nifty oil and gas up by about over 1.5%. The Nifty infra, Nifty energy, Nifty auto all up by well over 1%. What's not performing well is just Nifty FMCG. That's down, but just by about 0.25%. Broader markets too actually, pretty much in line with how we're looking at the benchmark indices. The Nifty mid-cap 150 is up by over 0.5%. The Nifty small-cap 250 performing even better. That's up by over 1%. Let's look at some of the contributors at the Nifty mid-caps as well. What's performing well there? Well, among the gainers, we have, actually, let's look at the losers first. Among those, we have PB Fintech, Crompton, that's down. Both stocks down by over 1.5%. But of course, here again, the gainers continue to outperform. Tata Chemicals is up by over 4.5%. Indian Hotels, that's up by about 4%. Paytm up by 4% almost in today's day of trade. Motherson Wiring also up by about 3% or so. So essentially a good day for the markets, and not just for the benchmark indices, but for the markets at large today. Of course, it remains to see how we close this very short truncated week. Considering that we're nearing the end of the fiscal year, there is a possibility that markets will remain a little choppy. So far, it's looking good though. Let's take you through some stocks making headlines today. In its latest note, UBS has raised the target price of ABB India on the back of healthy growth expectations. My colleague Anushi joins us to give us more details. Hi Anushi.
So quite a field day for ABB India. The stock has sparked a new life high today. Well, this is on the back of a brokerage note that is from UBS, wherein they have retained the buy rating, increasing the price target to about 7,550, which showcases about a 26% upside if you have to compare it with yesterday's closing. A couple of reasons that they have cited out. First is the electrification and motion, which are the biggest segments, will continue to remain the key growth drivers for the business going forward. Another is the ABB is now pegged as as they believe that it is pegged as the best play in the infrastructure space with the ramp up of their low to medium volt electrification business. Again, currently it trails behind Schneider and Cement, so there is a lot of room of growth to catch up over here. Now, coming to the export side of the business, which currently makes up to about 10% of the mix, that is supposed to drive better margins for the business as now the focus shift to the more premium side. So with an improvement in the margin profile for the business as well, this supports the premium valuations that we are currently looking at. So all these couple of factors in place are the reasons why UBS retained the buy call rating that we are seeing today.
Now, moving on, Sameer Hiremat and Pallavi Swadi, grandchildren of Neelkant Kalyani, a pioneer in the forging industry, have taken legal action against their uncle and Bharat Forge chairman, Baba Kalyani. What is the feud all about? Charu joins us to tell us more on that. Hi, Charu.
Hi, Pallavi. So, as you said, Sameer Hiremat and Pallavi Swadi, who are the grandchildren of Neelkant Kalyani, have filed a case for division of their family assets in a civil court in Pune against their uncle, Baba Kalyani. Now, what they are asking for from the court is not only just their proper share, they are also saying that the defendants whom the case is against should also disclose the number of assets the family owns. So basically, they are saying that long back, almost all these new businesses were started with the undivided family wealth. And from that, a lot of wealth has been additionally accumulated. So a list of all these things, all these material wealth, businesses, wealth, riches, everything should be disclosed. And then based on that disclosed information, a proper division of assets should take place. Now, what has happened is the petition also alleges that due to the management style of Baba Kalyani, the family felt that they have no other option but to approach the court for a rightful division of the assets. They have also said that they're scared and worried that since this case has started now, the people involved, including Baba Kalyani, might try to do something to the wealth that they have accumulated, or try to transfer it somewhere, or try to, mismanage it in some way. And that is why they have also asked the court to basically pass some sort of an interim direction to stop them from doing so. And also they have asked to appoint a receiver to basically manage all this wealth for a short period of time while the matter is pending. That's all we know for now. We'll keep you updated with any more updates.
Thank you, Charu. Now, in its latest note, Citi has maintained a neutral rating on Coal India. This is on the back of expectations of a disappointing e-auction price trends. Over to Varsha.
Well, thanks for that. So yes, Citi has a neutral rating on Coal India with a target price of rupees 430. Now the key negative catalyst here is that it expects disappointing e-auction price trends in fourth quarter. Now according to Ministry of Coal, Coal India's e-auction premium to FSA price was 39% in Feb 24, which was lowest since July 21. Now there's an inverse relationship between e-auction volumes and premium. So looking at the past, Citi thinks that e-auction premium could fall below the levels which were seen during Jan and mid-24, and Citi has incorporated e-auction volume at 70 metric tons for FY25. Also, it expects 10% change in e-auction volume to affect EPS by almost 2.3%. Now, key downside risk that could push the stock below target price includes lower volumes on weaker power demand than unrelated investments and also lower prices, while the risk or the things that could push the stock above target price includes higher volumes and realizations. So this is all we got from Citi on Coal India, but the key negative catalyst here is that it expects disappointing e-auction price towards quarter 4.
Okay, so the bottom line being that the e-auctions might not go particularly well. But moving on, L&T has announced a 7,500 crore rupee fundraise, and the CFO told NDTV Profit that this fundraise would help refinance maturing debt during FY25. My colleague Saloni joins us with more details. Saloni?
Right, Pallavi. So L&T yesterday announced that it's going to be raising about rupees 7,500 crore through issue of commercial borrowings or even NCDs. And this comes right after the company had bought back around rupees 10,000 crore worth of shares in September. So the question was exactly what is the company will be using the funds for. So we spoke to the L&T CFO and he told us that the fundraise will be used to refinance maturing debt during the financial year of 25, that is next financial year. And this will be done within the current overall debt to equity position of the company, which is at around 0.3:1. And it's going to be the same as what he said. Now, we also looked at some of the key numbers to understand where exactly, at least till last quarter, the numbers stand at. So the gross debt to equity ratio has actually risen in the December 2023 quarter to 1.23x from 1.13x in March of 2023, which was FY23. And the net debt equity ratio has also risen to 0.81x as of Q3 of FY24. Now talking about the total borrowing, the total debt which the group level has, that has also risen to about 1.2 lakh crore in Q3 versus 1.18 lakh crore during the March of 2023.
Thanks a lot for that, Saloni. Well, it's time to slip into a short break for now, but do stay tuned. We'll be back with the latest in the Arvind Kejriwal liquor case. Stay tuned for that.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome back. You're watching Market IQ on NDTV Profit. Now, cocoa prices have surged to new highs as the world faces a supply shortage. My colleague Sesha joins us with more details. Hi Sesha, what's happening with cocoa prices globally and what's the outlook? Is this some kind of a temporary blip, and if not, can we expect chocolates and products across to cost more over the next few months?
Absolutely. So historically high prices of cocoa, that is a key ingredient in chocolates, is impacting Mondelez, Nestle, Hershey and Parle alike. And the worst is that after having doubled in 2024, the prices are unlikely to come down as the International Cocoa Organization is expecting a wider deficit in supply this year compared to the last year. A whopping 3.74 lakh ton in supply deficit is probably the highest highest in the last 6 decades. So this is the primary reason for the poor supply because of poor harvest, in the key producing countries like Ivory Coast and Ghana. Now, growers such as Brazil and Ecuador, they are trying to increase production, but it will take years before they can provide relief to the global supplies. Now, companies, they generally have a hedging strategy to manage the price volatility, but if the prices continue to rise at unprecedented levels, they will have no option but to pass on the impact of higher raw material prices to consumers in order to offset the impact on their margins. It's not just cocoa, by the way. The prices of sugar, wheat are all inching up, and the companies are facing pressure on their margins. And as analysts say that the period of high gross margin phase is now over and the revenues are likely to come down. So as the price of the favorite indulgence is set to spike, chocolate lovers will have to dig a little deeper into their pockets the next time they go for a bar of chocolates or a box of truffles.
Okay, thanks a lot for that, Sesha. That's truly interesting. We're going to be watching out on what's happening on that front and how that's going to impact our desserts bills, but we'll continue to bring more on that. From corporates and what's happening in commodities to macro matters, India's current account deficit has now narrowed to 1.2% of the GDP in the third quarter. This came in last night, and India's current account deficit came in at $10.5 billion. That's at 1.2% of the GDP. This is for October to December quarter. It's lower than $11.4 billion, which is about 1.3% of the GDP, which is what we saw in Q2. The figures are also better than what we had seen in the corresponding quarter an year ago. I'm joined by Madhavi Arora, lead economist at MK Global, for more on this going forward. Madhavi, thank you so much for taking time out despite a patchy connection. We're glad we've managed to finally get you on. But going forward, you do expect a marginally positive current account balance for the ongoing quarter. And what's your full year outlook? Tell us a little bit more.
Sure. Thank you, Pallavi. So, we've been seeing consistent surprises on the trade front, especially from third quarter onwards, which is reflected in the better than expected current account deficit for the third quarter, which is moderately better than what we saw in the second quarter, where again we saw some surprises, some revisions on the upside. But that said, the third quarter specifically, what you've seen is that the goods trade deficit, even though widened, it was largely offset by, the show which was stolen by software and even non-software plus transfer remittances, basically. All of which basically means that, the growth slowdown which was expected in US and even the GCC nations has not really materialized, for our numbers at least. So again, I think the fourth quarter so far looks to be very healthy. If you look at the trade numbers for first and Jan and Feb, it appears that we are poised to see a mild surplus in current account in the fourth quarter, which means that, owing to the new play of, your services sector, which is led by non-IT services, you could see a good year for current account overall. We are tracking at this point 0.8% CAT to GDP ratio for FY24, which is on the, which probably will see a lower print also for all, if the March numbers are good. And next year also we're expecting that the rub-off of, the structural play in India's current account would also have impact in FY25, and FY25 CAT to GDP will, see the range of 1.1 to 1.2% owing to structurally improving external sector for us.
All right, so you've touched upon the improvement in the external front. We've seen fairly encouraging data across the board there, right? The FX reserves, though that might be a bit of a temporary blip given the swap deal of $5 billion, but the current account deficit, all in all, the external front, appears promising. The note we're ending on for this year as well as for FY25, would that be sort of the correct assessment?
Yeah, so the balance of payment, has remained in surplus in third quarter, and the fourth quarter also likely to be a surplus stage, which means for the year overall, we'll probably see the BOP, net BOP flows or net attrition of FX to the tune of around 40 billion plus, which is a very healthy number, given that beginning of the year, all of us were expecting a US slowdown, which did not necessarily play out. And, the risk assets remained healthy. We saw very massive FPI flows. We saw FPI flows in debt, which were, to the league of equity flows in the third quarter specifically, as market was, active FPI debt participants were sort of catching up with the fact that we will be joining the global index June onwards. So it's been a very healthy ride for us. I think next year you could see some moderation in foreign flows. There could be some volatility in risk assets as markets sort of reassess the Fed rate cut, quantum or even the timing of it. But I think net-net, because we will still have some structural flows coming to India or the one-off, which especially as we enter the JP Morgan index, we could still have a healthy FPI flows on net in FY25. But FDI seems to be a little wobbly story. Like this year, the FDI flows have been quite disappointing. For the whole year, we're expecting FDI flows to not exceed 13-14 billion, which is even less than half of what we saw last year. For us to really sustain the basic balance of payment, which is a structurally healthy balance of payment, I think it's important to have the stable flows in the form of FDI versus FPI, which could reverse as market, mood sort of changes globally. But net-net, I think next year also we are tracking balance of payment to be in surplus, but probably half of what we are seeing in FY24.
Okay, all right. Before I let you go, a very quick view on the rupee. What's the range you're looking at for next year? Very quickly.
A very tricky question, because rupee had not moved at all through the year, except for the last 3-4 trading days where we suddenly saw a jump in the rupee on account of domestic idiosyncrasies, which was led by, dollar shortage back home and also movement in DXY and CNH. I think we are in for a little difficult year overall. I don't think rupee will have a linear movement ahead. It should be, non-linear, given the fact that we'll be very closely watching the interplay of Fed rate cut repricing and China's survival strategy, which will mean that CNH could be a devalued currency, which will affect all the Asians, including INR. So I think for the year, it will be a difficult play. We don't think that dollar is going to lose its supremacy. And we are looking at, for the quarter at least, rupee to be ranging around 80 to 50 to 84 kind of range. Obviously, RBI being a more tactical play than most of us assume it to be, but it will be a little wobbly period versus the last 1 year where we saw limited volatility in the rupee.
Okay. Well, all right then. Thank you so much, Madhavi, for being able to take time out for this on short notice. We'll come back to you at a later time. But moving on, India has added more new billionaires than China. That's according to the Hurun Global Rich List for 2024. We also saw lesser drop-offs compared to the US and China. So what else is the list telling us? Mahima joins us with more details. Hi, Mahima.
Hi Pallavi, so as you rightly mentioned, Mumbai, to be specific, has overtaken Beijing to become Asia's billionaire capital. Well, India has beaten China in terms of new billionaires that were added in 2024, and Mukesh Ambani has, been added to the list of top 10 richest people in India. Now, if we talk about the list overall of the top 10 richest people in the world, well, Elon Musk stands at the first position. Then we have Jeff Bezos, and then Bernard Arnault, and then on the 10th position we have Mukesh Ambani, which is from India. In terms of biggest gainers, in terms of wealth, well, Mark Zuckerberg added around $90 billion, and Elon Musk added around $74 billion, and Mukesh Ambani and Gautam Adani, have a tie here. They added around $33 billion to their wealth. Now, in terms of India versus China, the number of entrants have been 271 for India and 814 for China. The new entrants in India are much more than that of China, around 94 and 55. And overall, if we see the sum of wealth that was added was around $1 trillion for India and 2.6 trillion for China. And if we talk about Mumbai versus Beijing, well, here also the new entrants surpassed Beijing, 92 for Mumbai and 91 for Beijing. And in terms of percentage of change of total wealth, well, 47% is for Mumbai, whereas Beijing is in negative 28%. And in terms of percentage of women, India has around 12% of billionaires, and well, Beijing has around 22%. The key findings include that around 3,279 billionaires in the world were up 5% and 167 from last year, and the total wealth was up around 9%. The sources of wealth include financial services, consumer goods, food and beverages, real estate. The year was good for media and entertainment, and the year was bad for healthcare, which lost around $75 billion. So this is the overall view of what the Hurun report says.
Thanks a lot for that, Mahima. Clearly, India on the global radar for the number of billionaires it now hosts as well, and appears to be a trend that's clearly not changing any time over the next few years too. But before we can let you go, we'll have a quick look at where the markets are at. Not much has changed. The Nifty 50 and the Sensex both continue to be very much in the green. They're both up. In case of the Nifty 50, it's up by almost about 0.75%, a little more than that actually. Still somewhere below the 22,200 mark. The Sensex continues to remain up by well over 500 points. Let's see if these gains rise further in the last 2 hours of trade. Among the key constituents, the RIL, of course, continues to be the large gainer leading the Nifty 50 in today's day of trade. Most sectors continue to be in the green, with FMCG continuing to lag. But that's all we have on this edition of the Market IQ. Stay tuned for more on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish
Hi, thanks so much for joining in. This is the Mutual Fund Show and I'm Alex Matthew. This show gets you actionable insight on everything mutual fund related. The strategies that we're talking about today, though, have beaten the benchmark quite consistently. In fact, several benchmarks quite consistently over multiple years, and possibly quite a few actively managed equity schemes as well. And that's particularly on a post-cost basis. But they're not widely adopted. We're going to talk about what these strategies are and whether you can adopt one of them or in fact a combination of 3 or 4 of them. And we're also going to talk about why they're not more popular, especially because they've consistently beaten the benchmark. Joining me to talk about it is Prateek Oswal, the head of passive funds at Motilal Oswal AMC. Prateek, thanks so much, as always, for taking the time. This isn't a new concept, and in fact, I recall a conversation several years back, before you even launched some of these strategies at Motilal Oswal, where you were talking about the potential for factor investing. So first, let's establish for those that are unfamiliar with factor investing, what is this all about? How do you explain this concept?
Hi, Alex. Thanks for inviting me. Looking forward to this conversation today. So, I think we spoke about factor investing a few years ago. I think we talked from the lens of, how important it's become, over the globe. If you look at the size of factor investing, it may not be very popular today in India, but if you look at the global landscape, after say the broad-based funds in the US, like the S&Ps or the Nasdaqs, the second biggest category in the world is actually factor investing. Approximately $4 to $5 trillion of wealth is currently being invested in factor funds. And obviously in India, it's been slow growth, but we see huge opportunity for this segment coming in over the next 4 to 5 years time. So that's essentially just a broad landscape of how large it is. But essentially what factor investing is basically, you're basically investing in a particular strategy. A lot of investors today who tend to buy stocks, tend to use certain filters. They tend to use filters like debt to equity or profit margin, or they tend to use which are grouped into the to the category called quality. Also, a lot of investors look at growth statistics, right? How has the stock price moved over the last 1 year, 2 years, 3 years. So if you look at a lot of these filters, today investors can actually buy this through factor investing. There are a lot of factor funds today which offer these strategies in the form of a simple plain vanilla index fund or an ETF. And essentially you can access these strategies that a lot of fund managers use through factor funds. And what we've seen in factor funds is that not only in India, but also globally, if you look at the 4 most popular factor funds, you have momentum, value, quality, and low volatility, which we can go into details. All 4 have outperformed their respective benchmarks over 4 to 5 decades. In India, obviously, factor investing is very early days. But if you look at the 4 indices, what we've seen is that all 4 of these popular indices, have all beaten the benchmarks thoroughly.
And that's the proof of the pudding, right? That's the proof of the pudding, which is that, on paper it looks well and good. But if you scroll back all the way for the last 15 years, and I see the graphic in front of me, if you're looking at a value strategy, it's given you what, 19.7% 15-year CAGR. CAGR, compounded annual growth rate. Something like a momentum has given you 23.4% as of the end of 2023. Similar return for quality, 23%. A low vol strategy has given you 21%. And a Nifty 200, which is a broader gauge than you would normally look at, which is still a broadly large cap, but it's broader than your Nifty 50. It's only given you 17% compounded annual growth rate. It's nothing to scoff at, nothing to sneeze at, but these factors have handily beaten the benchmark here. So let's talk about why they're not popular first, and we'll delve then into what you need to bear in mind as an investor. Prateek, you've been speaking about this, I guess, to a certain extent. You've been evangelizing this as well. You've been telling people about it. Why would you say that it's not as popular as it should be?
Even if you look at index funds ETFs, when I first started talking about index funds ETFs, even with on your shows, it was a very niche market. I think a lot of people, even though index is very well covered and researched and bought all over the world prior to 2018 or 19, not many people knew about it. So I think the lack of awareness is something which is a big factor towards why at least factor funds have not really gained ground. And we see now over the last couple of years that there is a lot more sort of action and also more interest coming in factor funds. So I think lack of awareness is a key thing. There's not a lot of products in the space in factor funds. Just 2 years ago, there were maybe 2 or 3 factor funds. Today, you have around maybe 15, 20 factor funds in the market. So I think it's a combination of, I think a lack of awareness and also obviously lack of funds in the space. The third reason I say is also because, a lot of investors tend to see factor funds as very complex. In the US, even though factor funds is the second biggest category, after broad-based funds, it's not really talked about because it's very advisor driven, so because it requires some level of expertise to retail investors to understand. So I think that's the one more reason, which obviously will happen as more and more education happens in the space.
Would it also be a factor of, and forgive the use of the word, of the fact that a lot of the products that are consumed in the mutual fund space currently, Prateek, are sold rather than bought, and it is about what the distributor community is selling. Is that also something to bear in mind?
I think that was the case about 5 or 6 years ago, but I think direct investing has grown exponentially, I would say, in India since maybe COVID. I think the amount of new investors coming in who are directly going out there and buying mutual funds is a huge component. I think even in our AMC, I think maybe a third of our flows come from direct investors. So I think there is obviously a higher component of direct investors coming in. But I do feel that, any fund that gets traction requires, I think some level of track record. And I think in factor funds specifically, there's not a lot of funds who have a track record of more than 3 years time. So I think as and when these funds turn 5, 7 years, that is when these funds will pop up on people's radars, and that is when they start investing in this. So I think it's more lack of track record is what I believe is the main reason, at least at this point.
Okay, and a lot of these strategies are only about 3 years old, but they have, even in that period, they've outperformed, haven't they?
Yes, they have. Yeah. So I think we launched them about 2 years ago. But yes, I think the strategy. So if you look at the index strategy, one obviously is the index performance, which goes back towards 15, 20 years. The second one is the actual fund performance, which is after the fund starts getting launched. So I think when it comes to index funds, I don't think the fund performance is as important because obviously it's going to replicate an index. So the track record is obviously a lot more important. But yes, I think from a customer lens, customers do like investing in products that have a minimum track record of 3 to 5 years time. So yes, I think these things will obviously currently the space is very empty. There's maybe about 2 or 3 funds, but now since there have been a lot of launches over the last couple of years, you see these things sort of picking up in the future.
Let's delve a little deeper into each of these strategies so my viewers can understand how to approach them, right? And then we'll possibly talk about combinations down the line as well. But let's start with value, which over the last 3 years, 21, 22, 23, has outperformed quite significantly. In 2023, it gave a return of 62.2% or thereabouts. What does this strategy entail, and why did it outperform in those 3 years?
Yeah, so it's very important to understand that these factor funds are passively managed funds. So there is no stock picking involved when it comes to choosing a value factor versus a lower factor. So the rules, these are all rules-based funds, and these rules are completely transparent. Unlike a lot of quantitative funds where the rule is hidden, investors who buy and end up buying these factor funds, are buying that underlying rule. So, for example, in the value fund, for example, the rule is you're essentially, selecting 30 stocks out of a universe of 200. So out of the Nifty 200 universe, you're essentially buying 30 stocks which are the cheapest in India. So cheapest in the sense of price to earnings, price to book. They use these two, factors to sort of select the stocks. So the reason why value has done well in the last 10 years, last 3 years at least, is because we've had a huge and value is one such factor which is the most tricky because I think it's one factor that does extremely well in short bursts of time. And I think last 3 years were that short burst of time which value's done well. But essentially, you're looking at the entire PSU rally that has happened over the last 3 years because of obviously they were cheap, but also obviously because they've had a huge turnaround in business models over the last 3 years. And also, I think that the government has put a lot of impetus towards improving them and professionalizing them and all of that. So I think the entire PSU rally has done wonders, for a lot of investors. And I think that has been captured really well in the value strategy because they tended to be the cheapest stocks 3 years ago, and they still are the cheapest stocks today, even after the entire sort of rally that happened in the last 3 years. So that has been a standout fund, I would say, in our portfolio. But what's funny is when we launched the fund in about 2 years ago, it was actually underperforming the benchmark for about 10 years.
Okay.
So when we had launched it, I think we had a lot of negative publicity back then. But then the idea was we want to keep building blocks for asset allocations. We want investors to choose whatever they fund they like in that category, and value is an important category globally, which is what the reason why we launched it. But again, very important factors are not strategies that consistently outperform every single year. And different factors work in different times. Value as a factor, as you said, works tremendously well in a recovery sort of a market, after a crash. So post-COVID, obviously, value's done well. Post-financial crisis, value did really well. Even early 2000s, when you had a small sort of, crash in 2013, value did very well. So I think these are the sort of time periods in value does very well.
Let's also talk about something that got some investor attention over the last couple of years, simply because of and particularly last year, simply because of the kind of outperformance it generated, right? Momentum as a strategy, and that's I looked at a graph as well that you pointed out, not graph, but a visual depiction of when these factors do well. Momentum does well in an upcycle, in a bull run, whereas low vol does well when it's sideways movement. Value does well when it's a recovery phase, as you pointed out. But how does momentum work, and why has it gained so much traction? As you pointed out, it's because people are seeing that there is a benefit to holding it.
Yeah, so momentum. It's an excellent factor. Honestly, if you look at the factor that has done the best globally, it has been momentum, not in India, but also in other geographies. And what's funny is it doesn't really work. I mean, it works in equities, but also it works in other asset classes.
Color coding,
and it's also one of the simplest strategies to invest in. So I think, and what momentum is, basically you're buying stocks and securities that have had recent price momentum. So the stocks which have done the best in terms of price performance in the last 6 to 12 months is what chosen in your portfolio. It's a very simple strategy, and I think that has done extremely well for a lot of investors over over many years. The reason why momentum is a very good strategy is because it does well in bull markets. In sort of trending markets, and because bull markets tend to be approximately most of your, if you look at the history of Indian capital markets, at least last 2 decades, bull markets are the longest out of the bull bear in recovery. So I think momentum as a strategy does very well in trending markets, and we are obviously in a trending market for many years now. So I think that's what it's done really well. I mean, psychologically, the reason why momentum does really well, and this is again interpretation, is that you tend to get into something which is trending before the crowd comes in. So I think if you look at most people today, they would buy into stocks that have already run up. Most people are looking at PSUs today. Most people are looking at stocks that have already been run up for about 2 years, whereas momentum comes in much early. and then also when momentum peaks, it's when you exit the stock.
Okay.
So I think that's why one reason to why it works really well. It really takes advantage of crowd psychology, which normally moves in much later than these strategies.
Okay, so we've got two more major factors to talk about, and also then possibly a combination, because there are, as I was looking at on the National Stock Exchange, there are now several combinations where you talk about alpha low vol, if I'm not mistaken, as one combination,
Yes.
but we'll talk about some more of those. We have to slip into a very quick break, Prateek. Do stay with us, and viewers, more on the other side, so do stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. We're talking about strategies, passive strategies in the mutual fund space that have handily beaten the benchmark, and in fact, one would argue are better over a longer period of time compared with several active strategies as well. We're in conversation with Prateek Oswal, the head of passive funds at Motilal Oswal AMC. Prateek, we covered value and we covered momentum. There are a couple more. There is quality and there is low vol. How would you describe these two factors, and what is the primary objective of them?
Yeah. So, I think these strategies are, I would say in terms of risk characteristics, fairly similar. You're essentially, so let's talk about low vol first. So actually low vol is the largest pot factor globally. I think it's the most popular one globally. If you look at global, I think, and the reason why it's popular is because, it's basically essentially buying a fund, which is essentially you're picking stocks based on the lowest price volatility. So essentially the most stable companies come into a low vol fund. So essentially non-cyclical companies, consumer, healthcare, these sort of companies are very popular in low vol fund. The reason why low vol does well is because it does extremely well in the bear market. When the market crash happens, money tends to move towards stocks that are extremely stable, business models are good, works well in bull and bear conditions. So I think low vol tends to fall a lot less. And returns are asymmetric. So on the way up, a low vol fund has to do a lot, has to do less well for it to outperform. So I think low vol is an extremely good strategy for anyone looking at a very stable fund in the portfolio, very good balance sheets, business models. So that's low vol. The fourth one is quality. And this factor is again a little bit subjective because it looks at the Nifty 200 universe and selects the 30 companies that have the best quality. And quality is not subjective; it's objective. They look at stuff like debt to equity ratio, return ratios, and also profitability. So based on these three, they would select the top 30 stocks in the Nifty 200 universe. Essentially, again, very similar, does extremely well in bear markets because you're essentially buying quality companies. What's important with these two factors is that they actually sort of underperform in bull markets. So investors who are looking to invest in these should expect that because I think quality companies tend to be priced well, or you really have the cyclical companies who are doing well in the bear market. But across market cycles, what we've seen is that these strategies are extremely stable and do really well in terms of outperformance.
Yeah, because downside protection as well, I think people don't give it enough credit. You're protecting the downside, and therefore over a period of time you're outperforming. Having said that, it's difficult to time the market, and that's evidenced by absolute veterans in the space saying that it's absolutely impossible to do. You're either lucky or you're incredibly gifted. And if you're neither of these two things and you still need to make a little bit of money in the markets, then you need to choose what your strategy is. Can you do that based on your interpretation of where the market is at, bull, bear, recovery, or is it better to look at combinations?
Yeah, so factors work in different market conditions, so that's something which we can say very confidently. But I think trying to time the market is something which is extremely tough. We don't recommend, or we don't ask investors to say that. I think you can use a combination of factors, or you can. So if you have a very long-term horizon, say maybe 5-7 years plus, then honestly it doesn't really matter. You go with the factor that you're most comfortable with in terms of investing it. You could look at a combination of factors. We've done a ton of analysis that's just looking at combining 2 or 3 factors and building a portfolio out of it. That tends to do really well across different market conditions. Some analysis I've also shared. The third is again to really look at what your risk profile is. So if you as an investor really feels that the markets are overvalued, or you want to invest in markets but you want to invest in something which will give you downside protection, then maybe a low vol does extremely well. Or if you're an investor who really wants to take advantage of the bull run, or you expect bull run to continue for the next 3-5 years, then a momentum can be a very good strategy. So I think based on your expectations and risk profile, you can look at you using factors in your portfolio. A lot of our investors are also using factors to minimize risk or maximize risk in your portfolio. For example, you have a very large allocation to a small cap fund, like a small cap sort of side of the market, and you want to lower your risk profile of your entire portfolio. Then just having a low vol fund or a quality fund, maybe a 20% allocation, can really pull down the entire portfolio, volatility in a very big way. So I think those are some of the ways in which customers are using it. But as you said, timing is something which is not only difficult, it's impossible, and I haven't met anyone who's done it consistently well. So I think having it as a strategic allocation in your portfolio makes a lot more sense for most investors.
So you've got vested interest, Prateek, because you're heading passive. But I've spoken to a lot of advisors, and they've said that while this should be part of your portfolio, they say that you should have a tactical allocation towards these factors rather than employing them whole hog. Two-part question here. One, if you're looking at these, and I've been talking about them beating the benchmark, but can you really compare some of these factor strategies with actively managed funds like to like? And also, where does it fit in your portfolio? Can you adopt just factors along with passive as a strategy?
Yeah, so I think that's a good question. So I think when it comes to factors, what's also important is factors tend to be mostly large caps, and I think if you ask a lot of advisors, the large caps tend to be the most popular when it comes to your broad-based index funds like Nifty 50 or Nifty 500. So, a lot of our advisors and distributors are using factors to plug in the large cap allocation where they feel, which factor will do well depending on their client risk appetite and all of that. So I think the large cap allocation, you could look at a combination of Nifty 500 and a factor fund that could really plug in your large cap allocation. And when you're looking at a mid and small cap, you're looking at actively managed strategies, which have done really well. We've seen, at least the statistics show, that mid and small is an area where there is a lot of opportunity to create a lot of wealth through active management. So I think that's how at least we would recommend this. I would say that yes, you could also look at it tactically as well. As I said, customers who are wary of the valuations or wary of the markets today could look at a much simpler say a low vol or a quality fund to make sure that they're invested but also they're protected in case markets fall. I think the beauty about factors is that you really know how it would react in a certain market condition, whereas you can't really say how a specific actively managed fund would do in a bear market or a bull market or a recovery market. So I think even though there is underperformance, you have a reason why it's there, and which is why I think it's much easier to hold on, or it's easier to have more conviction on factor funds during periods of difficulty.
So the reason I ask about that is, at least hypothetically, at least on paper, and this is all back tested, an equal allocation towards these 4 factors over the past 12 years has given me about, what, 18% or thereabouts CAGR over that period. The Nifty 50 has given me less, and in fact the small cap index is more or less at par with this from what I looked at. So there is a strong argument because it's giving you the best of both worlds. You're looking at upside potential in the form of your momentum, and downside protection in the form of low vol and quality. So why not adopt this whole hog?
Yeah, I would agree. I think by combining factors, you are essentially taking out that, not underperformance risk, but you're taking out the risk of it doing badly in different market conditions. You're essentially having a factor that works in every market condition. And by rebalancing it, say a yearly or every couple of years, you're ensuring that the risk levels in your portfolio are pretty much the same. So in fact, what we've seen is that by having an allocation towards 4 factors, all 4 equally weighted, there's no rebalancing required because the factors work in different market conditions. So you essentially can just run with it for a very, very long time. So I think we are obviously big proponents, of a strategy that combines factors. You're basically essentially taking out, periods of stress by having exposure towards multiple strategies. That does well in different market conditions. Also, what we've seen is that the factor strategies are extremely different from a lot of the actively managed strategies in terms of, stock selection, asset allocation. Most of the funds tend to be slightly more value or quality oriented, whereas by factors you can get access to different strategies like momentum and low vol, which may not be as prevalent in portfolios than you would. So I think it adds a very different component to your overall portfolio.
Absolutely. Prateek, thanks so much for taking the time and for explaining all of that to us. And viewers, do bear in mind, of course, that this is something that you have to look at from the lens of passive investing, and also the cost is benefit there, more or less comparable to passive investing costs. So the total expense ratio on some of these schemes that we've been talking about is around 0.4% for a direct scheme. And it is much higher for active, but there are proponents of active as well. We're not saying that active is not the strategy that you should employ. It's something to consider though, whether or not you should add something like this to your portfolio. If you've got questions for us, send them to us on that number that you're seeing on your screen right now, and do stay tuned. Lots more coming up over the course of the day, and this is NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dream?
Hello and welcome. This is Last Trades. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade on account of bulk deals, block deals and volumes. But before that, a quick look at the markets. At the moment, we are seeing gains for at least for the Nifty. It's trading near day's highs and it's maintained its gains through the course of the day. Well, as far as the Bank Nifty is concerned, and this one will be on focus on account of the weekly options expiry today, that is where we are seeing it continuing to consolidate around the mark of 46,800. And overall, in terms of how things are panning out for the Nifty, there isn't too much pressure from any of the stocks. We do have a good amount of contribution from a handful of large caps where we are seeing advances coming through. Reliance Industries leading the gains out there, followed by HDFC Bank and L&T as well. So a lot of that is well provided for the gains, about a 200 odd point gains, which is countered by about 20 odd points of losses coming through on account of marginal weakness for something like a TCS or an Infosys for that matter. In the broader markets, again, it's been a fairly even Stevens kind of sort of a day. The mid-cap index is up and about, currently trending in the green, and it is the same for the small-cap index too. If you consider some of the big movers in the broader markets, where we are tracking about 5% advance for something like a BSC. Let's pull that exchange up because it's seen a little bit of a rebound of late. The other one, which is also in focus, is Sangavi Movers. But we spoke to the management a few days ago, and it does seem like it's also up and about in trade, and that's up around 4.5% as well. The other one, which is now starting to pick up pace, is Intellect Design Arena. This is from the IT space. Again, some gains coming through, and from the jewelry sector, where we have Kalyan Jewelers, which is also making its mark today by advancing by nearly 3%. So these are some of the counters that we are watching out for. But moving on, also pull up something like a Kotak Mahindra Bank. It does seem like it's having a good day of trade, a 1% advance there. And well, along with something like an ICICI Bank and Axis Bank, is the reason why we are seeing some sort of a semblance of gains as far as the Bank Nifty is concerned. Though we do know that Bank Nifty is currently in the red and, well, marginally in the green. So it's something that we will keep an eye on as well. For now, of course, the Bank Nifty is a step behind the Nifty in terms of the way things are panning out. So that's something that we will be keeping an eye on. But from there on, let's talk about what are the stocks which will be in focus in this edition of Large Trades today. So we are going to talk about ABB. Of course, we've had a broken note on account of which we've seen very sharp advances for this one. Aster DM, on the other hand, is looking at a decline of around 7.5%. So we're going to talk about that as well. Gravita India, this one is the other silent mover, and that's up around 8% today as well. Sanofi is going to be in focus today. That's up around about 3%. And of course, CDSL, on the other hand, on account of a very large block, is something that we're going to talk about as well. So speaking of this, let's start by taking a look at ABB India. Now, this is the first of the ones that we wanted to address. It opened with gains of around 6%, and that's where it has maintained itself through the course of the day. Let's get in Anushi Vakhadia to tell us a little more about this one. Anushi.
Right, Agam. So if you look at this, ABB India is in particular focus today, about 7% of an intraday gain over year, while its volumes also were in the 2 times about its 30-day average. Now, a key catalyst for this kind of an up move that we are seeing today is the UPS retaining a buy call over here, implying with an implication of about 25% of a upside going forward with the business. Now, a couple of reasons that they have cited out. First is the electrification and the motion business, which is the company's largest revenue generating businesses that are expected to continue to drive the growth forward for the business. Next, they believe that ABB is the best play in the infrastructure space right now, especially if you look at its low, medium to voltage electrification portfolio business, in which it is currently dragging behind the Schneider and Siemens, but there is a lot of room and ample amount of opportunities for the business to grow in this particular arena. So that remains on watch out. Next is the export orders, which currently contribute to about 10% of a mix. So over here, the company's focus is more on the premium side, which is going to support its margins also going forward. So with the improvement in margins and a strong growth over here, that is another key beneficiary for the business that also support its valuations, which continue to remain on the steeper side for the business. Now, in the near-term concerns, if we look at, it's the short cycle order fatigue in the motion segment that we look at. Motion segment has seen a good amount of order trajectory over the past few times. So that remains a near-term concern. In fact, if you are just to look at the CAGR growth rate, also revenue CAGR growth of about 22% in the last 3 fiscals, while EBITDA has seen about a more than 75% upside. Even the company's order book has seen about a 30% growth in the last 3 fiscals. So overall, the company has seen about a healthy order book uptake value, and the motion and the electrification business continues to remain on watch list. If you have to look at the stock price movement for the company, about 89% of an upside in the past 1 year itself. So this is all on ABB and UBS take on how the business is expected to drive the performance of the company going forward.
Right, Anushi, thank you so much for getting us that update on ABB India. And it's an interesting one to keep an eye on, right? Because look at the kind of gains that it has made. And of course, it's currently trading at life highs. So along with ABB, Siemens is the other one from the cap goods space, which could potentially be, beneficiaries of another capex cycle moving in. But it's something to wait on to be, and I reckon that a lot of that will get resolved through perhaps the earnings as well as the election season. But we move on and talk about the next one, which is on our list, and that's Aster DM. Now, the stock has slipped over 7% in trade today. What could possibly be the reason here? Who is selling stake here? Let's get in Varsha to tell us a little more about this one. Varsha.
Hi Agam, so as you rightly said, so Aster DM slipped almost 7% in trade today after 49 million shares representing almost 10% stake in the company changed hands. Now, the buyers and sellers were not known immediately, but according to some media reports, private equity firm Olympus was looking to sell nearly 10% of its stake in the company through a block deal. Now, the total transaction according to the reports was at around 2,000 crores at 400 to 437 rupees per share. Now, this range gives an almost 8.5% discount to company's Tuesday's closing price. If one has to look at the shareholding pattern of the company, so a lot of FIIs have significant stake in the company. So starting with Olympus Capital Asia Investments, whereon as of December 2023 they hold almost 19%, followed by Rimco, which holds almost 10% stake. Even DIIs are also interested into this stock. So HDFC Small Cap Fund holds almost 4% stake. So this is all we got on Aster DM, and because of this block deal, the shares are down almost 7% today.
Well, thanks so much for that, Varsha. Of course, it is essentially the technical action which is leading to that substantial weakness as far as Aster DM is concerned. So do bear in mind about that. But we move on to another very interesting company, and that's called Gravita India, which is also in focus. Well, we have with us Mahima, who's going to give us an update on what's buzzing here. Mahima.
Right, Agam. So the stock did touch an intraday high of almost 13% in trade today, and the volumes are around 7.6 times its 30-day average. If we talk about the overall stock performance in the past 1 year, well, in the past 6 months, it's not performed very well. It's been up only around 9%, but in the past 1 year, the stock has been a multi-bagger. It's given return around 119%. But today the stock is buzzing because Kotak Securities has initiated a buy rating on Gravita. But before I talk about the note, a brief about what the company does. Well, the company is a market leader in India's emerging recycling industry. The key business segments of the company include lead recycling, aluminium recycling, and plastic recycling. They're also involved in recycling of used batteries, cable scrap, and other lead scrap. So moving on to what the note is saying, well, the Kotak Securities has initiated a buy rating with a target price of 1200 per share, which is basically an upside of almost 30% as per its closing price yesterday. The company, they say that the company's expansion plans into other segments give a strong visibility of growth and diversification. Gravitas is doing very good in comparison to its peers because the peers have inferior operating margins and lower growth visibility, and they forecast that the revenue will grow at a CAGR of 20% and PAT will grow at a CAGR of 22% in the next 3 years. And they also see a multi-year compounding growth for Gravitas. They've also talked about the overall industry. They're saying that there is a sunrise potential in the India's recycling industry, which is driven by the economy and decarbonization. The Indian recycling industry is still dominated by unorganized players. However, the rates in India are currently around 20%, which are much lower than that of compared to the western part of the world. And the evolving regulatory framework around this recycling industry will turn out to be a positive for a company like Gravita. So this is the overall view of what the brokerage is making out of Gravita.
Right. Mahima, thank you so much for getting us that view on Gravita India. Keep an eye on this one, of course, buzzing on volumes as suggested by Mahima. And from there on, we talk about CDSL. Now, this is the other one which is under pressure right now. This particular depository is where we have seen weakness on account of a large trade. Now remember, in the morning we had told you that Stanchart is likely to have sold its 7.2% stake, balanced stake in CDSL. That means it's completely exiting. And because of that, it has, well, we have yet to determine of whether or not Stanchart has in fact come through. But with all the indications that we do have, well, they were looking to sell that stakes, and we will have the finalities of these deals by the end of the day. But for now, volumes, because of this particular, well, block, have risen to the highest in 7 years that we've seen. In fact, this particular deal is expected to have taken place at around 1,672 rupees per share, which was anyways at some sort of a discount to current market price. Remember that even with a 5% decline on CDSL right now, it still trades at a stock price of well over 1,700 rupees per share, which means that the discount was reasonably deep at that point in time. Now, the reason why at least some investors may be positive on CDSL is because this is a play on the financialization of savings in India through the equity markets. As we all know, that CDSL is one of the biggest equity depositories in the nation, and it's seen relatively steady growth through the course of the last few years. In fact, if you consider the brokerage outlook as far as revenues are concerned, FY23 through 26 estimate is around 22% CAGR for revenues. That's the compounded annual growth rate. Its margins have remained relatively volatile. At least for FY23, its EBITDA margins stood at somewhere around 57%, and it has come off from margins of well over 65% that it had enjoyed in the preceding 2 years. But That said, a lot of this will also be a mix of the services that CDSL provides to its wide range of clientele, and that will, of course, also lead to a consequent effect on volatility in its bottom line. That said, it has shown steady revenue growth, and it is expected to further steady its revenue growth going into the next few years, around 20 to 22%. The question really is that after this big exit has come through, can CDSL bounce back? Well, in terms of valuations, it is not very expensive, somewhere around 20 times. But once again, it's something that you need to keep an eye on. But we'll move on and talk about Sanofi next. Now, this one is also buzzing on the back of big volumes coming through. Let's get in Puneet to talk to us about this one. Puneet.
Yeah, hi Agam, thanks for that. And as you rightly said, they've signed an exclusive agreement with Cipla to distribute and promote Sanofi India's central nervous system or CNS product lineup. Now, one of the key deliverables of this particular partnership is that Cipla will be responsible for distribution of Sanofi's 6 brands, which include Frislim, which is one of the key for Sanofi. Now, do note that this is a leading brand in the anti-epileptic medication category, and Sanofi will continue to own, import, and manufacture these CNS products, but they will leverage on Cipla's distribution as well as national reach for a higher tie-up. Now, do note that this comes on the back of another recent partnership that Sanofi did with Emcure Pharma, which is a private company. Now, they announced an exclusive partnership to distribute Sanofi's cardiovascular brands in India, and it's a similar partnership to leverage on Emcure's national reach. The stock performance has done well in the past year. It's up 40% for Sanofi India, while Cipla hasn't done too badly as well and is up 66% in the past year. Back to you.
Sure, Puneet, thanks so much for getting us that update on Sanofi and its tie-ups with the various other pharmaceutical companies. But on that note, it's time to slip into a short break. But do stay tuned. We have lots more lined up on the other side. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back to the show, and you're watching Large Trades, but it is time to take stock, or rather start taking stock, of the upcoming monsoons, considering we are heading into the summer months, and I reckon that markets must be keenly watching how things could potentially pan out. But to talk to us about the initial estimates, we have GP Sharma of SkyMet, who's joining us on the show. Mr. Sharma, good afternoon. Thanks for joining in. We've started getting initial estimates as far as the monsoons go. Of course, earlier there was an expectation that El Nino could potentially rain some challenges for the monsoons coming through. But in the latest that we have, I believe IMD sources have predicted about 100% of LPA for the upcoming monsoons. What are your readings here, and how are you expecting things to shape up?
Thank you, Agam. You see, this is the time when the monsoon forecast, it starts coming from all the agencies worldwide, whether it is APEC or it's a JAMSTEC or it is the Australian Bureau. So to tell you, the SkyMet was the first one to come out with initial, that is the perspective of the upcoming monsoon. That's a foreshadow of the monsoon season. It happened in the month of January itself. 12th of January, we had given the foreshadow of the monsoon, in which we did say that this is going to be a decent monsoon. It's going to be a normal monsoon, possibly better half of the monsoon. Normal is generally between 96 to 104% of the long period average. So that's what we had said in the month of January itself. Okay. And now APEC has, which you mentioned, they have Asia Pacific, that economic agency that has given the forecast that it's going to be above normal. Okay. SkyMet, normally we give our comprehensive forecast that's in anytime shortly now, around April, between 10th and 15th of April, we give our comprehensive forecast covering all the aspects, month-wise, season-wise, region-wise, that we will have it. Okay. But there's no doubt that La Nina conditions will build up. At the moment, El Nino conditions are there. They have not gone anywhere, and they are not likely to go soon. Okay. So whatever the forecasts are coming, they must go with a little caution. El Nino still remains, abnormalities still remain, conditions are still turbulent in the Pacific Ocean, which holds both these phenomena, El Nino and La Nina. But yes, rightly you said, going on the historic records, Southwest monsoon, that's an Indian monsoon, it generally rides well when the La Nina conditions are there. And there's no doubt that La Nina conditions will build up. It may be happening a little later in the season to start with neutral conditions when the monsoon comes, and then gradually will slip into La Nina. That will happen. And then that's a good indication that possibly we will have a little better monsoon prospects in this 2024. Yes, sir.
Sure. So just a final question then, and this respect to the geographies, any changes that we can expect, any geographies which are at risk? And I know this is early days at the moment. Perhaps we can get a better idea as we move into the next few weeks and months. But anything that you can tell us about regions which could potentially see a lack, and regions potentially which could see an increase there?
Yes, we will comment on these in our comprehensive forecast. But yes, as you said, what are the pointers when the La Nina conditions are there? Both El Nino and La Nina, they have the favorite pockets. Like El Nino, it strikes adversely. Similarly, La Nina, it gives you some pockets which are favorite for some good rates, and that is South India. Actually, the drought-prone pocket which we have in the central parts of Maharashtra, they fare better. Okay, and so is the case even with Northwest India, which perpetually they have been seeing deficit rains, be it parts of Punjab, Haryana, even parts of Rajasthan and western parts of Madhya Pradesh. These are the pockets which have been having some shortfall in the monsoon rains. So these parts, they fare better. But then somehow normal rainfall, or maybe a little below normal rainfall, that is foreseen in the eastern pockets, which is the states of, you can count Bihar, West Bengal, Jharkhand, and the northeastern parts. Okay, these are the pockets which generally they remain a little short of the normal rainfall during the La Nina conditions, and this is what we expect. But then, as I said earlier, comprehensively, we are still collating the conditions, and it should be possible anytime within about next 2 weeks or so to come up with the detailed monsoon forecast from Skymet. Yeah.
All right, Mr. Sharma, we'll wait for that, and of course, we look forward to having another conversation when that happens 2 weeks down the line. But thank you so much for joining us and taking us through your initial take on the expectations for the upcoming monsoon ban. With that, we've completely run out of time on the show, but before we wrap, well, we spoke to V2 Retail's whole-time director, Akash Agarwal, who talked about the company's business outlook and its plans going ahead. Listen in.
We have seen a similar kind of a growth that we saw in the first 9 months of the year coming into the fourth quarter. So we've seen the footfalls increasing and the customers coming back into the stores. So we've seen similar trends going on to Q4, and we're going to close this year very strongly, just the way we did the first 9 months of the year. And looking forward for next year, our target is 10% SSG. Even with a 10% SSG, we would get a per square feet sales per month of about 1,000 rupees per square feet, which is our internal first target for next year, FY25.
Okay, and so several industry peers have reported a weaker LFL in recent quarters, but V2 Retail has posted a stronger growth. And also strategies such as you also mentioned in your previous interviews that strategies such as offering discounts have been a part of your strategy to attract more customers. Can you elaborate more on what led to this much growth and what strategies exactly played out really well for you?
So I would say the growth is, constituted, like the factors would be about 18 to 20 factors that contributed to this amazing growth. But if I have to point out the 4 or 5 main factors, the number one factor would be product development. So currently we are selling about 35% of our designs are developed in-house by our own designers. That number used to be just 10% 1 year back. The second biggest factor is now we are selling more and more goods at full price. So, for example, if we were selling about 80% of goods at full price 1 year back, now that number is almost 87%. So that means less goods are slow movers and we are churning out the inventory faster at the store level. And the third factor is also because we have 3 manufacturing units and we get a costing benefit of about 10 to 15%. So we are passing on that benefit to the consumer. So that gives us a price advantage compared to our competitors. So I think these 3 factors would be the most important factors, but combined, I think it's a cocktail of 18-20 factors that have contributed to the growth.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of
Hello and welcome to India Market Close. It's the last hour of trade and it's turned out to be quite an exciting one with a flat to slightly lower start is where we started today's day of trade, but pretty much at the day's high point as we see it comfortably about 22,100. 22,175 is what we have in kissing distance of 22,200. 170 points odd added to the index despite very weak global cues that we had this morning. So we were lacking triggers, we were lacking direction, but interestingly, the bulls have actually taken advantage of the opportunity and managed to pull the Nifty trend in their favor. Bank Nifty continues its underperformance, so no major contribution coming in from Bank Nifty. 0.3% higher on Bank Nifty. 46,733 is what we have. Well, the good news is that the broader markets are performing in line with the benchmark index. What we saw yesterday was largely the large cap index was underperforming the broader markets, and especially the mid cap space. This afternoon, though, the mid cap and the small cap index in line with the large cap space. A quick check on how the breadth of the market's doing. I'm guessing that's improved substantially, but it is the small cap space that's leading from the front with the percent gains coming in on the small cap index. The breadth of the market is very clearly in favor of the advancing stocks. So the gainers outspacing the losers in today's day of trade. Largely, the equation has, remember, changed in the second half of trade. The first half of trade, the buy still was on the losing side. Well, that's how the market looks. RIL carries, or rather takes a lot of credit for helping the Nifty scale to levels closer to 22,200. So breaking that momentum was really the leadership coming in from RIL, which went up 4% on the back of a brokerage upgrade. Auto was having a pretty pleasant day. Adani Port is doing quite well. Remember, they've had 100% clearance coming in for their port, so 2.5% on Adani Ports. The Bajaj Twins looking good. Some of your banks are having a pleasant day as well. Your insurance companies, IT, not looking too bad. On the sell side, SBI is down about 1.5%. LTI continues to be under pressure in the last couple of weeks. It's really not one of the big IT boys, but the pressure coming through on back of that merger that they're still struggling with, and senior level exits that we've seen for LTI Mindtree. Apollo Hospital, Tata Consumers, Britannia, Tech Mahindra and Infi are also all trading flat. But the afternoon, Alex, largely belongs to Reliance Industries, and that single-handedly, I think, helped the Nifty break out of that funk that it was in.
Absolutely, 3.8%. We're going to talk about some of the reasons why it is moving high as well. Let me take take you through a few of the stocks from the broader markets as well. And arguably, if we're talking about Reliance Industries from the large cap, ABB India is another stock that is doing incredibly well. And that's on the back of an upgrade from UBS. We'll be talking about that in more detail as well. But they have retained their buy rating, but they've upgraded their target price. Potential upside as of yesterday's close of 21%, some of that being reflected in the stock price right now. Maruti Suzuki, Samina briefly mentioned this, but this is a stock now that has been on a tear. It has crossed the 4 lakh crore in market capitalization for the first time ever, becoming the first auto stock to do so. And it is up as much as 2.5% in trade right now. Aster DM Healthcare, very large trade taking place in this particular counter, close to 10% stake exchanging hands in 2 bulk deals that took place earlier today, down about 7.3% or thereabouts. It was sold at a price of 410 rupees, and the stock price is not too far away from that mark right now. Angel One is another that we're talking about. Fundraise has been taking place. The QIP had a floor price, remember, 2,555 rupees. It is completed, I believe. It was concluded on the 26th. No, that is Wockhardt. Sorry, that's the next stock. But more than 8.5% on Angel One. Wockhardt is up as much as 5%. That, by the way, is an upper circuit. It has raised as much as 480 crore rupees via QIP. And finally, CDSL, which is down about 4%, a large trade here as well. 5% is where it is at right now. And this is likely a trade that was conducted by Standard Chartered today. It was at a discount of about 6.5% to yesterday's closing price. So quite a lot of large trades taking place, Samina, and fundraising as well. You were speaking about at the open today.
Indeed, I think Alex, the flavor of the market has been block and fundraising, and we've seen that in trade today from your Aster DM to CDSL to Angel One to Wockhardt. It's been a flurry of QIPs and block deals, and let's not forget that the primary markets have been as action-packed in the last couple of months. And it's about brokerages. So stocks like ABB, Reliance Industries getting a leg up on back of brokerage calls. We've got Jay Bala now joining us with a technical view on the markets. Jay, hi, it's Samina. How do you feel about the markets right now? We've broken out of a funk, all thanks to the way Reliance Industry has managed to pull up the index up 3%. What's the trade on RIL?
Yeah, good to be here, Samina. The fact that RIL is about 29.50, that's an important point for me. But I'll be a bit cautious on RIL. I'm not 100% sure that it will take out the all-time high. My objective was 30.50. It had come down from 30.25 and went below significant support at 28.40. But after that, it's come up to about 29.50. So that's a positive for the bulls. But it's going up on much lower momentum. So if it were to clock fresh all-time highs, I don't know if it will sustain. I have doubts and I am suspicious about it sustaining. So I won't allocate incremental capital to RIL at the moment. But if you're already holding, hold the stop loss at 28.25.
Right. Jay, and taking that as a cue, what's the call on the Nifty? Close to 22,000 currently. Would you initiate a long or short strategy?
Yeah, 22 to 200 is a very important resistance. So, I think the high at 22,500, I think that's likely to hold for some time now. But from a slightly higher time frame, as long as the index can hold about 21,830, I think the bulls are a bit safe. But if 21,830 were to get broken, that will be the point of caution where you need to fold. So right at the moment, I'm very neutral on the Nifty because I'm anticipating a breakdown to come through. So but the significant supports have not been taken out. So the existing trend prevails. So I would be if you're bullish, but be on the edge.
On the edge. Do stay with us, Jay. I just want to take a check on why Reliance Industries is buzzing, and it's up and about, as we've already pointed out. Goldman Sachs seems to be bullish on the company, and that seems to be one of the reasons why the stock is up and about in trade today. Agam is joining in to give you some perspective on what Goldman Sachs is talking about. Agam, what is the target? Have they changed anything with regard to the rating?
Sure. So they maintain the buy rating with a price target of around 3,400 rupees per share, about 400 rupees higher from current market levels. The reason why they're positive on Reliance Industries is firstly because they expect the return on cash invested to improve by 270 basis points to around 12% by FY27. Moreover, they suggest that, well, they're reaching the end of their capex cycle. In fact, the capex is expected to fall sequentially as well. And consequently, its EBITDA could see a 17% CAGR between FY24 through FY27. Well, moreover, Reliance tends to outperform during expending returns. That's what Goldman Sachs is saying. And they expect valuation discovery via stake sale in newer businesses. This is something which has also been on the anvil of late. And a lot of investors are talking about the potential listing of several of its businesses. As we all know, Reliance Industries is not just one, but about 4 to 5 businesses roll into one. And these are some of the factors which are potentially playing in favor of Reliance Industries today.
Speaking of entities in that Reliance Industries group, and Jio Financial Services is something that I've been looking at over the last several weeks. And if you can pull up the year-to-date chart just of 2024, it is up at this juncture about 50%. Jay, anything that you're reading on the charts? I know it's not a lot of data to go by, but anything that's suggesting that the upside potential is there even at this stage?
I'm slightly more positive on Jio than on Reliance. I think the move that fell short of 380, and it looks like an unfinished move for me. But as long as the stock can sustain about 318, I think there's at least one further higher highs to come through closer to 400. So slightly more positive on Jio Financial than on Reliance.
Right. Jay, what are your picks? Anything on the short side that you like, that you'd initiate right now?
I'm actually bullish on OMC names. I have a couple, both the OMCs, BPCL and HPCL. I'm bullish on them. And, the recent drop, both these PSUs saw, it looks like a completed correction. So, the recent low of 550 for BPCL, I think that will get protected. And the recent low of HPCL of 440, I think that will also get protected. So those will be the stocks for me. I'm expecting BPCL to touch 702 and HPCL to touch about 610. But these are PSU names. The government can change their mind on a whim. So your allocation has to be lower than usual, but bullish on it.
Speaking of oil marketing companies and the underlying, of course, not the underlying, but the commodity is crude oil. Brent crude, Jay, is something that we've been looking at very closely. It's come off the recent high of $87 to the barrel. I'm looking at the screen right now. It's close to, what, $85. Are you looking at the charts? Is there anything to indicate that there is potential upside? Some people have pegged it at, what, close to $95 in the near term. Is that something you're looking at as well?
Absolutely, Alex. And I had tweeted on the 1st of March that, both the varieties of Brent are breaking out of an inverted head and shoulders pattern. So I have an objective of about $96 for Brent. So in the very short term, say today, tomorrow, I think I'm expecting a short-term drop for NYMEX to touch about 79.5, and then proceed to the next powerful leg that will take Brent to about 86, 88, and NYMEX to about $2, $3 short of that.
Jay, I want to go back to some of these movers in today's trade. RIL we've already talked about. But what are you making of Maruti and Bajaj Auto? Between the two auto majors, is there a trade on either of them?
We had discussed Maruti last week, Samina, and I was bullish on it. And I said my objective for Maruti is about 13,000. And the reason for that is, the stock is going to get tailwind from the yen weakness. Yen today printed a 30-year high, and it's not done. And I'm expecting yen to touch about 164 to 177 in the medium term. So, if nothing else changes, all things being equal, I think Maruti should gain much more tailwind from yen's weakness. And when it comes to Bajaj, I've been bullish on TVS, Bajaj, and Hero Motors from the late September of last year. But Bajaj, is likely to finish higher, somewhere about 9,600. So I won't allocate incremental capital here, but I will trail my existing positions with about 8,300 as stop.
Of Bajaj, let's also talk about the Bajaj twins and pull up Bajaj Finance, and if we can pull up the last 5 days, not the last 6 months, but it's up about 1.8%, and just the last 5 days it's up about 6%. So what a breakout that you've seen just over the last week or so. What are the indicators telling you about this counter, Jay? What is the upside potential?
Yeah, see, Bajaj FinServ is actually slightly weaker, so it's more an avoid. And in February I was negative on Bajaj Finance. It broke down from where it is right now and went much deeper. So it's possibly completed a correction, but 70-40 to 70-50 is a very significant resistance for it, which is the former breakdown level. So it can face resistance there. If it manages to take out that level, I think the next upside comes to about 7,400 for Bajaj Finance. But the medium-term structure is quite weak for Bajaj Finance. But what we are seeing right now is just short-term positive. I won't get overly bullish. I'll keep this as a trading bet rather than an investment bet.
Right. Jay, stay with us. It's turning out to be a pretty pleasant afternoon for this trade. It's the last financial trading day of the year tomorrow, so the market's going in or closing the year with pretty much of a bang from the look of it. We'll take a quick break, but before that, we caught up with Kenneth Andrade earlier in the day. He's the CIO at Old Bridge MF on his top sector bets. Listen in.
As we continue to grow, we have to take market share from the rest of the world. Now, you have to go and figure out companies that will build their franchise in the rest of the world. That's one element of all of it. We've seen how much wealth IT has got created. We've seen the dominance of Indian pharmaceutical businesses in the West. We've seen how Indian chemical companies have gone out and made their mark. And from there, you will see multiple number of more businesses. I mean, we are the second largest steel manufacturers in the world right now, and we're growing capacity out there. So all of this is coming together quite nicely. Now, pick your franchise out there, and this is the large trend that is playing out. Domestically, infra businesses and utilities, I mean, they are expanding at or at least the numbers that if you put the numbers together, it's going to be a scale business that is out there. Now, in that scale business, you've got to allocate your capital to parts of the value chain where you feel comfortable with and where you think the returns will I won't say it's a back-ended, but to have a large extent an outlier return out there. So these are the two pockets that are there. The third pocket, which is the consumer economy, I think that will come back. It might have a shorter cycle than the last time, but whenever it does come back, you've got to be a little ready for some of those businesses. Now, case in point is if you look at all the QSR businesses, they're going through a massive expansion in number of stores or in capacity, not number, so in capacity. But the market cap has gone just one way, which is down. So look for these trends, look for a bottoming out of the entire cycle, and just work your way around it. So the first two are my priorities. The second one the third one is essentially something that we're waiting and watching for.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching India Market Close. It's turning out to be a pleasant afternoon for the bulls on the street. It's the second last day of trade for the year, and the bulls clearly trying to take Nifty to levels of 22,000. For now, up about 0.7%. The broader markets once again outperforming the benchmark. In some interesting news flow that's come in, Daiwa Securities, we believe, is expected to acquire minority stake in Ambit. Ashok Wadhwa, Group CEO of Ambit, joins in. Hi, Mr. Wadhwa. Thank you very much for joining us. To begin with, you want to walk us through this recent development. What is the intent of Daiwa picking up minority stake? What is the valuations coming at? What are the plans that both you entities have in mind? Is it largely for a global client base? Is it going to be more local? Walk us through it.
So, last year, about July of 2023, Daiwa had acquired 18% ownership in the holding company, which is Ambit Private Limited. That's the merchant banking license, and that's the broad services franchise of Ambit. The holding company also owns a subsidiary called Ambit Finvest Private Limited, which is our lending arm, SME lending, largely secured SME lending. With this transaction that we signed yesterday, and which is of course subject to customary CPs, Daiwa will acquire 15% ownership now directly in the lending business. So they have now 18% in the holding company, and they'll own 15% directly in the lending business. And the idea is that at a time when we think that the lending business has phenomenal potential, particularly the secured element, which is the dominant part of Ambit Finvest Private Limited, we think additional capital augurs well for the future of the business. Reserve Bank has been kind of giving directions to say, guys, go raise more capital, and to get a large strategic investor like Daiwa from Japan, where we're seeing already significant amount of interest in India, I think augurs very well for our business. It provides us capital that then gives us the confidence to go out and build the business as aggressively as the opportunity offers at this point of time.
So that's interesting to find out, and we'd love to touch base down the line to see how that pans out as well. But while we're speaking to you, I just want some perspective on how you're seeing the space, the lending space for NBFCs. We've seen regulatory action and the RBI uncharacteristically cracking the whip in certain specific incidents. What do you make of the latest developments, and what does that mean? What are the implications for the lending space as a whole?
I think our regulators, both RBI and SEBI, generally are a little worried about unsecured lending, particularly unsecured lending for consumer purposes. And there's growing concern whether all of this growth in the lending, the retail lending, is going exactly for the purpose for which the money is being borrowed, or whether a part of it is getting fueled into the markets, which is perhaps what the concern that our regulator SEBI has in a sense shared with us. My own view is that on the asset side, there is a huge opportunity. I mean, there's a very large population in tier 2, tier 3 cities that are now yearning to get into the formal borrowing capacity, and at the same time, there is clearly more capital that needs to be raised by NBFCs. RBI's diktat is focused largely on one segment, unsecured consumer lending. They have been otherwise very encouraging of secured lending and lending which is for business purposes, i.e. the classic SME lending with a security. So I would like to believe that those of us who are focusing on the secured piece and particularly are lending for business purposes continue to have a phenomenal opportunity to grow the balance sheet, and which is why perhaps long-term strategic capital will play an important role in trying to capitalize upon that opportunity at this point of time.
So Vatva, share with us the financials of the deal with Daiwa, and also where is the expansion going to take place? You are at a cusp of a breakout in some sense, and you're in an industry that's only growing from strength to strength. In that context, where is the money that Daiwa is going to be investing going to be used?
You know, we all came out of a very difficult phase during COVID at a point of time when the focus was really on protecting your balance sheet versus going out and growing your balance sheet. All of us had kind of retracted a little from wanting to grow because, you know, collections were under pressure during that COVID period. Post-COVID, we've seen a significant demand, particularly from tier 2, 3 cities. And we think therein lies the big opportunity. Granular growth, classic 15 to 25 lakh loan amounts in tier 2, tier 3 cities. And as I said, largely on the secure part. That's where the real focus is. The capital that Daiwa is going to invest in Ambit, it's about 420 crores coming in from Daiwa and 260 odd crores coming in from existing investors. So in all, we are raising primary capital of almost 670, 680 crores. All of that is going to strengthen the balance sheet and allow us to go out and capitalize upon this opportunity, i.e. secured lending in tier 2, tier 3 cities.
Thanks so much for joining in and giving us that perspective, and wish you all the best in what you've planned out.
Thank you.
All right, let's talk about some of the stocks and sectors, in fact, that are in the focus today. We've got IT that is underperforming in an otherwise sanguine marketplace, if you can call it that, this afternoon. It's down about 1/3%. And Samina pointed out just about an hour back some of those underperformers. If you pull up the screen on the quilt of the Nifty 50, you will see at the bottom of the list you have the likes of LTI, Mindtree, as well as some of the other large IT names. We've still got Jay Bala with us. Jay, TCS, Infi underperforming, LTI, Mindtree as well underperforming in trade today. What's your view on IT in the near term?
See, I've been pointing out that ever since TCS had clocked a fresh 52-week high at about 42 or 15, that the movement has been suspect for the sector. And, we've had two gap downs for the Nifty IT index in March. And I pointed out that 36,200 was a point where it marked the weakness for the sector. And if it were to take out 34,200, I think this will complete the corrective ascent that started from about 26,000 in late last year or middle of last year. So, 34,200 is a very important support for the sector. I've always believed that this movement for the frontline IT names has been, a corrective move rather than a start of a new trend. But I've been bullish on the mid-cap names like Persistent, KPIT, and others. But even with the mid-cap IT names, even they are starting to turn. But watch 34,200. That's the absolute important marker for me for the sector.
Right. Yeah. Just stay with us. We've also got a whole bunch of stocks that we've already talked to you about that are in the news on back of block deals and QIPs. Anushi's standing by with the stocks that are topping the list. Anushi, stocks like Aster, CDSL, even the likes of an Angel One are in the news today.
Right. Samina, a whole list of stocks, especially today. Now, if you have to look at first on the list is Vocart. Over here, it closed a QIP of about, at an issue price of about 517 to raise about 480 crores, which was like quite a notable names have come out of this, like Madhusudan Kela, 6.25% of offer size over here, followed by ICICI Prudential Fund, and in other funds include Mirai Asset Fund, Investco India as well. Now, if you come to Aster DM, Healthcare and focus, the shares dropped as much as 7.54% today. Quite some strong volumes also. Now, over here, this is based on the media reports that PE firm, that is private equity firm, Olympus Capital Asia, is selling up to about 1,953 crore of a stake sale over here, and this planning is up to about 8.5% of a discount comparatively. Moving on to CDSL. Now, CDSL, Standard Chartered Bank, looks to sell about entire 7.2% in the via block deal today. Again, the deal size for the same as is about $151 million, which at a price of about 1,672, which showcases a discount of up to 6.2% compared to the yesterday's closing price. Now, there are other stocks also. Angel One, which had launched a QIP at a price of about 2,555, again a floor price of about 6.3% discount. Moving forward, what remains in focus is Prism Johnson, where the board is considering a fundraise of through NCDs, that is non-convertible debentures. The meeting is set at March 29 for the same.
Got it. Thanks, Anushi, for getting us those details. I want to focus on one of these stocks, which I mentioned at the start, of course, but it's Angel One, and it is up at this juncture as much as 9%, and it has quite the story, right? It's down about 17% for the year to date, but over the last year, what a run it has had. Just the last 12 months, it is up as much as 164% or thereabouts. Jay, what's the view on Angel One? Seemingly over the last couple of weeks or thereabouts, very short term, there has been a bit of a bounce in the stock. What are the levels telling you?
And it's done that. And I'm a bit worried, but I'm cautiously bullish. I think a fresh record highs closer to 4,000 might be back on the cards, but I've got to be exercising a lot of caution because it can be interpreted both ways. But I'm tending to lean towards the bullish way. So if you're taking a bullish stand, 2,400 is an important stop. So I believe as long as that holds, there's potential for it to go back and retest the all-time high at about 4,000.
Right. Well, we have 30 minutes to go as we will start wrapping down and winding down today's day of trade. Like we said, it's turning out to be a good day. 22,160 on the index, with the small cap index leading the way up in today's trade. The breadth of the markets, more or less a 50-50 picture, but not too many concerns on that front yet. On the broader markets, of course, it's action-packed. You've got stocks like JM and IFL Finance. Both those were two big losers in trade yesterday on expectations of a special audit by the RBI on the 11th of April. Today, both those counters have reacted and recovered very well, up about 9.5%. Both at the day's high point. I'm not sure if there's anything else on the front for that news point. Angel One, on back of its fundraising plans, is also up 9%. Actually, all those capital market players aren't doing too badly, barring CDSL, which is down and out on back of that block deal. But apart from that, diagnostic players are looking good. Real estate stocks are also not looking too bad. Street favorites like Electra also having a positive day. We'll take a break. We'll come back. On the other side, we'll talk to Jay about his buy today, sell tomorrow, or sell today, buy today strategies on the other side. So stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. We're winding down towards the close of today's trading session, and just pull up the intraday chart on the Nifty 50. Just over the last few minutes or so, you're seeing a bit of a downtick. We're still trading with gains of about 0.5% or thereabouts, and broadly, the market breadth is even Stevens at this juncture. The broader market's looking reasonably good. The bit of a drop that you've seen in the mid-cap index as well. The mid-cap 150 index trading with gains of just about 0.1% at this point, and the small-cap 250 index trading with gains of over 1%. So that's where the strength is at this point. Or rather, okay, so that's also dropping. In fact, it's up about 0.9% at this point. Let's take the latest cues from the F&O space. We're heading into the monthly expiry tomorrow. And Agam standing by to give you some perspective on what to look at in terms of the latest cues. Agam?
Right, so Alex, overall, notwithstanding and not considering what's happened in the last 3-4 minutes, overall it's been a very quiet day of trade, and we haven't seen too much traction as far as the Nifty is concerned, about 0.5% gain there, and we continue to see addition as far as the April futures is concerned as we move into the new expiry. There you have it, about 31% added in OI. As far as the Bank Nifty is concerned, it was also in focus on account of the weekly options expiry, and the Bank Nifty at the moment is advancing up by about 0.3 of a percentage point. Naturally, the March ones will see unwinding, but we about a 23% added in open interest as far as that one goes. Moving on, as far as the option market is concerned, well, we are keeping an eye on, when we were keeping an eye on around 22,000, 22,100. That's exactly where we've seen the most amount of traction too, because through the course of the day, we've seen the Nifty hold on to gains coming in. And because of that, at the moment, we continue to see that base building formation around 21,900 to 22,000 on the lower end, where we have seen accumulation of puts, and on the higher end, continuing to see about 22,500 as where we are seeing a little bit more accumulation as far as calls go. Let's move on and talk about a handful of other factors that are playing out here. In terms of stocks, watching out for Z Entertainment, which is looking at longs along with Tata Chemicals and Titan. Of course, because it's the April futures, we are going to largely just see an increase, and these numbers are going to be relatively larger. And of course, some shorts building up for Biocon and Divi's Laboratories. All in all, a quiet day of trade, which does beg the question whether or not tomorrow, which tends to be the monthly futures expiry as well, should that bring volatility? Well, that's something that we will get to know moving in tomorrow as well.
Thank you so much, Agam, for getting us those details. We want to talk about Reliance Industries, one of the big movers today. It continues to be the big, the contributor to the Nifty's gain right now. Touching a day's high, by the way, of 3,000. That's quite the landmark. Vijay Chopra, MD and CEO of Enoch Ventures, is joining in to give us some perspective on that and more. Vijay, thanks as always for taking the time and for speaking to NDTV Profit. Let's talk about Reliance Industries at the start, up over 3%, lending quite a bit of support to the benchmark, and it's broken a bit of a funk, as Samina pointed out earlier today. What do you make of the stock? And we're reading that it's based on one particular brokerage note, but I guess there's more playing out. How are you looking at the stock?
Well, loads of money has come out of small caps and large caps, Alex. And, which is the more safer company rather than the largest one in the country. So I think that money is chasing the large caps, and somehow Reliance is everybody's favorite. over a period of last few years, Reliance has consolidated well, and I think that it will further keep on going up. One of the buzz is that there's going to be an upward increase in the tariffs in the telecom space. So definitely, Jio is going to be a major beneficiary out of the entire scheme of things. So that might be one reason. The other is that there is a general buying and a general tendency that people have bought large caps. So that is the reason why it is going up. And of course, it is March ending, and most of the mutual funds have to set their NAVs in order. So that might be one more reasons. And there is a short covering which was imminent, and I think that today is one of the days where we are seeing some kind of a short covering. So maybe tomorrow as well, as the year closes, we might see markets actually buzzing, and probably we won't see a dip tomorrow as well.
Vijay, very quickly, what's happening in JM and IFL Finance? The stocks were both under pressure yesterday because of that expectation of a special audit by the RBI. Today, there's a 10% recovery. Is this just a technical pullback, or fundamentally, you think IFL and JM Finance deserve those gains?
Well, until unless RBI finds out some irregularity, I don't think that these brokers are bad in with any stance. JM is one of the largest brokerage houses, one of the most respected ones. And, there are times when big companies also come under the hammer of the regulator. So that I really don't know what kind of problems might come up, or there are skeletons in the cupboard or not. I am really not capable enough to comment on that. But yes, there might be a technical bounce because these stocks were oversold, and there are technical gaps as well on the chart. So wherever we see large gaps in the charts, so there is definitely a technical pullback. But again, fundamentally, I would be very comfortable until when RBI comes up with gives them a clean sheet, and there are no irregularities or any kind of that stuff. So if at all there is nothing, so JM and IFL are good companies again, good to buy.
Hold on, Vijay, I'm going to go to Jay on what he's seeing with the benchmark, because the Nifty 50 now trading just below the 22,100 mark. Jay, not a very big move, but it is, a bit of selling that is coming from the high point of the day, about 100 points or thereabouts. What are you making of the latest move?
Yeah, as I pointed out in my opening statements, I said that 22,200 is a very important resistance, and very clearly the today's high is 22,193, and the markets are coming off from there. Right? Until so far, nothing to worry about. But if the index were to break 21,735, only then you'll have to start worrying, and the weakness will start setting. But it's not something to be taken lightly, or to be monitoring in the price movements of the next few hours, including tomorrow's session, very closely. Things can start to turn down, because the markets had reached important price levels on key stocks. So I'll be, as I said, I'll be watchful. The trend is still up until the supports are taken out, but nothing to be taken lightly.
Okay, fair point. We have spoken about a few of these stocks on the technicals, but I'm curious about what Vijay thinks about the likes of Maruti Suzuki, for example, which breached the 4 lakh crore mark in market capitalization earlier today, the first automotive company to do so. It is off the high point of the day. But Vijay, what do you make of this particular counter? Would you say that it's still a buy at this point?
You're talking about Maruti, right, Alex?
Yes, absolutely.
Well, I think that I completely agree that it is one of the largest market shareholders in the entire four-wheeler market. But yes, it has become, I think that, it should come down a bit, and only then one should get into. And on every high, you should keep on booking profits. That would be my recommendation for investors or traders who have got into the stock. Although I'm a long-term believer in Maruti, their overall strategy has been stupendous over the years. They have maintained that lead over there in the market, and they have actually shown their competitors that they are way above in understanding the nuances of the Indian automobile buyer or the automobile market. So I would say keep on booking profits. It should be the strategy in the stock, and wait for maybe around 11,000 levels again, if at all you want to get into it afresh.
Vijay, you've been looking at the fundraisers, a lot of QIP news, both today and of course in the recent past, a lot of blocks taking place. And the pricing of all of these is quite interesting because you're seeing discounts of 6-7% even in some situations. One would assume, based on the kind of money that's flowing into the system, that liquidity is not a concern at all. Why then is the pricing not tighter?
Which company are we talking about,
So
Alex?
we're talking about the likes of, Angel One, QIP is just done. You're talking about a few others. There's Aster DM that, had a significant block. We're talking about a few. So let's pull up some of those data points.
Alex, CDSL also.
Yeah, CDSL, that's right. Yeah,
CDSL we saw
6.5% discount.
Yeah, it was at a discount. Definitely, if somebody wants to exit, why? There would be some kind of a negotiation with the company, and why should the company buy at a higher price? So if at all there is a block happening and they want to sell, the company wants to buy again, or there's some block deal, some buyer is buying. So I'm sure that one, the liquidity is enough. Secondly, buyers definitely want a better deal, so that's why the discount. Again, I'm a long-term believer with that CDSL should do very well with this T+0 settlement coming in, money flowing into the depositories every day. There might be people who trade, they actually keep on booking profits at a very small profit. So CDSL's income would keep on going up. So my sense is that CDSL is a great buy at these levels. Talking about Angel One, I think that there is a technical on the technical charts. There's a gap on around say 3600, 3650. So this stock should move up. It's a great broker. Their online platform is wonderful, and they have logged in a lot of new customers. So I think that one part is liquidity. Second is that if somebody wants to exit, so why to exit at a higher price? So people, buyers are buying at a lower price.
Okay, fair point. Just to follow up, we spoke about a couple of companies that are associated with the capital markets, and quite a few of them, barring CDSL, are doing incredibly well in trade today as well. BSE as well, up about 5%. They have dropped a little bit, but they're still elevated if you look at valuations and what they have been on an average over the last few years. What would you say about the potential in this space? Would you wait for a bit? If you're holding, would you book some profits?
Alex, extremely sorry. Which stock are we talking about?
So we're talking about the likes of BSE, as I mentioned. BSE is up quite considerably today as well. It's up as much as 7%. We're talking about CDSL.
So I still think that BSE has a huge potential. The kind of customer additions we have seen, people who've been trading, new additions in the overall number of people participating in the market. So on the charts, I don't see BSE as an expensive proposition. My sense is that it can definitely go up to 3,000. So BSE still has a lot of steam. As far as CDSL is concerned, which is down today, I think that it's an opportunity to latch on to the stock, wait for a few months, and I'm sure that there's good money to be made in CDSL. Because the revenues I'm talking about, that people who trade every day when the stock would flow into the depository, CDSL gets a fee, whenever they exit the stock. And there is a large chunk of traders in this market. So there's going to be a huge transactional thing going on, and this transaction fee is definitely going to better the bottom lines of CDSL. So I'm fairly confident 1 to 2 quarters down the line, CDSL's bottom line would definitely, top line and bottom line both would be much better than what we see today.
Okay, do stay with us. We just want to get a view from Nilesh, or rather, we had a conversation with Nilesh of Envision Capital earlier today, speaking of opportunities to invest. And here's what he had to say about the potential sectors to look at closely, even at this current market valuation.
The whole drive towards digital India, India's decade, and the fact that we are having a huge formalization and financialization of the economy So clearly, the online fintech segment continues to be a very kind of an attractive opportunity. Clearly, be it online broking platform, be it an online insurance platform, or an online credit platform, clearly that's a great opportunity to be in. Or it could even be a very normal home lender, but using technology to kind of deliver loans in the affordable housing segment. So that, I think, as a pack, continues to be very great. So I'd probably say that the online financial or the fintech space continues to be very attractive from an investment point of view. And the second would be around the premium consumption side. Still believe that there's a huge opportunity for premium consumption, and that would probably be the second area of preference.
All right, premium consumption. One of the stocks of the day today, and we've spoken about it briefly, ABB India, it's up about 5.8% as we speak. And there was a note by UBS that came out just a short while back, and it has retained its buy rating, but it's raised its target price quite substantially. The potential upside is significant even from this point. Anushi is joining in to talk about what they said in that note. Anushi, what is the rationale for the uptick in the price target?
Right. So even if you had to look at ABB, quite some strong moves over here, about 6.5% or rather 7% of an intraday gain just today, while the volumes also traded at about 2 times its 30-day average. Now, this was on the back of UBS acting as a catalyst for the stock, and they have cited a couple of reasons. First is the electrification and motion, which is continue to drive the growth and the margin performance of the business. Do note that these both segments are the largest revenue generating segments, and motion segment in particular is margin accretive for the business. Also, UBS has now picked ABB as its best play on infra scale-up in the low, medium to voltage business. Now, again, with this, the company expects to ramp up in this space where it is currently lagging behind the likes of Schneider and Siemens. Another factors to be considered is the better growth prospects in its export, which currently contributes about 10% of revenue mix. So with this, the premium products is being targeted. So again, this will add value and more margins for the business. With this, they also, with the improvement in the margin profile, it also will support the premium valuations going forward. So that is what UBS is betting on. However, on the near-term concerns, the short cycle orders for the motion segment remains on the watch list. So we'll definitely keep a watch on that as well. Now, about the overall performance of the company, if you look at the 3-year revenue CAGR performance, about 22% of an uptick over year, while it is the EBITDA which is in the focus, about 75% of our CAGR growth in the last 3 fiscals. That is on the back of the improving product mix of the company, especially if you look at the motion segment also. If you have to look at the order backlog of the company, about 30% of an uptick over year. So if you look at the CY 21 to 23, that is almost the double of what has happened, 4,900 of our backlog compared to about 8,400, which by showcasing about a 30% gains in both of the respective fiscal years. So this is all that has been building on in ABB, if you have to consider, which is in focus today on the back of UBS giving it a buy call.
All right, thanks so much for getting us those details, Anushi. Vijay, what do you make of ABB India? Do you concur with some of the points that have been laid out in terms of the potential for earnings growth? It's achieved a 75% CAGR on the EBITDA front over the last 3 years itself. Does that trajectory continue according to you?
Well, I recommended ABB not on your channel but few other channels about 4,500, and I'm a strong believer that this company is a portfolio stock. So long-term investors, who are not concerned with the up move or down move of the company so much, I would say that they need not worry. But traders, yes, I think that book profits on every spike. If at all you get this stock again at around say maybe 5,100, 5,200, it would be a wonderful buy at those levels. But yes, I think that when markets are touching all-time highs, stocks are touching all-time highs, it's not a bad strategy to book profits. Even if you book profits in Reliance doesn't become a bad company. But wait for the right time, the right price to get into. I think that if you've got at the right price, we recommended it to our clients at around 4,500. We exited around 6,000, and I'm not saying that it was a perfect exit. Nobody can predict the top or the bottom. But yes, and I think that stock is looking a bit expensive. Although the company is great, the earnings are in place. So if at all you get an opportunity to buy in a correction, that would be a better strategy rather than buying at these levels. So traders, especially on every spike, keep on selling, keep booking profits, and again wait for the correction to get into the stock.
Fair point. That's the view on ABB as well. Coming to you, Jay, on your buy today, sell tomorrow calls, or possibly even on the short side, if you have something as a recommendation.
I have one on the long side and one on the short side. Spandana Spurti Financial, that's looking pretty interesting. It's had a steep fall from about 1200 plus to about 780. That looks like a completed move, and today's wide range is a bullish outside day. So the 788 low might be the end of a correction, or at least a bounce back. So for BTST, the stop is about 820, and I expect this trend to continue tomorrow too. But if it were to continue tomorrow, it will mean that there's a short-term uptrend that's in place. So for that, the stop is 788. On the short side, Wipro is having a breakdown. So I don't. Most of the IT names aren't looking so good. So Wipro's fall is below important support. So I would place a stop at about 490 for Wipro and expect it to continue to somewhere close to 460 to even 440.
We were talking about State Bank of India as one of the underperformers today. It has, in fact, recouped some ground, and it is coming very close to that 0.5% lower. I'm just curious. So PSU banking as a pack has underperformed today, and in fact in the recent past. Vijay, State Bank of India first and foremost. What's the view on this particular counter? People are perhaps waiting for something to give in the banking space. How would you play the space?
Well, I think it is one of the jewels in the entire banking space. Look at the asset quality. Look at the credit growth. Their NIMs have been improving, and I am a fair believer that if somebody buys SBI and holds for maybe another 5 years, it can double. A behemoth and a heavyweight like SBI can double from here. But yes, there is a lot of steam in the public sector banking space. I think that banks like Canara, Union, Indian Bank, Bank of India, these are great banks to have in portfolio and buy in a correction. So I would say that don't get dismayed. It's a quality company, and I'm sure that in the coming year we'll see some betterment happening. The loan book has been healthy. The overhang of bad debts and overhang of a bad asset quality is gone by, and I think that PSU banks have done very well, managed their books very well in the last few years. So I think that SBI is a buy on a correction. So if it's an ideal price would be around 680, 660. If at all in a correction you get SBI. Otherwise, long-term holders, they should keep on holding. My sense is that it can double up from here in the next 3 to 5 years.
Okay, I'm curious about what you think of Interglobe Aviation as well. And I know that I'm shifting sectors quite dramatically, but this is a stock that we were focusing on yesterday. It's up and about today as well. It's up about 1.7% or thereabouts. And there were a few reports that came out post what I think, or what we understand was a conversation with analysts, where they're talking about capacity addition, Vijay, to the extent of 1 aircraft per week for the rest of 2024. And that's quite a substantial addition to capacity. What do you make of it? Do you have coverage, first of all, and would you buy at these levels?
Well, we definitely cover, the kind of growth we have seen in aviation. Look at the airports, you need to complete 2 hours to actually check in and board the aircraft. So gone were the days when you were sitting on the lounge and, waiting. There's so much of traffic, so much of, even if you catch a 5:30, 6 a.m. flight, there's a huge amount of rush. So I think that India, with the new airports coming up, with the regional connectivity, with the kind of affordability, people's growing incomes, so airline business is going, only upwards. But, you asked a very fair question at this point, that whether you would buy into an Indigo right now. I would say no. I would say that as the stock touches 3,600 or 3,700, keep on exiting. no need to buy at these levels. If at all you find this stock in a correction anywhere between 3,000, 3,100, great time to buy Indigo. It is the largest airline in the country. They, barring the winter months, most of the times, this airline has been doing real good justice. And the numbers which they posted, and first and foremost, the company is very, very bullish on the India airline story, and they are also flying international. So if they're ordering so many aircraft, there must be a reason. There's a huge amount of maths which the company must have done. So I'm fairly bullish on Indigo with the longer term. Even after the major promoter selling about 7% stake, the stock has actually come up. So this talks about the strength in the company, and there are more buyers. There are, the funds and HNIs, and there are a lot of people who want to get into the India growth story through the aviation sector. And Indigo, so to say, is one of the best right now.
Okay, so there is also, now we're just a few minutes away, a couple of minutes away from the close, but while we're at it, Jay, I want to talk about the rebalancing of the Nifty 50. One addition, as far as I can see, Shriram Finance, if I'm not mistaken, is the counter that's going to be added. But there is going to be a change in the weightages as well. Some of the counters going to be getting a substantial amount of inflows. Is that something that you're going to take into account heading into tomorrow?
I generally don't hold Indian stocks in my portfolio, but I hold this one, so I won't talk about this. It's one of the last of my Indian holdings. I've been holding it since the year 1992 from the convertible debentures. So I'll have a vested interest in this, so I won't talk about it.
Okay, fair point. Then why don't you talk about the key levels heading into tomorrow, because we're more or less ending with gains of about 0.5% for the Nifty 50. Crucial to talk about the monthly expiry. What levels are you looking at closely?
Yeah, yesterday's low is pretty important. If the markets were to break yesterday's low, I think a corrective top would be in. Today's high is about just short of 22,200. So yesterday's low is very important, and also from a slightly higher time frame, 21,730. That is, if it were to go on an expiry day, it will signal start of a medium-term correction.
All right. Vijay, as well as Jay, thank you so much for joining in, for giving us all the perspective that you did today. Always a pleasure having you on NDTV Profit. We are winding down, just about 20 seconds odd left, and we're talking about gains of about 0.7%. Not too bad if you think about it. Where we started off was practically flat, and we had a bit of a negative bias at the start. You have the Nifty Bank, in fact, that is moving higher and ending not at the low point of the day, off the low point of the day. You have the broader markets, of course, the mid-cap 150 index that has given up just a tad bit of ground, but you have the small-cap index that is ending with gains of close to 0.8% or thereabouts. In fact, we are at closing right now, so let's look at the patchwork for the Nifty 50. Right on the top of the screen, you have Reliance Industries, which is ending with gains of close to 3.5%, and probably the reason why you're seeing such strong gains for the benchmark index in trade today. You have the likes of Maruti Suzuki, which is going home with gains of about 2.5%, and as we mentioned, it did reach the mark of 4 lakh crore on the market capitalization side earlier in trade today, and that's quite a landmark for an Indian automotive company. You have Bajaj Auto that is did quite well in trade today as well. The Bajaj twins not too far behind. Bajaj Finance up about 1.7% or thereabouts, and doing quite well. In fact, it has gained about 5% or thereabouts just over the last 5 days or so. You have a few on the downside, of course. You have had State Bank of India, but it recovered quite sharply to end more or less in the middle of the pack. And on the downside, you have UPL as well as a couple of the IT names that were in focus. But that brings us to the end of this particular edition of India Market Close. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and this is Ask Profit. This is a show that gets you answers to all of your stock-related questions. And if you've got those questions, you can send them to us on any one of our social media platforms or indeed on the WhatsApp number that should be on your screen right now. We are going to be talking about one particular stock at the start, but let me very quickly take you through what is happening with the markets right now. You have gains of about 0.7% for the Nifty 50, and you have the broader markets that are doing reasonably well at this juncture. You have the mid-cap index that's higher by about 0.6%. I'm looking at the 100. You also have the 150 that's gaining about 0.6% or thereabouts. And you have the small cap 250 index that's up about 1% or thereabouts. And that means that the market breadth is tilted quite firmly in favor of the advances today. Of course, that's a break from what you've seen in the recent past. Among the sectors that are doing reasonably well, you have most sectors that are in the green today, led by oil and gas, which is up about 1.5%. Energy is up about 1%. So is auto and so is realty. The other sectors that are moving, you have banking as a pack that's not doing too much, but it's in the green, up about 0.4%. And on the losing end, you had FMCG that's down a little bit, down about 0.1% or thereabouts. A few of the updates that have come in on the input cost side, something possibly that are weighing down on a couple of these stocks. Now, we are focusing on ABB India at the start today, and it is because of a brokerage note that has come in. And we've got Anushi to break it down for you. Anushi, what can you tell us about this UBS report?
Absolutely. So quite a field day for ABB India. The stock has sparked a new life high today. Well, this is on the back of a brokerage note that is from UBS, wherein they have retained the buy rating, increasing the price target to about 7,550, which showcases about a 26% upside if you have to compare it with yesterday's closing. A couple of reasons that they have cited out. First is the electrification and motion, which are the biggest segments, will continue to remain the key growth drivers for the business going forward. Another is the ABB is now pegged as, they believe that it is pegged as the best play in the infrastructure space with the ramp up of their low to medium volt electrification business. Again, currently it trails behind Schneider and Siemens, so there is a lot of room of growth to catch up over here. Now, coming to the export side of the business, which currently makes up to about 10% of the mix, that is supposed to drive better margins for the business as now the focus shift to the more premium side. So with an improvement in the margin profile for the business as well, this supports the premium valuations that we are currently looking at. So all these couple of factors in place are the reasons why UBS retained the buy call rating that we are seeing today.
And indeed, the stock is up as much as 6% as we speak. Thank you so much for breaking that down for us, Anushi. It's time to introduce our guests for today. We've got Avinash Gorakshakar, Director Research at Profit Mart Securities, and Ayush Mehta, Technical Research Analyst at Nirmal Bang. Thank you so much to the both of you for taking the time as always. Always a pleasure having you on the program. Let's start with the conversation on ABB India. Avinash, you just heard what my colleague was pointing out. There's a UBS report that is possibly the reason why the stock is up. But what do you make of ABB India? Should an investor consider a fresh entry at this point?
Yeah, good morning, Alex. I think clearly, ABB is one of those franchises which has got a very well laid down marketing network, enjoys a very strong order book. And I think, tailwinds for ABB look pretty strong. They have a very large order book, and plus, their product is largely derived out of, growth numbers which come out of the economy. Our sense is that, over the next, say, 1 to 2 years, the company is very well positioned considering the kind of product dominance it has got, the kind of customers it enjoys, and obviously the kind of incremental growth opportunity which is going to come to ABB. So I think despite the fact that valuations are slightly expensive, if one were to take the next 2 years in mind and then take a kind of an investment call, then I think one could definitely nibble into the stock in a small quantity, and then on any decline one could further add positions here, because my sense is earnings growth for the next 2 years are going to be very solid, and there is hardly any potential for any downside here, considering that commodity prices have also softened. So basically the company is not going to be bothered on the raw material side. Incremental order book is going to be now the key trigger. If the company gets large orders which are obviously announced, then the execution of these orders is going to be very critical. So I think add on declines and give a time frame of at least 2 years if you're thinking of investing. A very good company, but I think the risk reward will come over the next 18 to 24.
All right, 18 to, so have a little bit of patience is the view coming in from Avinash, but he's also pointing out that the earnings growth looks strong. Let's jump straight into the questions then, and we've got quite a few that have already started pouring in. A reminder to you, if you're tuning in for the first time, you can send them to us on that WhatsApp number that's on your screen as we speak. Now, the first one that I'll take is from Samir, and he's asking about Tata Investments. He's wondering whether to get into this, or rather, I think he's saying that he's holding on to this. I do not know what level he's bought at. But Avinash, this is a stock that has gone up quite substantially in the recent past. It's been a bit wobbly here and there, but I think there's a lot of talk about that Tata Sons IPO. It's up as much as 5% today as well. What should the strategy be here?
See, my guess is, Alex, most of the investment companies which have gone up dramatically. And I think normally we always value investment companies at a discount to their investment value, which they have across all their, holdings. So my sense is that Tata Sons, there have been some conflicting reports that possibly some of the companies which Tata Sons owns, the privately owned companies are going to go public. And that is where Tata Investments will make a significant upside, because a majority of the shareholding is held via Tata Investments. So I think, if the investor has got at least say 12 to 18 months, because for all these companies to get diluted, I think there would be a proper process involved. So I think if the investor has the next 12 to 15 months time frame in mind, he can continue to hold. I wouldn't suggest fresh buying at these levels, because the stock has skyrocketed quite significantly. And I think, fresh risk reward from these levels may be a bit tough, but somebody who's holding on earlier from lower levels can continue to hold for the next 12 to 15 months. I think once the dilution of these private companies starts, which Tata Sons has got a majority holding, that is bound to benefit, Tata Investments, and that will definitely give a decent risk reward. So I think it's a hold from our side.
Got it. All right. There's a question coming in on YouTube, and I don't have a name. Friend of Retail Investors is the handle. Guys, if you are writing on social media or in fact on the WhatsApp number, do tell us your name and ideally where you're tuning in from as well. That'll help us identify you. The question is on Restaurant Brands Asia, bought at levels of 111. Should it be added more at this juncture? Burger King and Popeye's outlook for the next 6 months. And I believe the question is for Avinash. Ayush, I know I've kept you holding for a little while. I'll come to you in just a bit, but we're getting a lot of fundamental questions. What's the view here on QSR and specifically on Restaurant Brand Asia, Avinash?
Alex, I think, QSR business in India is expected to grow quite significantly. It's a consumption theme kind of, product. And I think ready to eat as well as quick service kind of restaurants products are quite popular, within the younger generation in our country. Most importantly, I think clearly in the next say couple of years, the company plans to roll out a very large geographical network. And I think, post-COVID now things have normalized. Not only the online but dine-out facility has increased significantly. So I think you need to exercise a little more patience here. There has been some competition pressure, from many other QSR companies which are listed. But I think at 100 rupees, the downside looks limited. And I think if the investor has at least a 12 to 15 month kind of time frame, he could definitely expect a decent risk reward. So I think somebody who's holding on can obviously hold on, but even fresh buying around 9,500 could be a good bet, in a kind of a growing sector, but over the medium to long term.
All right. Let me come to you now, Ayush, with the next question. Sankara from Chennai is asking about Axis Bank for the next 6 months. Not too much action as we speak in the private banking space, but would you say that it's a good bet for 6 months period?
Well, looking at the charts of Axis Bank, it has retraced from the higher levels of approximately 1150 and currently trading around 1050. It has taken a good support from its 200-day moving average, which was placed at around 1030. I feel Axis Bank will show a sign of reversal once it crosses 1080. So 1080 can be seen in the next few weeks maybe, and once it crosses 1080, then we are again seeing 1150 on the cards.
Okay. One more coming your way. This is on Suzlon. And we've got Vishal, who is asking about what the target price would be for the next 6 months. And while you're at it, would you also be able to provide the support level for Suzlon?
So the support level for Suzlon is placed at around 35 rupees. So 35 will act as a very strong support zone. It has formed a formation of triple bottom here, plus there's a weekly swing support as well. So I think Suzlon is looking good because of the support zone. Once it crosses 40 on the closing basis, we can see 50 again. But 35 rupees will be a strong support zone. Once it crosses below 35, then there should be an exit from the stock.
Okay. Vikas is asking an interesting question. So first of all, he's looking at a fresh investment with a 2-year perspective. Which one of these two companies should be considered? Avinash, the companies he's listed are Cyient DLM as well as Tanla Platforms. And could you give your rationale as to which you would pick between these two?
I think Cyient looks to be much better positioned considering the fact that they have a well diversified base. They are present in the railways, defense, as well as the aerospace sectors. And my sense is that it's been a much more consistent performer as compared to Tanla. In fact, Tanla is more on the OTT side, on the value-added telecom services side. If you look at the performance of Cyient, I think it's been a steady performer even in challenging bad times. And even as of now, I would suggest that if the investor has a 12 to 18 month time frame, because IT companies, according to me, the growth quotient is yet not visible. So if you want to buy now, I think you'll have to give in some more time, because all these companies are well managed, fundamentally very strong, good cash flows. But I think the growth quotient could possibly come in from the second half of FY 24-25. So Cyient, I think, would definitely give a better risk reward as compared to Tanla. And I think the risk will also be mitigated. I think it's a fairly, slow moving, but a more safe counter as compared to that.
Okay. Now, I think that this is a very interesting question. Avinash, I'm coming back to you because it's more of a strategy and portfolio question. This is a question from Martin. Martin is writing in from Mussoorie. He's saying that he's 24 years old. He's started investing last month and he's holding shares mostly in the power sector as well as utilities and a few banks. Now he's asking, he's not named which these stocks are, but he's asking what should his strategy be in April or when the elections start, because he's getting a lot of confusing signals from various places and he's a little confused with the different views being expressed. I would think that because he's so young, he's got such a long time frame, should he really be worried about what's going to happen in the next couple of months?
Yeah, I think, Alex, I don't know what kind of stocks he has purchased, but I think if he is stuck to large cap names in the power generation sector, then I think he should not worry. My sense is that banks also, if he's holding on to some of the PSU or the private sector banks, I think longer term, both the banks as well as the power generating companies would continue to do well. And I think he's young, so there's a long runway for him to make money. He needs to exercise a lot of patience. And I think if he gives in at least 2 years, then I think, that portfolio what he holds, without knowing, of course, the company names, can definitely do well. Elections will come and go. There will be volatility in the market from mid-April when the elections start. But I think once June 6th happens, and I think we get a conclusive result, and obviously, markets are also expecting that after this, there could be some rate cuts coming in.
Yeah.
So I think the markets will continue to go up. So I think just hang on and think long term. And I think risk reward will definitely happen positively.
So Avinash, a quick follow-up to that, because we were having conversations on the channel as well. And one of the views that was described in the power space is that, the guest that was speaking was positive on power generators that are focused more on thermal and also have a play in renewable, because he expects that renewable will pick up over a period of time, and also on transmission. So do you hold to that, and which stocks in the power space and in banking space should you be holding at this juncture for the long term?
I think in terms of power generation, I think we still continue to like Tata Power. We believe that, longer term, a lot of money can be made here. Secondly, I think in transmission, there are many companies which operate like KEC International. There is REC also, which has also got a very good exposure on the power distribution side. My sense is that, these are companies where the visibility of earnings is solid. You need to take at least a 2-year view plus year. And most importantly, as you rightly said, the renewable energy names, the earnings growth has not yet come in. I think the narrative has played out very well, except for one or two companies like KPI Green, which is a lone performer in the solar energy market. I would believe that, it's better to have large thermal companies in your portfolio, some good transmission companies and power distribution companies, because clearly, I think these are more matured players. And obviously, as time goes forward, if they have a combination of renewable and green energy, that would add to their revenue and bottom lines.
Ayush, coming to you on the next one. Jayakrishan from Kozhikode is asking about GMR Infra. He's bought at levels of 94 for the medium term. He's wondering whether exit at this juncture and shift to something like an IRFC, which, by the way, has been buzzing viewers. It's been up and about in the past few sessions. Ayush, what's the view?
So I will recommend to hold it with the trading stop loss because GMI Infra, the chart is positive. It has shown good reversal from its 100-day moving average and currently stuck between its 20. So once it gives a closing below 80, then we should exit. Then the person should exit from here, and then you should definitely look for options such as IRFC is definitely performing well. Once it crosses 150, I feel there's a new target coming up, which is going to be around 165.
Got it. All right, on that note, we have to slip into a very quick break. Avinash and Ayush do stay with us, and viewers will be back on the other side to take more of your questions. So do stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching Ask Profit. Now, we are in the midst of taking your queries, and the next one that I'm taking is from Mohit. He's writing in from Ludhiana, and he's asking about Fortis. He's bought at levels of 270 rupees per share, and he's got a time horizon of about 2 years. Avinash, what's the view on this particular counter, and is this the best pick in the healthcare space?
I think, hospital space has gathered a lot of momentum, and specifically specialty hospitals is one space where I think you're going to see a lot of traction going forward. Fortis definitely looks positive. I think over the next 2 years, we could expect not only the overall bed capacity to increase, but even the specialty business would contribute quite significantly. Plus, they have their diagnostic business, which is expected to be monetized in the next 2 years. So that itself is also going to give a leg up to Fortis. But I think some other stocks within the hospital space we like is Alex Shalby Hospitals. This is also one company where a lot of good fund buying has happened. The company has been operating hospitals, especially tertiary hospitals in Tier 2 and Tier 3 markets, where I think the risk reward could be significantly better. I think we got good institutional as well as HNI investors like Vijay Kedia also buying a chip of the block here. So I think both these companies look interesting, provided the investment time frame is at least 12 to 18 months.
Okay. We've got a question from Ramesh. He's writing in from Hyderabad. He's got Delta Corp at levels of 164, and he's got Lakshmi Organics that he's bought at levels of 364. Both he's experiencing losses in. he's got a long-term time horizon, but should he average or book losses from the perspective of what the price movement is? Ayush, what's the view on the charts?
Let's talk about Delta Corp first. Delta Corp has given a breakdown that in all the time frames, and we are seeing profit working from higher levels. I feel you should exit Delta. You should exit Delta Corp once it gives a closing below 105 because that is the last support zone for this stock. And I feel 100 rupees can be seen in this stock also. And the next stock is
Organics, which he's bought at levels of 364.
Lakshmi Organic. That is LX Cam, right?
That is yes. It's currently trading at 235.
So Lakshmi Organic charts are a little positive right now. It has given a reversal from the 220 rupees level, and I feel you should continue to hold this as there's a trailing stop loss. I would like to recommend here is 228. Once it drops below 228, then you can exit. Otherwise, you should continue to hold it, and 250 will be seen very soon in this.
All right. The next question is quite interesting, not something that you hear every day. It's from Shyam, and he's asking, should he switch from Reliance Industries to Jio Financial Services from the perspective of the long term? Avinash, I think a lot of questions I have had about Jio Financial Services and what the plan is with regard to the business, but clearly the stock seems to have no issues, or rather the market seems to have no issues about where things are going from the business perspective. The stock price has gone up quite substantially in the year-to-date period. Should a switch like this be contemplated though?
Yeah, I think Alex, Reliance Industries, first of all, is the parent of Jio Finance. And I think, if the investor has purchased shares independently from the market, then it's a different thing. But otherwise, if he has been already holding Reliance shares, then I think most of the Reliance shareholders have got Jio shares free of cost. So my sense is now, if one were to buy Jio Finance and sell Reliance, I would believe that would not be a wise decision because see, Reliance has got a more matured business model. Not only does it have financial services and new business vertical, it's got telecom, retail, where a lot of value unlocking is going to happen in the next, say, 2 years. So I think, Jio does well. Obviously, that will benefit Reliance first because it's going to get consolidated in Reliance numbers. And I think the tailwinds for Reliance are quite encouraging. I would not be surprised that next year could be a very strong year for Reliance, both from the telecom, retail, as well as from the Jio financial side. Jio is still maturing. It's still putting all the blocks in place. And I think probably in the next 2 years, you could see some material revenue and profits coming in from this business. So I think it's better to hold on to Reliance.
Okay. Torrent Power is the question, or rather the stock that Uday Bhaskar wants to know about, and he's bought at levels of 1350. Any view on the charts, Ayush? What target would you give for this particular counter?
Torrent Power is performing really well, and we are seeing a breakout on its weekly as well as monthly chart. So I feel the first target we are seeing here is 1525. Once that is seen, then 1600 levels are also on the card. If someone wants to put trading stop loss here, then 1375 is a trading stop loss level. Okay.
Best Agro Life. I'm just trying to pull up the counter. Do you have a view on this, Avinash? We've got a viewer who's Ravi Kumar who's asking about this. Is it the right time to buy this counter? I believe it's a pesticides company.
Yeah, I think, Alex, this is into agrochemicals. And I think like all agrochemical companies, the last 6 months have been extremely challenging for them. There's been a lot of inventory pile up in the system. I think fortunately now things are slightly better. And hopefully next year, when the season starts, I think all the agrochemical companies, including Best Agro, should do well. We believe that this is not a global phenomenon. It was largely restricted to the Indian markets. And I think unless the investor has got at least the next 12 to 15 months time frame, he can definitely consider buying a small quantity here because agrochemicals as a sector is a very crucial sector in the economy. And hopefully next year monsoons are good and the season starts positively. You could see a good bounce back in Best Agro. So I think definitely for the next 12-15 months, it could be a good risk reward opportunity.
Okay, I'm going to try and pull up what has been shared. Anuradha Menon from Mumbai is asking about Artemis Medical, I believe. Let's pull up that chart and see where it's currently trading. And Nelcast. I'm not too certain about what the levels are, but she's looking to hold these for the long term. So Artemis is currently trading at 175. Do you have a view on this, Ayush, on the charts? How does it look?
Artemis charts are looking positive. It has it has made a formation of flat pattern, and the breakout is awaited at 176, 177, and which will happen maybe today or tomorrow. And I think Artemis should be holded for a short term. And the first target we are seeing here is 190. And next stock is Nelco, right? Nelcast. Okay. So Nelcast has formed a bottom at around 120 and is in the range of 120 to 130, currently trading around 132. So it should be holded as well. The first target we are seeing here is 145.
All right, first target is 145. Gentlemen, that brings us to the end of this particular edition of Ask Profit. As always, as I mentioned at the start, it's a pleasure to have you on the program. Viewers, I hope that this benefited you. Even if we weren't able to take your specific question, we've discussed a number of stocks, and there's a lot of advice that was dispensed over the course of the last half an hour, and you can use all of that as well. That brings us to the end of this particular edition of Ask Profit. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Market ends higher as benchmarks rebound, led by gains in Reliance, HDFC Bank and Axis Bank. Sectoral indices close mixed, with Nifty Realty closing as the top gaining sector. BSE releases the list of 25 eligible stocks for same-day settlement cycle under T+0 from tomorrow, including the likes of SBI, Bajaj Auto and Vedanta. The Kalyani family feud intensifies as Baba Kalyani's niece and nephew seek division of family assets in the Pune court, seek transparency and demand disclosures about the assets. Chocolates are expected to get pricier as cocoa futures crossed $10,000 per ton mark. Hershey's Global expects the spike in prices to limit the company's earnings growth for this year. The Ministry of External Affairs reacts to the US State Department spokesperson's remarks on Delhi Chief Minister Arvind Kejriwal's arrest, warns of unhealthy precedents and against unwarranted aspersions, summons US diplomat. Welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the bulletin aims to bring to you market headlines along with national and international news. Now, first up, before we can move on with the show, it's time to see how the stock markets have performed today. Keep in mind that the NSE rejig is tomorrow, and Nuvama Research has said that the Nifty 50 might attract inflows of $349 million due to the rejig. My colleague Alex joins us for a quick markets wrap. Alex, what are the markets faring like today?
It's a happy Wednesday for the Indian equity markets, with gains for the benchmark Nifty 50 of about 0.5% or thereabouts. The broader markets, the mid-cap index gaining just about 0.1% off the high point of the day, but the small-cap index doing quite well, ending with gains of close to 0.8%. By and large, the market breadth was more or less even Stevens for most of the session, and in fact that crossed out towards the end of the session, where you saw more declines than advances, a bit of a downtick towards the end. But let's take a look at the key contributors for the Nifty 50, and you'll see right on the top of the screen, you'll see Reliance Industries, which gained about 3.5% in trade today and lent quite a bit of support to the benchmark Nifty 50. You see a few more names, and Maruti Suzuki stood out today because it gained 2.5%, but also because it crossed the market capitalization of 4 lakh crore in trade today. Bajaj Auto as well as Bajaj Finance doing well as well. On the bottom of the screen, you had the likes of UPL as well as Hero MotoCorp and a few of the IT names that underperformed. Wipro down about 1.6%, LTI Mindtree also down about 1% or thereabouts. Now, from the broader markets, there were a few that I will mention. ABB India, arguably one of the stocks of the day, gaining about 5.9 or 6% or thereabouts. There was an upgrade in the target price by UBS, and that is factoring in the stock. You had Aster DM Healthcare, where you see nearly 10% stake sold, and it ended with cuts of about 7% or thereabouts. You also had Wockhardt and CDSL that moved quite sharply in trade today. But by and large, we're sanguine heading into options expiry for the month tomorrow, so we'll have to see whether that brings volatility with it. For now, that's a close.
Well, it'll be interesting to see how the markets close at the end of the fiscal year. We're in the middle of a truncated week, and it's likely that the next day of trade could be choppy, but we'll see how that goes. We spoke to Kenneth Andrade, the CIO at Old Bridge Mutual Fund, and he discussed his top sectoral bets. Listen in.
As we continue to grow, we have to take market share from the rest of the world. Now, you have to go and figure out companies that will build their franchise in the rest of the world. That's one element of all of it. We've seen how much wealth IT has got created. We've seen the dominance of Indian pharmaceutical businesses in the West. We've seen how Indian chemical companies have gone out and made their mark. And from there, you will see multiple number of more businesses. I mean, we are the second largest steel manufacturers in the world right now, and we're growing capacity out there. So all of this is coming together quite nicely. Now, pick your franchise out there, and this is the large trend that is playing out. Domestically, infra businesses and utilities, I mean, they are expanding at or at least the numbers that if you put the numbers together, it's going to be a scale business that is out there. Now, in that scale business, you've got to allocate your capital to parts of the value chain where you feel comfortable with, and where you think the returns will be, I won't say it's back-ended, but to have a large extent an outlier return out there. So these are the two pockets that are there. The third pocket, which is the consumer economy, I think that will come back. It might have a shorter cycle than the last time, but whenever it does come back, you've got to be a little ready for some of those businesses. Now, case in point is if you look at all the QSR businesses, they're going through a massive expansion in number of stores or in capacity, not numbers, so in capacity. But the market cap has gone just one way, which is down. So look for these trends, look for a bottoming out of the entire cycle, and just work your way around it. So the first two are my priorities. The second one is essentially, the third one is essentially something that we're waiting and watching for.
In more markets news, the BSE has released the list of 25 companies that will switch to the T+0 rolling settlement cycle. The cycle will be live from tomorrow, March 28th. My colleague Saloni Kothari joins us with more details about the cycle. Saloni, over to you.
T+0 settlement is going to be a reality from March 28, but remind you that this is going to be done on an optional basis and the beta version will be launched. Now this will be reviewed at the end of the 3rd and the 6th month, and the market regulator will decide the course of action after the review, and this is going to be done for 25 stocks with a limited set of brokers. Now what is T+0 settlement? It aims to settle the trade that you've done today on the same day. Right now T+1 settlement is something that has been used, which means that the money that you get after selling a stock, you get it the next day. But T+0 is going to change that. And talking about which of the stocks are going to be available for trading, NSE and BSE has released stocks, and which means that Bajaj Auto, Ashok Leyland, Vedanta, SBI, Tata Communications, Ambuja Cements, Bank of Baroda are some of the 25 stocks that are going to be available at the beta version of the launch. What about the market timing? The new settlement is going to be on a continuous basis from 9:15 a.m. till 1:30 p.m. Till the time the review is done. And who all can trade? Actually, all members and investors are allowed to participate in the same.
Thanks a lot for that, Saloni. So moving on, the Kalyani family feud has intensified as Bharat Forge chairman Baba Kalyani's niece and nephew have moved the court against him. They're demanding disclosures about family assets. What is the feud all about? Charu joins us to tell us more. Charu?
Sameer Hire Math and Pallavi Swati, who are the grandchildren of Neelkant Kalyani, have filed a case for division of their family assets in a civil court in Pune against their uncle Baba Kalyani. Now, what they are asking for from the court is not only just their proper share, they are also saying that the defendants whom the case is against should also disclose the number of assets the family owns. So basically, they are saying that long back, almost all these new businesses were started with the undivided family wealth. And from that, a lot of wealth has been additionally accumulated. So a list of all these things, all these material wealth, businesses, wealth, riches, everything should be disclosed. And then based on that disclosed information, a proper division of assets should take place. Now, what has happened is the petition also alleges that due to the management style of Baba Kalyani, the family felt that they have no other option but to approach the court for a rightful division of the assets. They have also said that they're scared and worried that since this case has started now, the people involved, including Baba Kalyani, might try to do something to the wealth that they have accumulated, or try to transfer it somewhere, or try to, mismanage it in some way. And that is why they have also asked the court to basically pass some sort of an interim direction to stop them from doing so. And also they have asked to appoint a receiver to basically manage all this wealth for a short period of time while the matter is pending. That's all we know for now. We'll keep you updated with any more updates.
Moving on, L&T has announced a 7,500 crore rupee fundraise via commercial borrowings. NCDs and the CFO told NDTV Profit that this fundraise will help refinance the maturing debt during FY25. Saloni once again joins us with more details on that.
Right, Pallavi. So L&T yesterday announced that it's going to be raising about rupees 7,500 crore through issue of commercial borrowings or even NCDs. And this comes right after the company had bought back around rupees 10,000 crore worth of shares in September. So the question was exactly what is the company will be using the funds for. So we spoke to the L&T CFO and he told us that the fundraise will be used to refinance maturing debt during the financial year of 25, that is next financial year, and this will be done within the current overall debt to equity position of the company, which is at around 0.3:1, and it's going to be the same as what he said. Now we also looked at some of the key numbers to understand where exactly, at least till last quarter, the numbers stand at. So the gross debt to equity ratio has actually risen in the December 2023 quarter to 1.23x from 1.13x in March of 2023, which was FY23, and the net debt equity ratio has also risen to 0.81x as of Q3 of FY24. Now talking about the total borrowing, the total debt which the group level has, that has also risen to about 1.2 lakh crore in Q3 versus 1.18 lakh crore during the March of 2023.
Well, and what's not very comforting news for chocolate lovers, chocolates are set to get pricier as cocoa prices have surged to new highs and have crossed the $10,000 per ton mark. My colleague Sesha joins us with more details on that. Sesha?
Right, so historically high cocoa prices, that is the key ingredient for chocolates, is bound to hurt Mondelez, Nestle, Parle and Hershey alike. Poor harvest in countries like Ghana and Ivory Coast, which produce the world's largest cocoa, have caused this sharp escalation. And the bad news is that after having doubled in 2024, the prices are unlikely to come down, with the International Cocoa Organization expecting a wider deficit in supply this year compared to last year. A whopping 3.74 lakh ton in supply deficit is expected this year, which is probably the highest in the last 60 years. Companies generally have a hedging strategy to manage such price volatility. But if the prices continue to jump at unprecedented levels, they will have no option but to pass on the cost burden to the consumers in order to protect their margins. Now, remember, cocoa is climbing as prices of other commodities like wheat and sugar are also starting to rise all over again, added to the cost pressure. So consumers must be prepared to pay a little extra when they buy that bar of chocolate next time.
Thanks a lot for that, Sesha. Moving on, the Asia Pacific Economic Cooperation Climate Center has predicted that India is likely to experience above normal monsoons from July to September. Now, with the La Nina set to return, the center has issued two separate forecasts, one for the periods from April to June and the other from July to September. We spoke to GP Sharma of SkyMet about his predictions for the monsoon and the possible impact. Listen in.
La Nina conditions will build up. At the moment, El Nino conditions are there. They have not gone anywhere and they are not likely to go soon. Okay, so whatever the forecasts are coming, they must go with a little caution. El Nino still remains, abnormalities still remain, conditions are still turbulent in the Pacific Ocean, which holds both these phenomena, El Nino and La Nina. But yes, rightly you said, going on the historic records, Southwest monsoon, that's an Indian monsoon, it generally rides well when the La Nina conditions are there. And there is no doubt that La Nina conditions will build up. It may be happening a little later in the season to start with neutral conditions when the monsoon comes, and then gradually we slip into La Nina. That will happen. And then that's a good indication that possibly we will have a little better monsoon prospects in this 2024.
With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up for you on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
welcome back. You're watching The Reporter on NDTV Profit. Now, Bajaj Housing Finance is preparing for an IPO worth $1 billion. Let's go across to Pragati Oberoi for more on that. Pragati, what are you picking up?
Right, Pallavi. So Bajaj Housing Finance is planning an IPO worth $1 billion. That's what sources are telling us. Now, we must remember that Bajaj Housing Finance is the wholly owned subsidiary of the company Bajaj Finance. Now, what we are gathering from our sources is that the conversations are still in early stages and only the planning has as of now started because nothing has been finalized and the entire process is expected to kick off in about 2 to 3 weeks. The valuation is expected around $10 billion and the IPO size is expected around $1 billion. That's how the calculations are flowing. Once again, these are the expected numbers and where the conversations are headed. What the final amount comes out will obviously be known once the planning or the process kicks off. We also know that based on the process or where the step is at, the listing of this company is expected around the end of 2024 or early 2025. Now, we must remember that Bajaj Housing Finance's listing or the IPO is very important because the company needs to comply with RBI's scale-based regulations, which need the company to be up on the exchanges by October 2025. That's the deadline that they have. So before that, the company is planning this IPO. We'll bring you more details as and when we have them.
Thank you so much for that, Pragati. As she's mentioned, we'll continue bringing you more details on that. But moving on, Renault Nissan is planning to invest $600 to $700 million in India over the next 3 years to make it an export hub, as well as launching 4 cars over the same time period. My colleague Tushar Deep Singh joins us with more on that. Tushar?
Thank you so much, Pallavi. So essentially, Renault Nissan plans to invest about $600 to $700 million in India over the next 3 years, precisely to make the country an export hub. So where will this money go? First of all, for platform localization. Essentially, more cars will be made in India with more local parts. Remember, the Renault Kiger as well as the Nissan Magnite are made in India for the world. So we can see some more products on those lines. The investment is aimed at increasing sophistication in manufacturing. The current plant has an automation of 12%. We can expect that to go up. More powertrains are also supposed to come up at this plant, that is internal combustion engines as well as hybrid engines. But the EV plans are right now put out in cold storage. No guidance on that front. So as far as the car launches are concerned, there are 2 cars across the 2 brands. That is a total of 4 cars will be launched in the next 3 years. One is a 7-seater XUV and the other is a 5-seater SUV that will come up. Again, these cars will see heavy localization in India. What did the management say? So according to the chairman, Jean-Dominique Senard, India is at the heart of the Renault-Nissan alliance, global operations. Renault and Nissan have 1.4 million cars in India, 2.7 million cars have been produced so far in India in the last 17 years of their operations in the country. Every step of the car manufacturing process happens here. Nissan Magnite and Renault Kiger are the properly local in Renault Nissan cars in India. The management also spoke about how it sees the competition. where the Renault Group CEO, Luca Di Meo, said that compared to the big boys in India, Maruti Suzuki, Hyundai, Tata Motors, etc., we are small scale, but we are a global company with significant strength elsewhere that can be brought into India. Never underestimate the strength of this alliance in this country going forward. So essentially, a very bullish stand by the alliance here. It's kind of a revamp for the alliance. So what comes next, we just have to wait and watch.
Thank you so much for that, Tushar. And with that, it's time for some macro updates. India's current account balance recorded a deficit of about 10.5 billion. That's about 1.2% of the GDP. This was for the October-December quarter. It is better than $11.4 billion. That was what the revised estimate was for the previous quarter. That's Q2, and that's about 1.3% of the GDP. That was news that came in last evening. But economists actually expect the current account deficit to continue to improve. If anything, economists are forecasting a marginal current account surplus for the ongoing quarter, and that's likely to be aided by an improving merchandise trade deficit and continuously resilient services exports. Gaura Sen Gupta, economist at IDFC First Bank, said that she expects a mild current account surplus in the ongoing quarter, led by strong services and remittances, as well as a moderation in the trade deficit. Because of that, balance of payments is also expected to see a higher surplus of about $20 billion. That's for the ongoing quarter. Now, according to Madhavi Arora, lead economist at MK Global, she forecasts the current account deficit for the full year at about 0.8% of the GDP. That is better than what was being expected ahead of yesterday evening's figures. This is, of course, on the back of better than expected current account deficit yesterday and better than expected performance going forward as well for both goods and services exports. Healthy services exports, especially in IT and the solidly emerging space of business consulting and financial services, have helped the Indian economy offset the goods deficit, with non-IT net exports tracking a growth of over 55%, that's estimated in FY24. Now, this growth, or at least some of it, is also expected to spill on to the next fiscal year. So overall, the sense that we're getting is that current account fundamentals continue to strengthen and stay steady for FY25 as well, with economists expecting the current account deficit to track about roughly a range of 1% for FY25. This, along with a spike in foreign exchange reserves to a record high of about $640 billion that we saw last week, reinforces India's improving external metrics. Well, moving on, the electric mobility unit of Tata Motors and HPCL have entered into a partnership to set up EV charging stations across India. As part of a memorandum of understanding, the two companies will set up public charging stations at locations frequented by electric car owners. The collab will leverage HPCL's fuel station network. Moving on, the Ministry of External Affairs takes a strong stand against the US State Department spokesperson with regards to their remarks on the Delhi CM Arvind Kejriwal. The MEA goes on to say that we take strong objections to the remarks of the spokesperson of the US State Department about certain legal proceedings in India. In diplomacy, states are expected to be respectful of the sovereignty and internal affairs of others. This responsibility is even more so in case of fellow democracies. It could otherwise end up setting unhealthy precedents. India's legal processes are based on an independent judiciary, which is committed to objective and timely outcomes. Casting aspersions on that is unwarranted. That's essentially what the MEA had to say in its statement. With that, it's time to move on to something lighter. Check what's trending on social media. The Hurun Rich List 2024 has been creating quite a buzz online, and as per the list, India has added more billionaires to the list than China. My colleague Drashika joins us to share more details about the report. Drashika?
Hi Hi Pallavi. Yes, so Mumbai is now Asia's billionaire capital as India adds more new billionaires than China according to Hurun Global Rich List. India added 94 new billionaires in 2023 whereas China added 55 billionaires. India now ranks third globally with 271 billionaires. The most number of these billionaires were from pharmaceutical, automobile and auto components and chemical industry. According to the data, the collective wealth of Indian billionaires amount to $1 trillion or 7% of total wealth, emphasizing the nation's substantial economic influence. Tesla CEO Elon Musk reclaimed the title of richest person, followed by Jeff Bezos and Bernard Arnault. Talking about India, Mukesh Ambani is in the 10th position and Gautam Adani is in the 15th position. Now, despite a decline in China's number, the country still retained its position as world leader with 814 billionaires, followed by USA and India. Other nations with maximum number of billionaires are UK, Germany, Switzerland, Russia, Italy, France and Brazil.
Thank you so much for that, Drashika. That's all we had on this edition of The Reporter, but stay tuned to NDTV Profit for more news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the category.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for the chat today, we try and talk about economic cycles versus earnings cycles and where do the two have a confluence or divergence, if you will, because our guest can give us some really strong perspective on that. How to bet on capex beneficiaries, especially if the belief is that we might be in the first half or the beginning of the capex cycle. And of course, can capital good companies continue to trade at FMCG valuations? At least some of them are. Can that continue in a potential long-term capex cycle? To talk about all of this and more, our guest today is Kenneth Andrade, CIO of Old Bridge Mutual Fund. Kenneth, such a pleasure having you. Thank you for taking the time out.
Thank you, Neeraj. Thanks for inviting me on the show.
Now, the pleasure is entirely ours, as you know. let's start off with this. I would love to understand from you the perspective of this, this whole conundrum that people have about whether earnings can match up to the kind of valuations given the economic cycle that we have, both globally and locally. What's your sense about this tug of or the push between the economic cycle versus the earnings cycle?
Well, as we've always seen in multiple cases, the earnings cycle is usually back-ended, and stocks actually represent, or price earning multiples usually represent, the opportunity that is there in that exact space. And that's essentially what's playing out at this point in time. So you'll have to map that entire value chain from the developer, and when I say this on the capex or the infrastructure cycle that we're talking about, from the developer right to the raw material provider, which is the commodity players, and see essentially where the opportunity lies and which part of that value chain can be extremely valuable to own over a long-term perspective. So every investor has got its favorite allocation, right? Now, there is an investor who likes capex businesses or developers, but then the balance sheet size that consistently continues to expand. These are companies or these are businesses which attract a lot of bondholders. So obviously, their return on capital employed is very close to the cost of capital, or it's an arbitrage between return on capital employed and cost of capital. So that's the developers. Then there is the capex good manufacturers, and then the commodity manufacturers. And I think that entire cycle is going to play out as we go through the course of the next couple of years, or next, I would say, all the way to 2030. And this is not just in India, but it happens across the world. And you can see the Western world also trying to put serious capex into play. And that capex, in inverted commas, is largely linked to power capex or energy capex that is taking place. So I think that's where we are. That's a position that we are at this point in time. And every part of this entire value chain is going to benefit quite substantially.
So, Kenneth, would it be fair to assume that this could be a multi-year capex cycle? We might not be at the very beginning, but we is definitely far away from this capex cycle ending.
Some of these numbers are a little hard to believe, but let me give you a small perspective from 2001 to 2017, and that was probably a cycle that we've seen, or probably I have seen it in my career, right? And I talk about just one cycle out there, which is the energy capital, which is power and the kind of power capacities that we put at work out there. Between 2001 to 2015, or maybe 2016, India invested one time its GDP of year 2001. So the day we started our capex, it was one time GDP over the next 15 years that we invested in our power capacities. Now think about it this way: for the next 15 years, if we have to replicate that cycle, the size of opportunity is significant. And how do you capture that, and where do you capture it? And that's what everyone's and that's what some of the valuations of stocks are foretelling. Okay, so we've gone beyond the value phase or valuation zone to actually mapping some of these companies on the opportunity or the total addressable market that is there. And that makes it very difficult in an environment like this for investors like us to try and pick the right businesses at the right valuation. Okay, so that's where we are at the cycle. We are just about probably starting, and there's one large industry that always leads it. It's not just in India, but anywhere in the world. It's basically the energy cycle. And I'll give you a small structural size of how big this opportunity could be.
Okay, so can I just to clarify, just to get this clarification, you are saying that the way it happened between 2001 and 16, if the same thing gets replicated from 2024 or 2023 for the next 15 years, then the size of the opportunity is very large, and as a result of which, you're not getting businesses at the right valuation. Some of the valuations have run up.
That's right. That's right.
Okay, but if the cycle is so long, Kenneth, would you go out and buy some of these businesses even at higher valuations? Because the opportunity size, I mean, say for execution risks, the runway is very long.
Yes, it depends upon what you want to choose and what you want to participate with. So obviously we are part of the cycle. We like the way the environment's playing out, and I wouldn't say we're very loaded onto some of these businesses, but yes, we've got a fair representation of some of these companies in our portfolio.
Just one quick follow-up question since we dabbled upon energy. It's again a very wide bucket, the traditional energy, new energy, power financiers, ancillaries. It's a wide bucket. I'm just trying to get some sense for our viewers as to what within this whole gamut, maybe I missed something also, but what within this whole gamut do you like more than the others?
I think the contractors, the capital goods companies, and obviously the commodities. And commodities is my favorite for now.
Sorry, did I hear you say commodities is your favorite for now?
Yeah.
Okay, and by commodities you mean fossil fuels, come other aspects which are going into the energy sector?
May not be fuel inputs, but everything else that goes into building out the capex, that's probably where we are.
Okay.
So everything in the metal cycle seems to be fairly large and quite reasonably priced, I would say.
Got it. Just one follow-up. So say for some special metals which might be going and which might be hard to get, the base metals and both ferrous, non-ferrous, would there be an overhang of a lack of clarity around China demand, which might be stronger than the longer term demand out scenario for these companies on the capex side?
So it's a little complicated to really bring in the Chinese environment and why they supply deflation into the economy. Now, this is a complicated statement by itself, but if you notice what's happening globally, right, there is reasonable amount of inflation which is there in the West, and the same holds true for even India or other parts of the world. Now, the only country that's providing cheaper products into the marketplace right now is companies from the Chinese economy. Right. Now, when you link that, they are providing cheaper products into the global environment. If you link that to the Chinese stock market, okay, so lower prices is lower profits for the Chinese, which leads to lower market capitalizations, and that's what the entire Chinese economy is stuck with. So our sense is that this may not be. We may not continue this scenario in perpetuity, and there may be a cycle somewhere between maybe a year, 2 years, where this actually reverses. So in our limited understanding of capital cycles, the deflationary impact that or the lower prices that the Chinese have been supplying the world with, okay, may not last into maybe another 1 year, maybe maximum 2 years, and that will bring back pricing into virtually every product that is there on the ground, and it could be inflationary, but it's very good for corporate profits, and I think that's what our take, and that's why we like some part of the commodity basket extremely well.
Got it. And can I do a follow-up before we take that break? And therefore, how does that augur for the end user segments, Kenneth? For now, or at least the better part of 2023, some of these companies have benefited or shown earnings growth, not because of volume growth necessarily, but for margin expansion that has happened, presumably because of low costs as well. Does that change?
Of course, it will change. So, Neeraj, if you essentially look at the way the environment keeps moving, margins keep moving from one part of the value chain to the other part of the value chain, right? So, when you had a commodity boom in 2020 and 21, the converters suffered. Okay, and then you had the users or the converters who did well in the last year or two because the commodity prices came off. Okay, so margins will be always transitionary, but over the cycle, over a longer term cycle, both benefit, and that's why that's why you'll have an economic expansion.
Okay. Kenneth, the other argument, and I'm just rounding off, or maybe we'll talk about the other aspect on the capex side, on the other side of the break as well. But just one quick follow-up on this, and which is, you've constantly told me, right, about the deleveraged corporate balance sheet and how that augurs well for India Inc.'s capability to undertake capex. Hitherto, save for select sectors, and please correct me if I'm wrong, but we haven't seen the advent of private capex in a meaningful way. Does that change in FY25 or calendar year 24?
I think 2025 you'll definitely see the advent of private capex.
Why that belief, Kenneth?
All of us, I mean, if you get on the ground, everyone's running out of capacity. And if you have the government continuing to spend and incentivize capex, you will see that come back very, very strongly. Private capex.
Okay. Well, hold that thought, Kenneth, because I know we're making this a bit of a capex conversation, but it's just lovely to get into details with you. So maybe we'll extend that a little bit before we talk about other things. But stay tuned. Stay here, Kenneth, and viewers, stay tuned. We have to take a quick commercial break. We'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you Back with Talking Point right here on NDTV Profit. We are talking about capex. Couldn't quite ignore what's happening to some of the high-flying movers in the session today, one of them being ABB. UBS has come out with a note there talking about why the valuations could be premium for ABB going ahead. Anushi Johnson for a very quick perspective there. Anushi.
Right, Neeraj. So if you look at ABB India, it is trading at its life high today, seeing about more than 6 to 7% of gains. This is on the back of the UBS note, which has implied a price target of about 7,550. So which showcases about more than 20% of an upside over here. Again, a couple of reasons that they have cited. ABB first is the motion and the electrification. The largest segments are expected to drive growth going forward. Also, the focus now remains on its low-medium voltage portfolio, which is also expected to remain in the key focus area where there's a lot of scope for ramp up. Again, now if you have to look at the export products portfolio as well, now this will be driven by a more premium mix, which will support the margins going forward. And with now the improvement in margins, that supports the higher premium valuations as well. So these are the couple of reasons why ABB